Good morning. It is April 26th. We're going to be streaming options, stocks, futures. Let me get set up here. We're looking at technical analysis, looking at SPY, yes, watching Bed Bath Beyond, GME. Okay, just sharing on Twitter. I'm sharing on Discord now with you guys. I figured I might as well start the stream once I kind of get started in the morning, and I'll just get a little pre-run going while I'm getting set up. You guys can let me know what plays you're looking at today, and we'll draw some lines, look at some pre-market news, get our ducks in a row. You guys are saying on Discord, on Reddit. There's an interesting comment from Murdoch. Murdoch, you should jump on jump in the YouTube stream channel on Discord. Come chat. He says company just needs a good valuation decision from the judge for restructuring. Honestly, it will be interesting to see how they rationalize it. 1.8 billion in debt, 1.6 billion in tax credits, 6 billion in annual sales. Yeah, I was just hearing about the tax credits, which is a huge advantage for a buyer. It's possible that the whole purchase of Twitter by Elon was really just a tax write-off, and the whole reasoning for it even. Buying companies with tons of debt has a lot of advantages if you have a tax obligation. That's a common thing to do, buy companies with loads of debt, and then you have that debt as a write-off. So, but yeah, so listen to that: 1.8 billion in debt, 1.6 billion tax credits. So, what, 200 million basically negative there, but then 6 billion in annual sales. Hard not to say this company won't be worth at least 3 to 6 billion. Typically, businesses can at least be valued at 1-to-1 their revenue. That's true. The old debt gets new shares worth 1.8 billion, and the rest of the new shares would go to current shareholders, 1.2 to 4.2 billion worth. So that puts our market cap like 10x where it is right now. More than 10x. It's much more than 50 to 100 million market cap it is sitting at right now. Yes, that's about 92 million. Since the debt will be converted to new shares, then they have a much better chance to have positive cash flow. After the DIP financing is satisfied, of course, 300 million or whatever. DIP financing has the highest priority. Not sure what DIP financing is. Maybe you could explain that. I'm not sure. But yeah, I like this. I'm gonna put this on the screenshot, this Murdoch. Throw it in Happy DD, you guys can read it so it doesn't get lost down the infinite chain of general. Earl, you're saying earnings are today. Have they announced it yet? They're just gonna come out with it. Oh, there's a little green candle there. I bought here. Maybe gonna buy more today. Yeah, I might pick up some more actually. It's stuff I'll probably sell out today though. That's the thing I have to consider, the day trade. So what I bought yesterday is nice because I can sell that today. That was 6,400 shares, so I'll just have to remember that number. And then whatever I buy today, I'll have to hold till tomorrow. However, I'm not sure if I want to hold stuff overnight still. I do still have some day trades on here, so we'll day trade it. Jeez, nat gas is down by 10. Get logged in here. Good morning, Isaac. Hey Damien, hey Rally, morning. Not necessarily the rest of the week. I think we'll still see volatility both ways. Hey Benjamin, Frankie. I just put an order to pick some up. I don't know why it's not filling actually. Five, 3, 4. There it is. All right, I picked up some more shares. These I'll probably just day trade, honestly. Keep that in mind. Okay. So, picked up 6,500 last night. Oh, I didn't get fully filled. What the heck? Trying to pick up another 10,000 right now. That's the thing with such a cheap stock. Like, even getting in and out for like a good price is tough because it's so many shares. It like takes time to fill. Stoked that closed out of that FRC bullish play. That thing really got tanked on. Might do some cash secured puts on it though. Oh yeah, natty gas. Jeez, man. It's still over $2. So if it breaks here, I mean, we've got some room to the upside. 1654. That gap fill could come today too. Maybe it might need another day to digest, but we are kind of running out of time. We have until Wednesday, right? So Tuesday, end of day. But reading Murdoch's write up, and if you're willing to hold for a longer term, and you think, I mean, it's still risky, of course. Shareholders will get any value if it is bought or if there is a new ticker or new company. But if there is, valuation should be at least 10x where we are right now. So yeah, it's hard not to want to just buy this and hold it. Yeah, no, it's usually good to wait till market open. I guess I'm just basing this on just historical moves with BBBY. Like, sometimes it pumps right out of open. I'm not trying to catch volatility in the morning. I'm just, yeah. But yeah, it could sell off at open. That's true. Morning meme stalker. Oh, you bought them after hours? Yeah, that's the thing that's nice about futures. You could have rallied this. This was up this was up 0.5%. Remember I was saying it's gonna rally up in today yesterday if you were on here? It didn't do it till after hours, but yeah, it came up 0.4%, which is a huge move on the SPY. It did it just before even after hours closed. So, but yeah, that would have been the time to take profits because this is very weak still. We'll get some levels drawn in here. I mean, it's basically come down to the support, so could see it bounce back to 410. Let's see, Wednesday. Yeah, maybe the next 2 days we'll see part of that bounce. John Parker. I liked your name, John Parker, better. It seemed more credible. Meme Stalker, I just lost a lot of respect for you. It seems smarter. It's John Parker. It's like almost even like Spider-Man's name, Peter Parker. It's 3 o'clock in French country. It's 3 o'clock right now. The probability of a downturn in the next 12 months stands at 65%, according to the latest Bloomberg monthly survey. Advisors have lined up potential purchasers. First Republic. Potential purchasers? Are they going BK? What does that mean? Flash? I just updated Weeble, now there's Flash. What is that? Flash news? Flash. Price target cut to $11 by Credit Suisse from $130. You were way off. Yeah, I think I'm gonna do some cash good puts on this old girl, huh? Is it gonna keep going down though? Might be too early. Maybe look for some signs of a bottom. That IV's gotta be nice though. Oh yeah. Hopefully Bubba touches 20 cents today. Bubba. Yeah. Yeah, yesterday's rally was right to that pre-market high, so just look out for some of these lines I have here, really. 18 cents might be a resistance, probably the first major one. But I mean, that's a pretty good move up from here. You know, that's almost 20%. I'm down. Oh, the rest of it filled. So picked up another 10,000 this morning. I have to remember when I exit. I don't want to exit with. I want to exit just with a 64. No, I can exit with all of it. Whatever. I'll do a day trade. Morning, Mo Lava. Good to hear, Benjamin. Okay. I just have lined up potential purchase of First Republic stock. Big tech stocks have driven 86% of the S&P 500's performance so far this year. Yeah, it's been like 6 stocks has basically propped up the market in the last 4 months. This whole rally. Crude oil's dropping. Ah, yes. Well, I had a big bounce though 2 days ago. I was surprised to see GME below 1940. It made it. Congratulations, GameStop. You're filling gaps. 1835, and then we're primed for another little test at the bottom. I see a bounce on this thing. I'll go heavy into some puts. I think we'll see a bounce in it with the market. Maybe just playing Tesla would be smarter though. This is way more liquid. Option pricing actually moves. Spreads are tighter. Seems due for a bounce also. Need calls on Tesla at open. Short dated, like next week. At the money. Got a gap up there too. That's not based on much. I'm not gonna do that probably. Large flow, 22,000 US 10-year June 11, 119.50 calls. Bought at 12, seen in June 10-year Treasury options targets. That was very confusing. A 10-year yield drop over 50 basis points in a bet that expires May 26th. Premium paid around was $4 million. So it's an options trade. For the 10-year yield to drop over 50 basis points. That might hit. They don't even say how they're trading it though. Where do you trade treasury options? Like just in the futures? Russian foreign minister after Zelensky call. C. We see Beijing is ready to facilitate negotiations. What? ECB's de Windows labor market in euro area is quite impressive. Oh. JP Morgan was aware by 2006 that Jeffrey Epstein has been accused of paying cash to have underage girls and young women brought to his home 7 years before the bank dropped him as a client. Legal filings in New York have alleged. I don't know if there's hope for BBY. Still don't know. I mean, it's up for bid, basically. The auction is open for business. So, who wants to buy it, and what are they going to do with shareholders? Fortunately, we have no negotiating power. We're just along for the ride. So, hopefully, some favorable terms are negotiated for shareholders. That is if it does get delisted and all that. Potentially, it could just rally on news of a takeover and maybe not go bankrupt and not get a new ticker and all that. Get data on Tesla always. Yeah. I don't know if I believe you now because your name's a meme stock, or if someone like John Parker said that, I'd be like, dude, that sounds pretty smart. ECB's Dotu. We're beginning to see first signs of impact of rate hikes on the economy. German government sees GDP growth at 0.4% in 2023. Prior was 0.2. 1.6 in 2024. Prior was 1.8. German government sees inflation 5.9 in 2023. Prior was 6.0. 2.7% in 2024. Prior was 2.8. So they're seeing less inflation and more growth in their GDP in the next 2 years. One area I'm comfortable is I'm short the US dollar. Currency trends tend to run for 2 or 3 years. We have had a long run higher. Oh, durable goods. Durable goods came out at 8:30, so that was right here, this little rally. Seen at plus 0.5%. The consensus. Wait. U.S. Commerce March durable goods orders plus 3.2%. Consensus was plus 0.5%. Wow, that was way out of estimations. Right? Wholesale inventories were 0.1%, which is what was expected. Breaking: Ken Griffin, the hedge fund CEO who seemed poised to back DeSantis 6 months ago, has been privately telling people he's deeply troubled by DeSantis currently. Everyone go vote to DeSantis, I guess. Advanced goods trade balance negative 84 billion versus 90 billion expected. Wholesale inventories, 0.1% versus 0.1% was actually expected. Advanced goods trade balance, negative 84.6 billion. Already read that one. Bitcoin's back to 30K. Oh, with the banks coming down potentially, huh? Yeah, that's quite the nice little inverse play. Bounced off that 50 moving average like butter. Or is that not butter? That's more like a trampoline. Butter would be like this. Bloop. Yeah, I'm thinking that's from the banks, the bank earnings. Very interesting because the market sold off yesterday and this thing has been ripping. So there you go. There you have your inverse protection, your hedge on the banks. It is real. U.S. new home sales surge 9.6% in March as home buyers turn to builders. What the heck? Stellantis is looking to eliminate about 3,500 hourly jobs in the U.S. ahead of the expiration this fall of a contract with United Auto Workers. Stellantis is like what? Dodge, Fiat, Chrysler, all those, I believe. I think either TWND or Cerberus Capital buy it. Oh, really? Bye bye, baby. You guys watch the last Succession where they're carving out ATN? Carve out? Kidding me? Welcome back to your stream. Thanks, Al. Appreciate you having me. And the Al zoops in with a zinger. Zing! Leap puts on Bud. You're not bullish on alcohol in a recession? Oh, just because of that news, that's right. Leap puts, though. You think this is the beginning of the end for them? I don't maybe share that sentiment. Maybe short term, but yeah. Hype. What are you guys plays today? What are you looking at? What are you doing? Put it in the chat. Let me hear it. Back in BBBY at 15. Okay. Huge sales revenue drop. I could see that. I don't know. I don't think it's gonna last for. I mean, yeah, maybe you'll see the next earnings. I don't know. I guess the leap part of it is. Maybe that's just for safety. 0 date 413 falls on SPY. Yeah, I'm thinking maybe a little SPY bounce could be merited. We've even got this little double bottom happening. Pre-market through here. Waiting. Get documents, news articles. Bidders. It's good, sitting on your hands. Can't lose money if you don't put it out there. Hey, Tainted. Yeah, a little day trade. Wait, you couldn't hear me yesterday, Tainted? Was I muted? joke. Hey, MCOM, what the heck, man? 7.5 million market cap, dude. I mean, it's not a big company, but hi. Hey, Bourbon. Hobby is wild. About Mullen? Happy with the jokes. Happy with the jokes. Mullen could be double bottoming here. Had that news on their tech, like being very efficient or whatever. It's had this divergence on the RSI, but just during the day there's just sellers. I mean, all these candles, just red candles everywhere. Kind of unfortunate. And it seems to move with the market some too. Yesterday it was down 10%. Like everything probably. Like everything came down with the market yesterday. It's just a BBBY, we call their shares a sell before you see. You got confronted by someone saying that? Shares being lent out, recalling shares. Yeah, what institutions are still in there though? Members only hear Yaz on the stream. How dope would that be? Join August, 160 million shares at 30 at 3.5 billion. Is that all it was when it was at 30? 3.5 billion? Oh, that was higher than that. Yeah, that's the only issue I see with the bankruptcy squeeze is just how much they've diluted. We're just speculating. You're just speculating that there's 800 million shares right now, right? Nothing's updated on the brokerages past 400 million. Or can you confirm that with filings? Waiting for the squeeze, my friend. McDonald's CEO says we are seeing a slight decrease in units per transaction. So things like, did someone add fries to their order? How many items are they buying per order? We're seeing that go down in most of our markets around the world slightly. What? Someone add fries to their order? How many items are there? Ah, big hugs. You're in the YouTube stream on Discord. Hey, man. Is probably gonna bounce today? Maybe. Close to trading day. Pets day. Wait, what? Today is National Kids and Pets Day. Kids don't even get their own day, they have to share it with a freaking pet. Remind me of RC tweet that children and animals will be protected at all costs. There's a pud come in today. So it's still possible to go. I think in the latest court cases, yeah, they basically, we've confirmed they've 4x'd their float, or thereabouts. Let's get nuts. do they take your ability to buy more? You get some levels in here. Get that 405.81 a little marker. I do it on yesterday's low. Holds more weight during trading hours. If we do get that low, it probably would just be a wick. If not, and we start to consolidate under that level, whoa, we could have a big down day. Got below. Yeah, that 410 level is going to be big resistance if we do get up that high today. I'm going to go long maybe on the futures. Thought about it yesterday. Turns out that would have been a good one right at market close. They don't allow buying anymore? What the heck? Just because it's going to get potentially delisted on the 3rd? Stop people from buying puts? Weird. $0.18? Yeah, 18 cents, and then that high of yesterday, I guess, 21.94, around there. And like 23.75. Oh, I have so many levels right here. For about 10 minutes to open. You guys like me starting the stream earlier? Sometimes I can't be as chatty if I'm just kind of like setting up, but hype. Thanks for your likes, guys. Pre-market. Got 11 likes pre-market. Well done. I love early stream. Thanks for your likes, guys. Appreciate it. This stream equals lovely jazz equal voice all day. I'll try and keep it mellow pre-market if I start too early. It's hard for me though if I'm streaming not to like just be chatting and reading Twitter and but yeah. Might not always be so chatty. I'm not always available this early either. When I'm on my computer though, might as well start it earlier. Do store stuff to close, or have they won then? So my understanding is, well, delisted. Basically, if they don't close, I could be wrong on this, but this is what I've heard. It basically could get just stuck on their books, and they don't have to close though. But it might not look good on their balance sheet. But that was the whole advantage also on the other side of it. That was the whole advantage to seller boxing was it basically just ends up looking that's where you're seeing I think the not unrealized gains. What do they call it? That huge amount that Citadel has even. Well, can't remember. Hey, Julian. Yeah, the advantage for that is that they don't pay tax on it because it's still an open position. So it's like unrealized gains, but they can use those for margin and collateral and like a huge profitable position that they never realize. I saw your Let's Get Nuts in media. I liked that. Is that a new Batman coming out with that guy? All right, 22 minutes. Putting levels down here, I suppose. If we break that level though, yeah, it could be a bigger day than yesterday. 404. Retest down here, we start to see any kind of support. I'm probably going to go long on the futures. Oh, looks like it's gonna test it right now. I'm in a market open. I think, let's see, we had the day this morning. Durable goods, retail. Yeah, that's all the data really today. Let me check on Discord. We had mortgage data. We have retail inventory. We had that. So crude oil, got commodity data at 10:30. It looks like bond auction at 1, or 5-year note auction. I think it's a bond auction. Yeah, so not much more data today. Pretty much it. U.S. government currently unwilling to intervene on First Republic. Gap is starting a new round of corporate job cuts that looks to reduce management layers and speed up decision making. BBBY breaking this little pre-market high. We'll see. Likes to inverse beta at times. Definitely does. That's from Flash movie? Oh, I haven't seen that. I thought that was a new Batman or something. When closing, if OTC really pulls screw them over. Yeah, but that's what I'm saying. It kind of gets stuck on their books as a close. I can't remember the wording on it, but yeah, they can still use that, I believe, as margin or collateral for, you know, more margin. Well done, banker. You didn't lose. Surviving in the market is the first step to winning. Just gotta survive. Bar rate's going up on GME. John Parky put it back. Oh, you're funny. You can only change it so many times. Be careful. Ask Ace. BY's coming up a little bit. Ask Al. Oh, yeah. Interesting. Yeah, GME's bar rate's now 20%. We'll see if that sticks. That gas is getting flushed. There's 1592 on Bed Bath. I picked up more shares this morning, around 15 cents. Probably gonna exit all of them today, but we'll see. If it rips and then shows us higher support, you know, maybe I'll just exit some. I feel bad. Yesterday I was saying there's not really any more news. I guess delisting news could be bad news. And then we drop more. But I was also saying it's risky to hold overnight because you could get delisted any moment. But that might not be true. I read some guys saying that that's not possible. They have to warn you. I feel like I've definitely seen stocks just go OTC without any warning, but maybe I just wasn't paying attention. But to me, it's a good thing that they told us when it's going to be delisted. Now we have an actual hard date. It's May 3rd. So if you're still in it, May the 4th be with you by Thursday. But yeah, now we have a timeline. And if shorts are going to close or whatever, they have a timeline too. There's going to be a pre-OTC rip. We know when it's going to happen. Holding over this weekend? Whew. Maybe. It could be tainted. There's a lot of different reasons why there could be these big rips coming into bankruptcy or Chapter 11 or delisting. Lots of speculation on other various reasons. I'm not sure which one is true, but I just know that I've looked at charts and we've seen a lot of rips around reverse splits, which I'm expecting that not to happen anymore, especially if it goes OTC. And we've seen rips around bankruptcies too, so cause of it, not certain, but what we do have are charts, and those charts they don't lie. What worse is gonna happen now? Oh, the delisting. You cannot use an unlisted ticker because it cannot be traded to access those gains. I mean, it's still listed, it's just on a different market. On OTC, it's not on NASDAQ. So it's not as liquid, it's not as heavily traded, so it's maybe more difficult to get in and out, but called unlisted ticker. I mean, it's still tradable, at least if they're going to OTC. Yeah, and every 14 days. You sell, I mean, May 3rd, so it's going to be on OTC the morning of May 3rd. So if you're trying to give out before, you want to sell after hours on Tuesday at the latest. Everyone was selling against 1 million a share. We all knew that. Well, for everyone it hurts. Yeah, so yeah, the only thing, the downer for me is just how much the float's increased. And Hertz and Revlon, I don't think they had this kind of dilution before. So it does, we'll see, but at this point it does seem almost malicious how much they diluted it before going bankrupt. And so there probably will be lawsuits against the board, and we probably won't see hardly any money, if at all, if any at all. I was trying to get involved with the birds class action against birds, and I think the minimum threshold was 50,000 if you have 50,000 losses, and I had like 35. It's like so yeah, it sucks. Market's open. Ding ding ding. Green candle on SPY. 18 million volume immediately out of the gate on BBBY. We've got Datadog with a gap up, Fisker with a gap up, 9%. Good news about yesterday before end of week? What do you mean news about yesterday? You would buy more? Just to hold, not to sell? Yeah, it's just if shareholders are going to get screwed with this whole process or not. But valuation right now is definitely undervalued. Fisker, Mara's up. Easy go. I didn't close my MU puts. Suck again. Time to close some calls. BBY not flushing out of the gate. That ain't bad. Gift you $100. Thanks, Julian. I hope the best for you. If you're gonna hold until that happens, it might happen. But it might be a year. Yeah, I don't know. I don't think it's over. I don't think it's over. So BBY is down 20% from yesterday's close at 15 cents or so. Pre-market low or after hours low was 11.70 on that news of delisting warning. We have made a 35% move from that low. So it's still a lot of volatility. Just to curse myself. Morning, Tasty. Ace is still for president. We can always count on Ace, at least. He's Mr. Steady. What's the Pidoof on Ions coming out? Oh, it happened. Nothing? Accelerated approval? FDA approves Biogen's ALS drug. But no response from it. Kind of a bummer. Number 0. I mean, how are you defining over? I guess I would have to start you there. Datadog Rippin also had to open. They have things. I don't know the news on that. Fisker also. The multi-day rally on Fisker. So on our longer time frame, SPY is definitely in that bearish trend now. We've got red under the 9, bearish MACD. However, with the yesterday's move, I think the next couple of days we might see a pretty big bounce, or a bounce from it at least. Not expecting it to just continue to sell off, but basically shorting the bounces makes sense. But just have to wait for the big bounce. I'm gonna try and catch the long for the bounce. Hoping for an easy entry down here to retest. BBY pretty much flat at a open, up a little bit, down a little bit. Nothing crazy. MU with a 3% gap up. These are really not giving it up that easy. Probably should get out of them. Just don't have the time to wait. Dancing around. Thank you guys for your likes. I appreciate it. We've got 19 of you. Beautiful souls that hit the thumbs up. Well done. If you couldn't hear me yesterday, you need to get your speakers checked. Some of you are saying that you couldn't hear me all day. Morning, Brandon. Just hanging out here. Whoa, gap up on coin got sold off. That relative strength yesterday with that big sell off in the market. You hear me most of the day, Rally? I'm just kidding. I came on in the I came on near the close. I thought it'd be on much earlier, but I couldn't. So it wasn't too close to close. Check your chat. Sell next move up. Probably smart. BBY still has recruiting on LinkedIn? Yeah, the Google image for my local BBY says they're hiring. Volume increasing? You read 30 million for the first 5 minutes. Yesterday was 29. It's actually pretty much the same as yesterday so far. Go to OTC. Could still look for a rally back to $1. Yeah. Alright. Bed Bath coming down. 1457. Have a line there from something. Oh, that was the low from that news of chapter 11, 1460. See if that level holds. Doesn't look like it's going to. Got 14. This is why you don't buy in pre-market, but you never know. Got 1269. Wow, big flush there on BBY. So broke that 1460 at 14 cents. They halted FRC? No, it's not halted. It's trading. Yeah, I think I think I agree, TJ. It does seem malicious. All the dilution before filing for chapter 11. Unless there was something going on, I suppose, but yeah. It was halted, really. Halted down, like volatility halt? Oh, it's halted now. Yeah, you're right. Halted going up. Doesn't look very volatile. Why is it getting halted? Not volatile. 22 million? That's a lot of volume. I wanted to do some cash code puts on this thing today. Why is it halted? It's not even really moving. That doesn't make any sense. Guess I'll wait for those cash secured puts. That one actually might be the fallout. Oh wow, BBY just wicked down there. Back up to above that level, 1460 level. Back in the races. SPY moving down here. I might just cut my losses, or not cut my losses, but try and get out break even on MU. I've got time, I think it'll work out, but things are way more resilient than I thought. Alright, BY is moving back up a little bit now. Intraday range is already big. 13%. Crazy penny stocks. Such a different game. Let me know when FRC resumes. Bar had a gap up, probably from Bitcoin. Same with Riot. Easy goes up a little bit. I want to sell my IONS. I don't. News came out yesterday and there's not really a move from it. Right? Wasn't that the PDUFA day? Yeah, it didn't cause anything. Well, I guess that's nice it didn't sell off from it. Yeah, close out of IONS. MCOM has been oh so bad to me. Close that stupid stock. Probably gonna have a bounce, but I don't know how much. It's not getting its reverse split move. Might happen later. Sometimes we'll see those reverse split squeezes like a month after they even split. BY back under 1460, down 27%. I would say it's working its way down. A little inverted head and shoulders here on the 5-minute. That's from yesterday though. Moving a tad. Yeah, with the market moving up, should start to see some GME also. Yeah, 2.5% on AMC. This chart's so ugly and weird to trade. For a bounce to short. RC is trading again. And down. It's not that volatile. I don't know why they halted it. Thanks, Taryn. Doesn't make sense to me. Pause that for a little bit. Oh, BY's getting flushy now. 14 cents. 1382 it just hit. That pre-market level of 14 cents. It's below that now. If this thing bounces, we might come all the way back down and retest these pre-market lows. %5 movement of 5. Is it moving that much though? Not. BY is moving more than that. This hasn't moved much at all. Bed Bath is dropping here, 33% down. Supply with a green candle up to VWAP. That's stuck again. Not rational anymore? You need advice? What? Yeah, that's why you get multiple brokerages. If one stops working, you stop looking at it. Find another one to break. Alright. Alright, it's kind of wicking here at Bed Bath. Not looking good out of the gate though. RSI in the 5 minutes at 12. Hourly it's at 27. Daily's at 28. Going under the Yale. Did before the rip? Yeah, maybe. The timeline, I mean, the clock's ticking. It's Wednesday. Thursday, Friday, Monday, Tuesday. You were short. When to close before OTC. You want to get as low as it can before you do. Loss exit plan for the day trade? I guess I don't really have one at this point, which probably isn't smart. It's because I mean, the value down here is pretty good value. 63 million market cap. So if we don't get a rip, I could just hold this position. You know, this might be a position I hold. Not saying that I was necessarily planning to, but if I do just get underwater on it, it's something I considered. I danced around VWAP there. My lucidity. Yeah, I don't know why FRC was getting halted. Doesn't seem like it's moved enough. Merit a halt. Chipotle record high after Q1B. Chipotle had earnings. Why is this on my watch list? Wow. Wow. That gapping going Chipotle. Almost at 2,000 a share. Jeez. First Republic Bank price per share. IPO is 25.50. Peak was 221.91. Dropped to 97%. It's November 2021. It's almost as good as BBBY. Buy's moving up here a little bit. Might not get a double bottom. If I miss the bottom, then I'll wait for a nice resistance. Maybe a 408 or higher. Short it. And be patient. Bed Bath is actually still selling off. Still coming down. I've gone short. Open. You're going the wrong way. There more news? Downgrade, we saw that. That means alarmed by delisting notice? Get a grip. You guys want some hopium? Here it is. Look at the situation with a clear mind. Consider and reconsider your thesis. Make a rational, evidence-based decision. Potentially ask yourself some of these questions. Why panic about delisting now? The amount of overaction and even panic over the news about delisting has surprised me. Why? Because it was already known delisting would happen the moment BY filed for Chapter 11. As I noted in this DD below, it's a standard procedure. NASDAQ follows with all companies undergoing a Chapter 11 petition. Yes. True. People aren't freaking out because of delisting, they're freaking out because the price plummeted. Leave. When a NASDAQ listed company files for Chapter 11 bankruptcy protection, exchange sends them a delisting notice within a day or two. In this, they are notified that trading will continue as normal of their stock for usually another 6 to 8 days. Following that, the stock moves to trading as an over-the-counter pink sheet stock where it continues to trade henceforth. 5 more, got it. Yep, nailed it. When such a stock is delisted, just trying to think we're going down. I don't know. If such a stock is delisted, it will be removed from most indexes. Large financial institutions such as asset management firms, which have ETFs or mutual funds that track these indexes, thus also remove their holdings of the stock. To do that, they must first recall the shares they have lent out to short sellers in order to comply with tax regulations. This takes place up to and around the delisting date. meaning short sellers are under pressure to find and return the stock they've borrowed. I've not thought about it with ETFs. ETFs having to recall. If there is a lower supply of shares available to purchase for returning to the lenders, it can lead to a short squeeze in the run up to and around the delisting date. That's the thing. The lower supply of shares, they basically gave them 4x the shares to all the shorts. So, and that might have been what that volume was. All that volume the other day, that billion. That might have been naked shorts turning into normal shorts. With all the extra liquidity provided, thanks to dilution. That could have been what that was. Cleaning the books. Washing the crime. And then reshorting it legitimately. Now that there's plenty of shares to go around. Shares for all. I kind of wick down there. Be patient. Bed Bath Beyond hit 13 cents. And now we're getting a green candle. So that was one of the supports from pre-market. No, that's where it basically bounced at pre-market open. Girl, baby, don't hook. GME News is ripping. I don't see any much price action there. Any news on GME either. GME just filling gaps. %, IV. GME's still broken. It's gonna be a great options play presenting itself on that $15 level, I think. Pray to God he doesn't have sells 12. Hey, at least it's bringing you to God. He said, don't bring me into this mess. Datadog still going, 15%. Wow. It's like BBBY is starting to maybe build a bear flag. See if it breaks up a bit. Guys, for your likes, well done. It's 10 o'clock on the hour. Appreciate your thumbs up. If you haven't subscribed, do it. Turn that red to gray. Same way Ace turns all your grays to green. Hit the notification bell. Sometimes I start streams early, late, or not at all. And the bell will notify you. Oh, I didn't put our Discord. If you're not on our Discord, I will link that in the chat and pin it. Free Discord, you're welcome to join. And we have a Twitter at HappyMoneyYT. If GME's still broken, I'm saying. I don't think it is, but if it is, big opportunity. Just with how low the IV is. What's rallying today? Coinbase is up 3.6. Chipotle 13%. April data so far points to greater than expected momentum for manufacturing, services, and housing. On the other hand, employment data shows some cooling signals. The team sees less or sees increasing probability of the boil the frog, i.e. global hard landing in 2024. Credit crunch, flip sliding away, boil the frog, Goldilocks. 15% chance of credit crunch, near-term recession. 30% of slip sliding away, US mild recession, late 23. Boil the frog, 34% chance. Global hard landing 24. Wow, they're stretching that out till 24. Remember in 2022, it's like, oh, I'm until 2023. Dude. Goldilocks soft landing. No one is expected to buy First Republic Bank without substantial federal guarantees. Former U.S. Secretary Summers says odds of a technical default associated with debt limit legislation over the next few months are 2 to 3%. Peter Thiel, Republican megadonor, won't fund candidates in 2024. China-controlled solar panel makers may tighten grip on U.S. market this year. Yeah, Bed Bath kind of bear flagging still. Chinese solar dominance comes amid debate in Congress over panel tariffs. U.S. allowed JP Morgan to process payment for Russian agricultural exports. Wow. U.S. home prices rose in February for the first time in 8 months. McCarthy says confident Republicans have votes on debt bill today. U.S. home prices rose in February, first time in 8 months. I was talking about February. BBBY still bear flagging. SPY's basically flat still out of open. Chipotle almost 15% now. $2,047 a share. BY new low there. Broke out of the bear flag. I just like the pain. That's why I buy pre-market. On awful news. Coming down to the low 1269. The line I have drawn there. It's down 35%. Datadog's still going too. 15.5% on that. This year's up 12. Oh, big flush there. Bed Bath & Beyond, 37%. Woo, getting fun. Is this what they meant when they said buckle up? Yeah, big nice flush there to 12 cents. 12 cents a share for Bed Bath & Beyond. GameStop getting a movie. Yeah, I saw that. Dumb Money. More Tesla entry around 154. Yeah, I could see a little bounce on that one. It'd be an Everest plan from God. This we all pray to him. He gets more powerful. Classic villain gods. Ferguson movies. Yeah, pretty flushy out of the open here. I mean, down 20% since we opened. That's crazy. Like one institutional left. So winning at losing. Spies moved down here a little bit. Is that 140 a month ago? Yeah, I remember. I mean, when you first joined. Pretty ridiculous, as low as 130. Want me to text this on the 1 minute? Could be good. Texas, I like that. Little green candle here down at the pre-market lows. Hey, congratulations, guys! This is all-time lows on BBBY. We're all here together for it. You don't include pre-market, so market cap of $60 million. 60 million. Spies getting down these levels. Gonna be looking for a little entry on the long side. BBY rain dance, yeah, a little hype. Ah, he came with a Bed Bath & Beyond market cap. Here we go. Sorry, Bed Bath & Beyond killed FRC's chart. It's down 99.9% from June 2012 to today. We crushed it. What was the other chart? FRC, please. IPO'd in 1992 for 288 million. This chart should get people hyped. Like, I want to buy this thing. What's this you have on here? 15.47 million? That's not the market cap right now. Hoyo wasa, hoyo wasa. Hey yo wasa. What's this number down here? 17.4 billion. Why is he saying the market cap is 15 million? Is he not including these the new free float? Because that's what that would be, right? Yeah, I think so. Weird though. So 15 million market cap today would be with if it only had 114 million shares still, or thereabouts. Whereas today our market cap's 60 million because we have 465 million shares now. So he just has old data on the share size or the float. See that RSI divergence it's setting up here? Big move up back to 5 billion. That's some eyeballs. Richest Americans account for more than half of household equity. Oh, SPY is at its level. Might start scaling in a little bit here. And just have some stop losses if it drops below. Take little losses. I'd like to see a sign of reversal first, but I'm going to try and actually time it when I'm day trading these futures. Oh. I gotta look at the futures chart, see what's going on there. I'm gonna pick up another one. This is like right at the level. I think we probably bounce here, but yeah, if it flushes here, that's we've got down ways to go. It did like 405.76 on SPY. It is below the pre-market low. See if it just wicks here, or if we actually start flushing. Oh, that's not looking good. Gee, what the frick? Oh yeah, SPY's flushing there. Crazy. Broke the low. I'm still waiting to see if this ends up just being a wick, actually. Very easily just be a little bear trap. BBBY is bouncing on that, whatever level that was. Pre-market level. Little inverse beta also. Oh, you want to see the L2? Yeah. Wow, market that's actually flushing here. So, looks like it's gonna be new lows. Not getting a bounce on that level. Look at that. Probably flip these shorts or flip this long to a short. BY is bouncing there. Yeah, ugly week. Keeps dropping into Friday, especially. That's. Oh yeah, this thing's flushy. Tempted to open a short, but I would like to maybe see a little bounce first. I don't know. I would have preferred a range trade instead of a breakout trade. Especially when it's this low. The RSI on the hourly is already 20, it's only 24. Yeah, I'm gonna start getting some shorts. Dang, man. I want it to be a long trade. All right, 403. There was actually a level down here too. The wicks of this day. Yeah, it's not looking good. 404, 34, so might exit there. BY bounced, but not with a lot of strength. UOP's very low on Bed Bath. 13 cents. 13.83. FRC's halted down again. Oh wow. That is, yeah, that is starting to make bigger moves. 24. It's interesting BY didn't halt at all though. What's on Mullen? I don't know. What's going on with it? This is probably just settling down from that bullish news it had. Selling off the market. Tesla's probably coming down. Yeah, wow, Tesla's really flushing. Not getting a bounce on Tesla yet. Market's coming down. Tesla's gonna probably fill this gap before it gets its bounce. Hmm. The gap on the SPY down at 403.78. Yeah, it's just kind of chilling out down here. I think before a pretty big flush on the market. What it's looking like. It broke through that support, and there was no bounce out of there. So the fact that it's consolidating down here is pretty weak. Yeah, BBY getting back to the lows. Yikes, engulfing candle on the 5-minute. This thing might break that pre-market low. Might see 10 cents today. Woo. BK turns global financial crisis. Eyes flushing here. BY consolidating down here. SPY just slowly melting off. Some buying pressure. Off yesterday was pretty steep. So far it's looking like that's continuing. If it does, that gap fill's definitely in play. That fails to hold. Kind of got that, but there's really this head and shoulder just starting to play out now too. Yeah, that was a big level. Big level to break. SPY's down 0.25%. I got 5 contracts. I think I could get a few more, but 5 will do it for me. That's fine. You guys seem to be dying a whimpering death. You bought more beers? Nice. You plan to hold? Through our OTC? I did. You mean consolidating? Not for long, GameStop investors. Got a gap to fill. $17.75. You've got a support to test. That's if the market doesn't crash. Market crashes, that 15 is gonna be a resistance, bouncing off of 10 maybe. There's a little bounce on the SPY. The wick. So I could add to my short if we get a retest up here. Add a couple more contracts. 38,000 shares. Isn't that crazy how many shares you can buy? It's ridiculous. That's actually a lot. 38,000? Is that an average? Oh, bought more. Yeah, so you're averaging? So you're down with the OTC. You know OTC. You know me. You're down with OTC. SPY setting up a little bear flag. Pretty oversold though, so it's sketchy with shorts, but we'll see if we get a bounce here. Not thinking this is a false break to the downside. Still don't know my average. I mean, maybe it's just a psychological level, but that's not really a zone we're in. Calls GME. I guess it makes sense if you hold a lot of shares, but that premium sucks. Happy level 2 on Mullen. Is that a real bounce on SPY? Is that a false break? Yeah, it's a mess. Days out, 2,400 shares. Nice. Yeah, you still, I mean, if there's enough shares and you have enough time, there's still premium. That covers earnings too, so maybe it's a little better. SPY bouncing here. Did I just eat into that bear trap? When do you close out? 50%? That gas is bouncing. Oh no, I'm sorry. Dude, this low view up on BBY is crazy. Those are on backwards. I turn them around. I'll flip them around, bud. Derek, take off your pants. I saw those candles on Mullen. Yeah, those are big. 30% or a little lesser. Oh, you're gonna close at 30%? Wow. Fisker's still rallying. 18% on this thing. BY is holding that line, which not necessarily that great. kind of bear flagging. Got an engulfing candle here on the 5. Looks like it's just consolidating before a new low, actually. See which way it breaks. Yeah, SPY bounced up to this level. Not sure it's going to make traction over this. The trend is still in for the downside. I was more patient on my entry. Breaks above here. Might have just been a little bear trap. The way it was consolidating down there, though, it did not seem that way. Where's this guy?
We slightly lowered our near-term outlook, but we thought that the market sell-off was unjustified given the strong long-term growth prospects we still see for Tesla.
Okay, about 250
4-year-old daughter.
bucks.
Nice.
How did you guys bring that down?
Still at 250.
Yep.
Still 215.
4 years
Okay,
old.
I see. So the stock drops, so price target remains the same, so then it gets a higher rate.
Checked your BBY position.
Gap that basically.
That's a good experience for you to check. It's good.
What about the overall sector connected to Tesla? What's the best trade if you believe that EVs are just going to keep taking more and more of sales? Obviously, you could go with the automakers, which would be a Tesla GM or Ford conversation, or maybe something else. Or do you go with more like a grid build-out, or is it all the same?
Well, we see opportunities throughout the EV supply chain. Anything from upstream and raw materials, where we like lithium as one of the best proxies for just growing global EV sales, regardless of battery type or regardless
down
of
99.9% from its highs.
Specialty chemicals that are going to need more content per vehicle. Some of the technology component makers, like a Littelfuse, will be able to sell more automotive content per vehicles with connectors and wiring. You can see more auto suppliers who are positioning their powertrain portfolios, like a Borg Warner, who is rapidly electrifying their portfolio and using this as an opportunity to win new business and grow market share. So we see vast opportunities throughout the EV supply chain, not just in the automakers.
Did a trade like Borg Warner, maybe, I know you're bullish on Tesla, but I would think that there's maybe an argument to be made that a Borg Warner type trade might be a better one if the automakers themselves are going to go through price wars. So is that a way to kind of avoid maybe the competitive clash that's happening between some of these prices? Because Ford CEO the other day said, hey, we may be in a little bit of a price war here.
Yeah, if you want to avoid picking a winner on who's going to, gain market share from the EV transition, then certainly going upstream to the auto suppliers like a Borg Warner is a good idea. Going upstream to specialty chemicals, semiconductor components, lithium, we think is going to win no matter what. And lithium is going to be a great proxy for growing EV adoption, because EVs are going to go from 40% of lithium demand
if we get a SVWAP and
by
projection
2030. So it's going to be a great proxy for just more EV sales growing each year, regardless of who makes the EVs.
A little more patience on my entry, or a little more haste. But I was waiting for the confirmation of the break.
On an infinite time horizon, is it 100%?
So
is that the way you think about
the bounce was bigger than I expected.
Is there some, cap?
Yeah, well, we think right now availability of battery raw materials is going to limit the pace of transition.
Sure.
But it's not going to slow it down. We're still forecasting 40% of all new global auto sales by 2030 are battery electric vehicles. That's up from 10% last year. So we still see rapid growth, but it won't be at 50 or 60 like some of the more bullish forecasts are calling for. However, longer term, we see no reason why we couldn't get, closer to 80, 90, even close to 100%.
Okay. Now, we're talking a lot about Tesla and kind of the majors, of course.
BBY still just consolidating at the lows here. Down 35%.
Is there possibly, if the economy does slow down, is there
cents.
possibly going to be any failure on the lower market cap side? These companies that are trying to start up, because I think about like Lucid or something, where they've got these beautiful cars, or maybe a Rivian. A lot of people like the Rivians too, but the financials are completely different. They look like more what Tesla did in like a 2015, when they had a very favorable economic backdrop to get through, and people would shrug off
like
Tesla
CS or
bleeding
something?
out money, and they turned positive, get to the S&P, and that was like a new era for Tesla. This is a very different macro environment for companies trying to replicate that process, right?
It is, and I think the most difficult challenge for a new automaker is not designing an EV that people want to buy, it's profitably mass manufacturing that EV. And that's what we're seeing with Rivian and Lucid. They're having some production issues in ramping up their production and lowering costs to make a profitable vehicle while doing so. That's going to be the challenge for any new automaker in general. Tesla certainly surpassed that.
All right, BBBY,
for new entrants, that's going to be much more difficult.
Might be looking for a little reversal here on this level.
Tesla, but as the existing automakers electrify their portfolios, now it's not going to
break
be
that
as
1, 3,
easy
4,
to
5.
enter a new market.
I think that's why Elon's taking his
move back to VWAP
time with the Cybertruck.
And
it
then
doesn't seem like he's worried about Rivian taking his market share there. Does he
bust
think
through that VWAP.
I think he just wants to get it right. And I think before Tesla launches a new vehicle, they want to make sure they can profitably mass manufacture it. They want to make sure it works, and they want to make sure the consumer is going to have a great experience. Because that's where we have Tesla as a narrow moat rating due to the branded tangible assets. So when consumers buy a Tesla, they pay up for a Tesla relative to other autos because it's a good quality vehicle. It's technologically advanced. They don't want to launch the Cybertruck and have a bunch of issues that would do anything to damage the brand.
He said, if you can summarize it in less than a minute, since we're talking about the whole supply chain here, last week there was a development in Chilean lithium mining that seemed to put a little bit of a scare into the market about what the supply chain is going to look like. Can you tell us about the meaning of that real quick?
Yeah, so the Chilean president announced the strategy to quote-unquote nationalize lithium. But the key takeaway for investors is that if you're looking at an Albemarle and SQM, the two publicly traded Chilean lithium producers, there's going to be no changes to their existing leases. However, when their leases run out, the government will try to renegotiate the lease and potentially take an ownership stake up to 51% of that operation. But I think it's going to be, it's not likely. It's a 50-50 chance that it's going to even pass the Congress, which would need to happen to enact it into a formal law. So right now, I think certainly there's a lot of worry that someone for like SQM, whose lease expires in 2030, is going to be an issue. But for Albemarle, whose lease doesn't run out until 2043, we see no issues.
Okay. Great stuff, Seth. Very thorough. Much appreciated.
Thanks, Oliver.
Absolutely. Thanks a lot. Seth Goldstein, equity strategist here at Morningstar, covering energy and resources with a now 4-star rating on Tesla. Moving a little further away from that price target, though, this morning we're down about 4%. NASDAQ trying to hold on with Microsoft doing a lot of legwork here, but the other participants are few and far between. When we come back, we'll be talking about two stocks that are almost perfectly unchanged today, but don't worry, it should be more exciting in a couple of hours. Both have earnings this afternoon.
Doesn't even say where he is. Coin just gave back all of its pre-market gains. The Fubo. SPY edging up a little more. Oh boy. Be patient though. It's looking weak. Yeah, I like the old Datsuns. That's how they look. But New Nissans? Yeah, I can't think of many. Like some of the Infinities. The same. Good to be patient. Alright, BY might be moving up here a little bit. It did hold support there pretty well for the last 30 minutes. 1269. Moving up now. I've got 1345 is kind of this little resistance to break. Yeah, this bear flag. And VWAP's shortly thereafter. Jeez, I'm whipsawing myself this morning. Stupid. False break is getting me. I was long here. Did this, I went short. Now we're up here. It's 409. Yeah, I was expecting probably a bounce today also, but the break of this level I wasn't so sure anymore. And the trend is still down. We were just right at that support. And then we're kind of bouncing on it now, but it did break below there and hang out for a bit, so still not too sure, because now the bounce is only up to basically right at that resistance. 405.96. My range on this thing is too large right now. My upside range, I've got to see like over VWAP for that to be a real false breakout. Yeah, maybe this was just a little spring test, little bear trap. Just ripped today. Hard to tell. Yeah, it doesn't mean it has to close at max pain. It can't come lower, and it's only Wednesday. All credit cheaps. Yeah, I used to have a QX. It was pretty nice. I had a QX56. Thing was freaking quick. Those 5.6 liters don't mess around. Had TVs in the headrest. It was all in black, fully optioned out. Ah, BY not bouncing anymore. Back to consolidating at this level.
That's our yellow line right here. That could be a source of support. And then below that, the 870 mark that I mentioned earlier. In terms of resistance, if we can break above our intraday yearly highs that we reached a few days ago near 912.
Yeah, I think that was it.
The standard deviation channel +1 here comes in at around 985. So that would only be about a little less than 10% of a move upward here. That would be a bit of a climb, but certainly not impossible if things keep trending upward.
All right, looking pretty good. Higher highs.
This grew 21%.
Consistent higher
This
lows.
thing's still
I mean,
going.
it's the beauty of a chart. We'll see if it changes
Correct
anything
it
this
3 weeks.
afternoon. But it seems like it's
that's like the $2 thing,
take
right?
a big surprise to break this thing. On the other hand, we got Roku, and couldn't be more different. I mean,
G70,
like
yeah,
anytime
G70
Roku
what it
tries
is.
to get its groove back, it missteps, it falters. How are we looking going into this?
Well, listen, this is all because of that ease in ad spend, and it's more of a plummet, really, more than an ease. Corporations, different businesses, they've been cutting back heavily on spending for advertising.
Oh, no, there is a G7. It's a four-door.
That is Roku's main source of business, so investors are expecting Roku to post a revenue decline for the first time ever. It's posted an earnings per share that has contracted before, but right now revenue is expected to decline, and adjusted earnings per share will actually be a loss of over $1
how do you define done
for this quarter. And so pretty much as the company expects more of these ad spending,
we don't know yet until it breaks one way or another. If it's a
company, it's really got to figure out what to do, right? And that's part of why it's been trying to grow its Roku channel. But this has offset even the success that the company's seen with the Roku channel. I don't know. It might be downhill from here, but maybe it can at least even out.
It's not uphill.
I don't know. It's like right there, though.
Or rather,
Wolf and Candle now to the upside.
Sorry, I got them mixed up. In the direction that you want revenue to go, revenue's not going up.
Revenue's not going up. Okay. Exactly.
All right. Now, if downhill's the easier way, easier to go downhill.
It's not Carmageddon yet,
no.
But it's an uphill battle.
You'll know. You won't want to buy a car.
All right. Matter of perspective, I guess.
You don't want to buy one.
Is not subjective, though, right? I mean, this thing stinks, does it not?
It's not great. And what
yeah, it looks like a bear flag, so
is how remarkably range
more likely to break to the downside and the upside, but it fails.
Between about 60 and 66 with our green
to me it'll fail once it starts breaking this 130, 1,345,
excursion to
especially
the downside here where we came near the previous lows. It's been in a very tight sideways formation here. In the broader picture, it's looking more triangular.
50% retracement is kind of goes past that,
and we are dropping below that 60 level recently as well. You can see that we've breached it pretty convincingly here. Heading into this earnings announcement, RSI, our measure of momentum, tilted toward the bearish side here, not really showing any major divergences from price or anything, just kind of following price lower
it is 1412.
And we gave up several important technical indicators. We were centered around our volume profile point of control in that range. That's our area of heaviest trading according to that study. We gave up that level.
I think it was a 37.
We gave up our yellow 21-day EMA, our orange 63-day EMA. Now we're trading below them. The lines are themselves are starting to slope downward. Our 252-day EMA so far above us here, kind of speaking to the steepness and severity of this decline that we've seen here.
Yeah, SPY's moving back to
VWAP. On the other hand, we're up over 50% from our yearly lows, so kind of a weird situation there, but not looking too promising heading into earnings.
Yeah, all right. So at least it's found some kind of sideways activity here in the very short term, but
there's the move on SPY. It was a bear trap.
A little bit here over the last couple of days. A little changed ahead of the report. $58. Nothing good expected really here, according to the setup. So thanks, Renu, and thanks, Rick.
The spring test.
We'll definitely be on our list this afternoon. Both of them, Roku and O'Reilly. Right now, let's talk about the sector at hand, though. That is cloud companies and tech with the NASDAQ.
Got whipsawed there twice.
But has plateaued a bit since the opening bell. Microsoft
hard to go for round 3 after you've been beat up.
The cloud growth slowed, but at least in line with what was expected. Caroline, what's that mean for other companies in this sector?
Hey there, Oliver. When you take a look at the major averages, only the NASDAQ in the green today. Thank you, Microsoft, but also thank you, cloud companies, because Microsoft's up about 7.5% after earnings and bringing a bunch of other big players in the cloud space along with it. Taking a look, Datadog right now up about 13%, Snowflake up about 8.5%, Cloudflare up about 4.5%, MongoDB up about 11%. Taking a look at the two cloud ETFs, CLOU and SKYY, those up a bit more modestly, up about 1.5% to 2%. So clearly giving a boost to other cloud stocks. Just kind of running through the highlights for Microsoft. I know you've hit them, but obviously reported better than expected earnings and revenue. There's all of this AI enthusiasm.
Yeah,
there was better than expected PC demand, but also that 27% revenue in its Azure cloud division is really what a lot of people are focusing on.
BBBY looks like it might break to the downside out of that bear flag.
Coming in bit better than expected. Executives have been signaling that the sluggish economy could weigh on
No,
this
their models are confusing. No, there's a lot of different Infinity models. And all like
yes, revenue growth is
just a letter or number off.
As I said,
I don't know all of them. I know
still
I'm crazy about car models and stuff. Like
bode well for some
Infinity,
of
I've not been able
companies ahead of their earnings. I was taking a look at the earnings calendar. We'll hear from Cloudflare tomorrow, Datadog next week, Snowflake later in May, and then we won't hear from MongoDB until June. So
we'll
definitely
see. It's still in this flag. Didn't break down there, BBY.
Really, when you take a look at the Nasdaq, Datadog actually the best performer on the Nasdaq right now.
Yeah, a relief rally, no question about it. Good eyes on Datadog. Huge move. Wow. Up 13%. So good news is we won't have to wait long for earnings, and good stock to watch there. Datadog is not as big, nearly, of course, as Microsoft, the one that's been down at the lows and symbolic of this group's sell-off the past year. Thanks, Caroline Woods. Let's get a thought on the market here from Scott Durfee and George Tillis. A little morning meetup, gentlemen, out in Salt Lake. Hey, we've faded down here a tiny bit.
Yeah.
This is like a Microsoft
I get whipsawed again.
I'm
done for the day.
Today. Scott, doesn't seem like much else.
Yeah, so far, right? But we do have some stuff coming up. You know, we're going to be looking at some PCE numbers. You know, durable good numbers came out today. You know, that's something that, you know, we do need to kind of take into consideration and pay attention to here. You know, durable good orders jumped to, you know, 3.2% last month was a big jump. But, you know, taking all things into consideration, it was highly inflated because of a 78% jump in airplanes, passenger airplanes. And so we do have a big skew there. That's information that's important for us to understand and know. You know, at first glance, when you see that durable goods order, you think, wow, things are great. But when you consider that over the last few months, those plane orders have been down, and now we see them jump by 78%. That's going to skew it. You take the plane orders out of the durable goods from today.
Oh yeah, those Ionics actually look pretty sick. I'm not a fan of that
30 basis points. And
body
so
style, like the little crossover.
You know, if we leave planes
but
in,
those are pretty cool looking. I like the Hyundai
planes
designs.
Cars, automobiles
they've really
there,
gone.
Yeah, we didn't beat. You know, it's
gotten creative with their retro styling,
opposed to a estimate of 0.5%.
They don't have like this.
You know, there's not much going on, but you know, we do have stuff coming up
this long-standing style that people have always bought it for, so they can they're able to pivot easily with new trends.
Could weigh on some decisions that are also coming up.
I think they're capitalizing on it well. There's like a Ford or you know an F-150. People want to expect it to look a certain way. Couldn't just like totally come out something new and then retain the same buyers.
Top-ranking economic data point, the thing smashed through expectations, seemingly totally opposite the recent trend of data missing. How come that's not creating any ripple effects, George?
Yeah, if you look across the board, the
I like that, dude, the hydrogen prototype from,
so if you look at the,
is it Hyundai? I think so. That thing's so sick.
Report, if you look at core capital
like
goods,
it's like a DeLorean,
it was down
like
0.4%, but also there was a revision lower for February. So again, as Scott alluded to, X aircraft and of course automobiles, the core capital goods, which really represents, you know, supply chain, manufacturing, all of the other things that are producing everything else besides, of course, planes and automobiles was down. So I think that speaks to some weakness overall internally from that standpoint in core capital goods. I think at the end of the day, you know, that's a strong barometer
for sure, Ace.
of the internal
like a
overall economy. I know Boeing's a huge
there you go.
actually the biggest exporter of the United States. So we can't discount
34%.
That. A lot of that is going to overseas markets. And the other thing is looking at the expectations for personal consumption expenditures on Friday. I think it's going to follow suit with the CPI report. You're probably going to see a drift lower in the overall headline rate, which is expected to be around 4.5% compared to 4.6%. And the other thing is, if you look at the, I'm sorry, it was going to be about 5%, 4.2% versus 5%
cents
last
to
month.
$1.30.
The core is actually going to be slightly lower at 4.5% versus 4.6%. So I think the actual core inflation is a challenge, and this is effectively what the Fed is focusing on, and why they're probably going to continue to move on rates at the very least in May. But at the end of the day, I think if you look at the market distribution, it really has been tech. It's tech today, But I think UPS yesterday, as well as First Republic, is creating some challenges, some jitters in the overall broader markets like the S&P and the Dow.
Definitely. I better hope inflation comes in line or light on Friday, or it will certainly add to some of the complications that are offsetting the big tech optimism.
BBBY is at the low here.
Appreciate it, guys. That's it for
Morning Trade Live. Get a little bear trap like SPY did, or you're going to see
here from the conference in Chicago.
Flush.
Trading 360 with Nicole Petalides is up next.
Should have been more patient with that news, I guess. I haven't seen the new DeLorean four-door Gullwing. We're back. Back to 164. Yeah, it seems the market probably wants to bounce. This just shook me out this morning too many times. I have more margin though, so I can buy more contracts. I don't know if that's a good thing or a bad thing. So far it's been bad. I don't know who, what, why tokenized stocks were made days after this news. I don't know. Just like get a smart car and lift it. Put some all-terrain tires on it. Like a 3-inch lift. Good parallel parking, good for the dirt roads. Playing to 164.5. Yeah, it's edging up here. Buys rallying now. It's over VWAP. A lot of upside potential here because of yesterday's sell-off, and then even opening so low, opening the lows of yesterday. So 407 and then 408, 408.27 market high, or post-market high actually. Got some room to go. Yeah, I can see Tesla even filling this gap maybe at 180. I don't know if there's a new DeLorean. Alpha 5? Sit on that. What that out? Big move up on SPY. GME moving up a little bit. 1840. It'll probably break up through that today. Bed Bath's still just at the lows of this flag, so not great. MACD flip bullish, but doesn't mean a whole lot with this price action. The E-ray, yeah, I saw that. It's a lot of money for what it is, for the difference between a normal bet. Oreos? Oh yeah, almost GNS. Yikes. Still hasn't filled that gap. Wow. Yeah, I like GNS after that gap fill. I don't know. Oh, that was that AI news. That's what that pump was from. Compare them? Interesting, Oreos. No, he has oils. Oils. 2 oils. Oh, okay, put that on your name. What is that? What kind of oil? Black? What, like a toiga? That one's Carmageddon. Yeah, the expensive, the exotics, the sports cars. Not too expensive, but like just sports cars. Those should depreciate the most, I would think. But like the super exotics, like supercars and really expensive ones, those probably won't really change a whole lot. What do you mean by want me to compare them? Like price action wise, or just how the charts are similar? Glad I'm out of SMX. And glad I'm out of GNS too. You start shorting stocks more. You're thinking this looks similar, like this little pump right here and drop? Yeah, GNS is at 86 cents, has a gap still at 62 cents, so has a ways to go. Oh, both down 12%. This one's so liquid, it could be down 12% and then up 12% in like 5 minutes. GNS is somewhat illiquid too, maybe. And no relief yet on BBY. I'm almost out of my hole on futures because I went long. It's kind of late, but I did it. I went long. Here was the play. Came down. I went long on the support, and then it did a false break. Closed my long for loss. Went short. This is it. And then closed my short for a loss and went long. Yeah, that's called whipsaw. The bullwhip effect.
40-70.
But I think I'm in the right direction now.
What levels are you watching?
My original direction, but just that false break shook me.
Yeah, listen, I think there's some psychological levels that we continue to keep an eye on.
Mm-hmm.
And,
Move it up.
As we trade within some of these certain ranges that we have here, we feel like we've been kind of tightened in this band, right? So you talk about the S&P, let's talk about the VIX real quick, right? The VIX has tried to peek its head back up to that $20 level.
I should close my puts yesterday.
Off there.
I think I have enough time for one more leg up and then down.
Considering all the fact of the pressure that we had on the market,
I'll get some big candles again.
That we're starting to see today, so that will be an area that we
well,
look there.
Let me stop you right there. What does it tell you? So it's at 18 today. Yesterday.
It's probably because the price. Starting to see some different algos hitting it. I would say maybe.
It's been 17, 18.
So they add a.
I mean, if it does this, it means.
But as it hits different price thresholds, it'll do weird stuff.
There's a little bit of a disconnect, right? After the market activity that we saw yesterday,
it happens with a lot of stocks at that price range.
More earnings this week, and as we're heading into economic data, and then we put together what's going to happen with the Fed next week. So still a little bit of uncertainty that's going on there. I would have expected the VIX to stay a little higher as we're into today. But what am I looking for there? As we trend closer to that $20 level, we should look to see the market start to sell off a little more. And then conversely, we should see, as this trades down, move back higher again. So that 16.5 level on the downside, the 20 on the upside there, I think those are just two levels to watch. And if we can see that inverted correlation, I think that will be a good pattern to keep an eye on.
Right. Okay. So as the VIX goes up, the market might pull back. What do you think about what's been going on here with tech? I mean, tech is the best performing sector today, up 2.2%. And really, tech has saved 2023 after a horrendous 2022. It was tech that sort of poked its head out and did well and gave people at least something to sink their teeth into. Now,
Damn green.
Right, so I mean, we've spoken a few times so far this year, and each conversation has been the same of what is that rotation, right, in 2023, right? We've seen a rotation move into tech, and we've obviously seen that impact that it's had in that sector and on the NASDAQ as a whole. Right. But I think we need to continue to get through these next few days or trading sessions here as earnings season, right? We're really looking forward to what some of these numbers are going to come in at, what the outlook is going to be moving forward, what are the stumbling blocks that might be there in the future. But I do think this rotation into tech is going to continue. It feels like it was an area in 2022 that got pushed down pretty hard, and there've been certainly some buying opportunities that are there, and we're seeing investors, both large and small, take advantage of that rotation as we're seeing that sector bounce back higher.
It is so tough to bite the bullet and say, I'm going to get in there. I mean, even during 2020, during COVID, March, April, people were saying, buy here, but it's so sickening because you don't want to lose more money. But at some point, when there's pullbacks, you buy. Right. Are you suggesting folks do that on pullbacks? Is it buy tech? Is it buy the S&P 500? What are you thinking?
Listen, I'm suggesting that we had a pretty good sell-off in 2022. Take a step back and look at overall performance in our markets across the board over an extended period of time. We're going to have these up and down trends. It seems like it's 2 steps forward, 1 step back type of trend. And I think that we saw a lot of opportunities at the end of last year and the beginning of this year to buy into this market. So now what happens now? I think you got to put it all together. I think the Fed is going to raise rates another 25 basis points. They will indicate a little more clearer that this might be their last rate hike.
All right.
Not so much showing their cards, but there might be a few keywords that are in there, right?
Okay.
I think economically and socially we've all become accepted of where these interest levels are at. We've got some home numbers that are coming out later this week. I think we're going to start to see a slow rebound in that area there. There's some sections throughout the United States that it is still hot. There's others that have paused. But I think as investors become a little bit more comfortable with the interest rates and where they're at, we'll start to see that there. We're going to get spending. We're going to get income numbers this week. So I think overall, we're going to start to see our economy getting much more comfortable with where we're at. Where we're at is much different than where we were last year and the year before, but it's just where we're at now in our overall economy. So from there, I think the market is going to continue to have this trend moving higher. I don't think we're going to move directly higher. We will continue to have some sort of stabilization.
Moving up here. We do have a little resistance from yesterday at 407.28.
Through different sectors, we'll continue to see the normal rotation that we see.
Here yesterday.
But I think overall, our market will continue
and was
to
a support.
All right, so that's mostly optimistic.
I am optimistic.
The takeaway there. I mean, Amazon, for example, right now, I just saw a headline crossing that they are now beginning their layoffs.
I take profits on my futures here.
Human resources sector. I mean,
Be
we're
patient
just hearing
though.
layoffs. A lot of the big
Let
tech
this thing
last year.
make its move.
That's likely to
Hasn't had any
continue,
pullback yet though, so this is
the
basically just rocketed for the last 30 minutes.
And I know we have Amazon and Meta, some names you could touch on, but like the big story here is the consumer concerns about maybe the regional banks, or are they concerned about layoffs? They're using their credit cards. They're digging into savings. Any of the big sort of headline stories jumping out at you? Any final thoughts that you want to leave us with?
I mean, I think the layoff numbers are certainly ones that we need to continue to focus on. Keep in mind, we've got corporations that after the pandemic, went on some sort of hiring accelerations, and they've been trying to figure out work from home and how it's going to coexist. So I think starting to see some trimming in that area is appropriate. I don't think that there should be an overreaction to that. The regional bank crisis or issues that we've seen there, I don't think the contagion effect is going to expand from what we've seen already. We're seeing it in individual pockets and individual stocks, but I think overall, systemically, we're not going to see an issue there. So I think even though we're seeing significant pressure on FRC today, I think the dust has settled overall on a holistic view in that area there.
And that makes me feel better, because then that just says it's either an FRC problem or 1 or 2 banks. The shoe drops for some of these banks that maybe are under pressure, but it's not a banking crisis.
Right, but it's moving around deck chairs, right? It's money coming out of certain regional banks and moving into the bigger bulge bracket institutions that are there. So it's not money that's lost. It's money that's just moving from one institution to another. And I think we're going to start to see and continue to see that investors are going to feel a little bit more comfortable having their money secured in larger institutions.
All right. Well, we're certainly having a lot of fun with tech this week. There's no doubt about that. And we're on the higher end of this range, and we'll watch the VIX to give us some indications of where we may be going. Always love having Jonathan Corpina on the show with us, Meridian Equity Partners. Thank you. Plenty more to come right here on Trading 360. Our 360 Spotlight, we'll take a look at recent trends in the bond market, what you should be watching for specifically for a potential recession. And today's disruptor, Snowflake. George Sillis will discuss why the stock is trading higher today and show us a way you can trade it as well. In our 360 round, we'll discuss travel and cruise lines and the demand. Are consumers ready? Are they ready to bite the bullet and get out there? And we'll take a look at that. So here's a look also. We're going to take a look at 3 charts, 3 trades, 3 stocks here. Ben Lichtenstein will take us through the technicals. John Kaufman, VO Trade, will take us and look at Russell 2000, silver, right there, SLV, and McDonald's. Coming up here on Trading 360.
Yeah, I closed out my longs there. I could keep going, but I think I might consolidate here. Might have a pullback back to 406.60, kind of the support, or maybe even BWAP. Might like to refloat if it gets back to BWAP. But green on the day, and at least on the futures, so I'm happy with that. Oh, it's still going, still more green candles. Oh, they're delaying GNS earnings? That's interesting. Yeah, that's usually not good news. But they have been adamantly going against naked short selling, so if there was someone that had a plan, it would be GNS. Whereas BBBY, they do all this stuff, but probably doesn't mean anything because they've not said that there's any, they're not going after this massive naked short position on their stock or anything. So there could be something behind it, but if there was something cheeky going on, I think it would be GNS. Or it's just what it looks like and they have bad earnings. Maybe a short here, but I'm trying to get the moment. I think it's up. Huge. % up on the day. Huge.
The Russell 2000, the ETF there. What are you thinking about these small caps?
So small caps are still.
He's even more sharky today with his beady black eyes.
Talking about recession.
I don't know how he did it.
Heard from UBS that there's a lending slowdown, which is indicative of recession. So energy stocks, which fill the Russell, are ultimately going to be in trouble. In addition to it, regional banks. And that's really the genesis of this particular trade is the regional banks. The regional banks is more a crisis of confidence. Let's not even talk about deposits and so forth. Look, do you want to be an FRC right now? Absolutely not. It's worth $5 and everybody's actually running scared. So it's less about the deposits. It's more about the reality of a stock that's very likely to go to zero. And of course, if you own regional bank stocks, it's hard to want to hold those stocks in the face of adversity. With that, it's an IWM, just a very small put spread here, defined risk, just going out to the May 19th expiration. I'm buying the 173 puts, selling the 171 puts, just a $2 wide put spread. This one's actually done for about a 90-cent debit. Now, the price is going to fluctuate quite a bit. Obviously, the market's rather volatile this morning. But again, just to really like 1 month kind of shorter term put spread, define the risk, and look for just a quick burst to the downside. It's more of a crisis of confidence than it is the reality of deposits getting pulled from these banks.
So it really could be just, one move, one day of, some tough news, and then you're in. Ben, tell me a little bit about your thoughts on this chart.
Well, real quick on the bigger picture, Don's dialed it on 4106, 4100 area. I've got my eye on a little bit lower level than that, right around 4050. That's where the 50-day moving average comes in. You can see the S&P is recently stalling out just shy of 4200, short of that February high, and rolling over here back towards that 50-day moving average, still holding well above the 200. The reason I'm watching that is because take a look, while the ES is a good representation of the Dow, of what we're seeing in terms of the NASDAQ, the Russell small caps. I mean, you guys were talking about this. You can see a complete contrast here and quite the divergence.
But then you have salt everywhere, right?
To the same extent that we've seen the NASDAQ. It'll be interesting to see if we can hold above the 50
Isn't it salt you put in them?
Participation here from this broader index. But speaking of that broader index, I did notice some of the trend environment we've been seeing in the IWM. Here you can see the Russell 2000 ETF, and we're just going back to the beginning of March. The move that we saw down to 167 from, well, we'll call it 194, 195 area. High conviction on the left side of your screen, and then a lot more overlapping and rotational sideways consolidation forming around, well, I went ahead and identified what we're looking at here in terms of this balance area. We'll call it 174, right? But as you look at the left side of your screen, migration of value, 192, 188 in these areas of consolidation where we stop, pause, and provide that past or prior historical reference based on the current area forming. So the bears don't want to see this thing back above 186. That would invalidate the intermediate trend that we are on the move lower here, and working assumption that we're going to continue to form value areas lower. This is the move we just looked at. Look at this, a small blip on the radar in a very similar pattern when we look at the daily candles. High conviction on the left side of your screen, and we're talking about sideways consolidation here. Again, a very bearish pattern playing out, and similarly, I've got areas of consolidation mapped out on this chart. Every $20 we saw a new area form, talking beginning of 2020.
I gotta do it outside.
2021, beginning of 2022, up around 220, 200, and 180. Lastly, take a look at where we are. We were just talking about the Russell holding below the 50-day moving average.
But that seems like a lost cause.
Reflection of that, below the 200.
Killing bugs outside.
Somewhat limited, but it does appear as if we're
this could 23%, but starting to come down.
We saw earlier this spring, earlier this year. If we take that out, again, also watching the other three majors, the S&Ps, the NASDAQ, and the Dow, with this weakness here. How do they fare?
Thank you for both of, taking a look at both of those. I mean, looking at the S&P 500 and those key levels, and seeing what you think is a bearish pattern here for these small caps. Don, look, he seems to be on your same page.
Yeah, it's how unusual is that, right? But the small caps are definitely in trouble and have been for quite some time. Again, I'm not looking for a catastrophic move right now inside of the IW.
Worth it.
Again, quite on the contrary. This is a $2 wide spread, just a quick burst to the downside. Again, a little bit of a confidence issue forming, and it's less about the deposits, and it's much more about ultimately stock price. And no one wants to be left holding that bag of risk in the short term.
Understood. Okay, let's get to one that you're a little more bullish on, looking at the silver ETF. What do you think will drive this? What's the catalyst?
So you're going to love this because it's what I would term bullish for all the wrong reasons, right? And that is, there's going to be a confidence issue as well of the dollar. There's a lot of different reasons specifically for wanting to be long metals. And I know a lot of people are looking at gold. I myself have taken a couple of positions inside of gold looking for a big burst to the upside. But in this particular case, I think SLV is much more effectively positioned. Now, I'm going to do a trade that's all the way out to the July 21st expiration. Plenty of time in this one. And one of the primary reasons is that that confidence issue is going to come not by means necessarily of some of the metals, but again,
I don't know. I don't think so.
The U.S. dollar is threatening again the 101, 100 level. You get the dollar well under 100. Why? Oh, come on, there's going to be debt ceiling. I mean, I could go through debt ceiling. We're going to have Fed. As I say, each and every week I come on here, there's like this merry-go-round of risks lately, and they just keep surfacing and surfacing. We may get, a hot CPI print, which ultimately causes, some of the metals to burst to the upside. But I think this is a well-positioned time.
This is a kind of
July 21st expiration, I'm going to be buying the 24 calls, selling the 28 calls, $4 wide spread. It's done for about a 70-cent debit. So a nice defined risk shot to the upside in SLV.
All right. As we see this, and we'll watch that dollar, that U.S. dollar, Ben's always keeping an eye on that as well. So your thoughts on silver here, Ben?
Nicole, that's for sure, and the dollar has been coming off. And Don, it's interesting you say bullish for all the wrong reasons. I'd agree with that, excuse me, when I look at the weekly time frame. But there's definitely some reason to be bullish SLV when you're dialed in on the intraday, more granular. Let's begin with the hourly candles. Move from beginning of March, well-defined trend up from $18 to near $24. And the migration of value. We're currently forming an area of consolidation around this 2350 level. You can see the upper extreme again, 24, the lower around 2250. But here I'm just mapping out these areas where the market paused. You get that overlapping rotational, those areas of value forming, and it's separated by vertical high conviction trade to the upside.
BY new lows there.
Stacks up and provides this very well-defined, easily identifiable
breaking out of the bear flag.
Stepping away from the hourly time frame. Well, take a look here.
1170 is the
many ways, but
the low of pre-market. All-time lows on Bed Bath & Beyond. Congratulations, guys.
August of 2020.
12 cents. We hit it.
We've been very much
10 cents is coming
looking
today.
at the daily time frame. We've been consolidating again around this 23 level. It's a significant area, but this is a longer-term chart, right? You can see again the big move up in the spring of 2020, and then how since wide range, a lot of opportunity within it, but not a lot of conviction, right? Just kind of rotational overlapping. Again, I've got, we'll call it 16 up to 28 in the middle of that, designated here on this chart. Now, I did want to show you what I'm looking at in terms of the weekly time frame, because Don mentioned bullish for all the wrong reasons. Look at this. Silver had been trending lower. We've recently invalidated that working assumption that areas of value are forming at lower and lower levels, 20, 30, I'm sorry, 40, 30, 20, 16, but boom, spike here, the move we just looked at, sideways consolidation, taking out a key area established in 2012, 2013, 2014, around that $20 level. So you can see in this instance that quite the reversal here in terms of the trend on the long term. Now, bulls looking for a breakout above this $28, $30 level. That's going to be a significant move if we get that, ultimately tied to I expect demand out of China, the EV space, a weaker dollar, I mean, combined with just all out inflationary fears being tied to silver. I would imagine crude and copper following along with that. But hey, definitely keep an eye on this. Again, the lift we're getting here, high conviction on the intraday, that hourly, and we're starting to see some here on the daily, and even, again, reversing the trend here on the weekly, that's for sure.
Yeah, and I see gold is a little higher, Bitcoin's a little higher. I'm not saying that they trade together, but it is fun to watch all of those. Final thoughts, Don.
Yeah, no, it's look, I'm shooting 2 for 2 here against Ben right now. He's agreeing with me. So SLV though, look, the metals in general, there are so many risks facing this marketplace at present time that the metals seem very, very reasonable place, especially in a dollar that's falling at this point.
Yeah, understood. Look, if you own McDonald's, if you just bought McDonald's and Microsoft 20 years ago, like everybody said you should have, everybody would have been pretty happy, folks. What do you think now about McDonald's, which really has come out with its numbers, hitting new highs? Your thoughts?
You know what? The most recent move up in McDonald's, spectacular. You can't discount that. But it's the exact same move that you're seeing in many underlyings that you wouldn't expect. So McDonald's has this burst to the upside. Like, this is not like, the next stock that has AI involved in it, right? What did they do? They've changed the Big Mac. If you look at something like Procter & Gamble, it's also exploding to the upside. You look at Walmart, exploding to the upside. They're being used in a very defensive nature. And I think there's going to be this cyclical rotation ultimately out of the McDonald's. Not only are they changing the Big Mac, now it really has nothing to do with it. It's more about price activity, and I think we're going to see a fast rollover here in McDonald's in the days and weeks to come. This McDonald's trade is absolutely bearish. It's an out-of-the-money put spread, and I'm taking the shot because
I did buy. I was a little impatient, I guess, on my buy. Turns out
it's much less about McDonald's. It's much more.
Yeah, I think we'll get a bounce
into these defensive stocks. This is a July 21st put spread. I'm buying the 285 puts. I'm selling the 275 puts. It's done for a $2.20 debit. So it's a $10 wide spread, $2.20 debit. Which
no,
means
it is
kind
a
of a
fake J from the Bay.
Outside shot. You guys know I love to take this, especially giving myself some time. Now, what's the worst that's going to happen? You're going to walk away from $2.20.
Ban people the same name unless there's
going to happen.
Problem.
McDonald's actually
it's malicious or
comes down,
a scam.
And ultimately, this spread can expand as wide as $10.
Wow. Okay. That would be the best case scenario for this trade. Tell me, Ben, your thoughts on the McDonald's chart.
2 for 2 is about as good as we're going to get.
Well, 12 cents. This would be where I'd probably buy for a day trade.
No, there's no artificial intelligence tied with McDonald's, but there's nothing.
You're trying to time the bottom perfectly and not wait for momentum.
This move that we're seeing here, right? Higher conviction to the upside and very well-defined separation of the two phases in this instance. Vertical.
There's been a couple other fake users that are
236 balance.
Copied
Sideways
names
around
at least.
269 and then vertical again into the beginning of March.
Sell limit?
I have got some question marks here because it
I don't have a sell limit
starting
on
to get
it.
a little bit more rotational, but very well defined higher highs and higher lows into this more sideways and overlapping phase, the horizontal phase. And taking a look here at the bigger picture, you can see the conviction associated with this vertical phase, the breakout, the reaction to the news, the earnings, the imbalance, the bulls really taking the ball and running with it, but they have been for a while. This goes all the way back to summer of 2020, 192, 2246, 269 again, and the initiative conviction we're seeing to the upside in line with the trend that we've been seeing. Nicole, you mentioned
liking what you guys are writing up.
20 years.
Very interesting.
Pulled that chart just to show your viewers exactly
reposting Happy DD so you don't lose it.
From $20, we're talking all the way up to $295. I mean, this is quite the trend environment, a long-term hold, to say the least, for those who have been long and enjoying the stock, handsomely rewarded.
I'm glad you pulled
I did go back long here on that break, and I closed for a small loss. I said, stop it, just wait. So I'm patient, I'm waiting now. Still up on the day. Down probably with fees, but it's okay.
Thank you, John Coffin. It's wonderful
Try
to
and
see you
reload at
a
VWAP test.
week. Tell us any final thoughts here. Don Coffin.
I like my odds inside of McDonald's there.
Don Coffin, Theo Trade, Ben Lichtenstein, thank you
Lichtenstein.
very much. All right, coming up next, we're going to spotlight the trends that we are seeing in the bond market.
At the bonds. Record number of young unmarried couples are moving in together, with a large majority saying they're doing it for money. Between the ages of 18 and 24. Money, money, money. The number of Americans working as freelancers just hit an all-time record. About 39% of U.S. workforce for 60 million people. Oh, SPY might be consolidating here. Ukraine's Zelensky after the sea call. No peace at the expense of territorial compromises. When did China and Russia start fighting? Might have been just bull flag. Look at that. Be patient on the long, but almost 60% of working Americans aged 45 and older expect to have less than $500,000 saved for retirement. Amazon shares up 3.3%. Report says company starts layoffs impacting HR and cloud unit. Ukrainians will get weapons they need in time for a counteroffensive. As the top U.S. journal in Europe. Oh, some of the stuff that you guys shared this morning. It's on our Discord. This was from Murdoch. This is in response to a question, but this company just needs a good valuation decision from the judge for restructuring. Honestly, it will be interesting to see how they rationalize it. 1.8 billion in debt, 1.6 billion in tax credits, and 6 billion in annual sales. I read this morning to you guys, but I think most of you probably weren't here. Hard not to say this company won't be worth at least 3.6 billion. Typically, businesses can at least be valued at 1-to-1 their revenue. The old debt gets new shares worth 1.8 billion, and the rest of the new shares would go to current shareholders, 1.2 to 4.2 billion worth. It's much more than the 50 to 100 million market cap is sitting at right now. So debt will be converted to new shares. Then they have a much better chance to have positive cash flow. After the DIP financing is satisfied, of course, 300 million or whatever. DIP financing has the highest priority. And with that, thank you guys for your likes. We're at 31 on the day. All done. BBY, no all-time lows today. Been fun. 12 cents.
Thank you. Senior Markets first spot on the TD Ameritrade Network. All right, it's time to spotlight the recent trends that we've been seeing in the market for bonds, right? The bond market, fixed income, what's ahead for the Fed? Joining me right now from the Morningstar Investment Conference in Chicago, Hunter Hayes is with us, VP and Portfolio Manager at Intrepid Capital.
Hi, coming down there.
With us today. I mean, first, just give us a glimpse into the conference. How's it going while you're there?
Yeah, the conference is fantastic. Hey, Nicole, it's great to be here. Conference is amazing. There's a lot of energy. I think we're at sort of a unique juncture right now with the markets where everyone's kind of wondering what's next. 2022 was a tough year for a lot of folks. A lot of uncertainty about what the Fed's going to be doing, where the market's going to be headed. So have had a lot of interesting conversations. And of course, every time there's fear, there's also opportunity. So we've enjoyed having some conversations about pockets of the fixed income market where we find value. We think that these dislocations present really unique opportunities right now.
Yeah, I mean, it's some great conversations, I'm sure. I mean, it looks very well attended.
Yeah, on Bed Bath, this
is
is
pretty
now, ugly.
Everybody was looking to the bond market versus the equity. We always say, the bond market is, where the smart money is. The bond market tells us what's really going on. At this point now, I do see the
settings in
come back off.
Tastyworks? I don't know. I've never used Tastyworks.
10 years sitting at 342 today.
1170 is the low from the pre-market.
What are these levels telling you at this point?
Yeah, it's a great question, and there are a lot of really smart people, waging war in the trenches, pushing those values around. Look, our view is there's been a profound change over the past 18 months.
I've not ever used TeamViewer either.
18 months ago, the high yield index, which is supposed to measure the riskier lenders in the U.S.
TradingView? Never.
Was under 4%.
I've used TradingView. I don't know how to do it though.
The riskiest borrowers out there.
I have to look.
And you would be getting less than 4%. Today,
I don't use it that often.
That. You're getting
using the browser version
on the high yield index, and you can go out and you can lend, quote unquote, risk-free, and even that's up for debate now with this looming debt ceiling. But you can go out and lend risk-free and make 4 or 5% on very short-dated treasuries. And you mentioned the 2-year, which now is under 4, but is basically yielding what the high-yield index was yielding 18 months ago. And so that has profound shockwaves across the whole risk ecosystem. It reprices stocks because discount rates are higher. It reprices, high-yield debt or junk debt, as it's colloquially called. It reprices all risk assets across the entire curve. And we think it's overdone a little bit. Indices across the board are off quite a bit from their highs a year and a half ago, and we think among the litter, not all bonds are created equally, especially in the high yield index where we spend most of our time. But if you do your homework, if you're patient and you're a good credit picker, we think there are great opportunities to pick up really attractive positions right now.
Gross.
I mean, we watch money supply so closely. We watch all of these yields and just really wonder about what it all says. I mean, there was concern about a credit crunch, right, and how that could help the Fed not have to raise rates more. At this point now, what do you think the Fed is most likely to do, and what would you suggest the Fed do?
That's tough. Look, we think the Fed is probably done for the year.
Thanks, Ace. Appreciate it, man.
Again, don't have a crystal ball. Luckily, I'm not in a position
Not
where
seen
I have
that
to be
emote
completely
before.
correct on that. But we think that
Thanks for the dono,
the Fed's
buddy.
probably done for the rest of the year. We're looking at what's going on. Obviously, the bank crises was sort of a scary moment in time. We don't think that we're done with the carnage from higher rates. Look, it takes a while for higher rates to bleed through the economy.
Let's get nuts.
If you're going out and you're getting a loan for whatever, a home, a car, tuition, it takes a while for those higher rates that you're paying on interest payments to bleed through. So we
might even take a short here for that move to VWAP.
What's
Might be over trading it, but nice engulfing candle there at the resistance.
Has been more tempered in recent minutes, and so. But look, we have no idea.
The credit card just doesn't want you donating more
where the
PP.
Fed continues to raise, and if the Fed does continue to raise, you're talking about more pain for duration assets. You're talking about probably another step back for stocks, and that's why. Look, we really like short duration risk assets right now. Picking your pockets within the higher quality of risk, and lending for short
I'm holding it,
amounts of
Tenzin.
time, where you get your money back.
I'm
quickly.
holding since this morning.
And we think that's the smart way to play this uncertainty around the Fed. But I'm not in a position to be giving the Fed advice on what to do. They see a lot more data points than I do, et cetera. But I do think that they've done their job in the dual mandate sense. They've brought inflation back into sort of a tolerable zone, and unemployment continues to be resilient.
Good have.
Employment continues to be resilient.
100% day, very soon.
Obviously, you're seeing headlines every day now around right sizing. So some of what has been expected to happen has happened, and we expect that trend to continue, and the Fed is going to react as that happens. And in the meantime, we think investors should be taking advantage of the front end of the curve.
We're getting closer and closer to that 100%.
18 months ago, if you had told
pre-market to open today was like 30-something%, right?
But I could go out and I could get 5%.
There you go, 36%.
When I was getting
closer.
4% to junk debt 18 months ago, it would have been astonishing to me. So we're
super long
excited
with
about this
$27.
environment. We think that those who are willing to be bold right now are going to be rewarded for it.
I wouldn't say I'm still holding. Now I'm trying to day trade it, but I meant to go. I went long. I should have gone short in this trade today.
And that they will be rewarded, and that there are opportunities presenting themselves. Just a quick thought on recession. You said there is a formidable risk of recession. You have to look for these businesses and companies that seem to be recession-resistant businesses with good balance sheets. Final quick thought, Hunter.
Yeah, look, I'll give you one name that we really like. Just in looking around this conference, we lend to a company called Cimpress, a legacy company called Vistaprint that some listeners may recognize. They make business cards, they make flyers, they make all the sort of stuff that I'm surrounded by in these hundreds of booths, with their banners and with their flyers, et cetera. And look, that might not be a business that you think about as especially recession resistant, but as it turns out, their business is very tied to business starts. And coming out of a recession is a really hot time for new business formation, for new business starts. So what makes this country great, what makes our system great, is that we have cycles. There's creative destruction, there's booms and busts, and it's all part of the cyclical nature of the economy. So we think that as higher rates bleed through, there is a formidable risk of recession, like I mentioned, and companies that have plenty of cash, lots of runway liquidity, and that are generating cash so that they can service their debt, so that they can deleverage their balance sheet, are going to be in the captain's seat and are going to be in a really good position to take advantage of dislocations. So we continue to lend to companies like Cimpress and others that we think are prepared for that.
The ticker symbol? I just didn't know. Is that publicly traded? Just so if you know it offhand.
It is CMPR, and the equity's kind of interesting too.
Yeah, I got clapped by BY. Two really bad times.
CMPR, got it.
Also,
nice to see you, Hunter Hayes, live at the conference.
I don't know if
Intrepid Capital.
the amount I made on the run up.
Coming up
I had such a small position.
George Sillis with the Disruptors. He's watching
Incentive just
Snowflake this morning.
lost money on it, pretty much.
Today.
Just been long, it should be short.
Well.
Been an easy short. Another thing I wanted to tell you guys, Bullion shared. Pretty interesting. I'm not a jurist, but from reading it seems, yeah, this is the type of bankruptcy code. You guys have maybe heard some about it. They did 363, so it seems as 365 bankruptcy code is more in relation executionary contracts and leases. I guess it's more related if the debtors have problems to the landlords or property managers. But yeah, this goes along with them not being forced in Chapter 11. It wasn't their the creditors that were forcing them, or their landlords basically. While 363 is a code in direct relation to selling off assets or company itself. That's what they're doing. They're selling off assets or maybe part of the company. 363 sale refers to the sale of an organization's assets under Section 363 of the Bankruptcy Code. The sale enables debtors to fulfill their obligations to creditors by selling their assets and using the funds collected to settle their debts. So all the money goes to basically paying off the creditors first. The purchasers of the assets benefit from the opportunity to acquire valuable assets that are free of liens, claims, or other encumbrances, often at discount prices. The bankruptcy court grants the debtor in possession or trustee the power to sell the organization's assets even when there's an objection from junior creditors after a court hearing of their petition. In a 363 sale, creditors, juniors, cannot object to any sale. It's true that JP Morgan or the 2024 bondholder objected to the sale in February, January. It makes sense that BBBY called for Chapter 11 and 363 code. Oh, SPY moving up again. I don't like all this chop. You have it BBY before the rug pull. Yeah. Yep, I got into heavy too. And with my long term, unfortunately, shook the money tree. Stupid. Ever that one could sell baby otherwise. Potentially. Yeah, we'll see. I don't know, John.
Microsoft's earnings, but if you look at Snowflake itself, in the last 6 months, the stock has been underperforming the S&P 500. In fact, it's been underperforming a lot of the larger peer companies out there, like Meta Platforms, let's say Amazon, Microsoft, which are going to be behemoths or large cap names in the technology space. And I think it has to do with the fact that despite the sales growth last quarter, which the company reported 68% year-over-year growth, and that's pretty phenomenal, especially going into the back half of 2022, where a lot of the spending from an enterprise standpoint was relatively weak. The company guided on a forward basis a little bit more conservative for growth and earnings per share, as well as free cash flow margins. They're expecting for 2023 about 40% revenue growth, but free cash flow margins are expected to be over 25% of total sales. So I think the company, from a net revenue retention standpoint, also demonstrates value with it over 130%. It gives you an idea that more of the customers that utilize Snowflake's technologies are paying more on a per dollar basis, and that's very promising. But the valuation, I think, is another thing you have to be concerned about, because if you look at the forward estimates, which are rising, for 2023, the company is expected to earn about 59 cents, which is certainly higher prior to last quarter's earnings release, which was around 22 cents. is still trading at a lofty valuation at 160 times earnings, as well as price to sales at over 26 times. So I think the reason we've seen some choppiness in the price relative to some of the other technology names is valuation, because we know that the companies that have relatively good value in the technology ecosystem or sphere have outperformed companies like Snowflake.
Yeah, and you know, August of 2022, when they had that earnings, they had that big gap up and moved to a new high. But then after that, we had the earnings, the two sets of earnings, one of which was a gap down, and haven't really recovered from that. I'm glad you also brought Datadog up, because I saw that it was up over 14% today, big mover. In the meantime, for Snowflake, as you watch the valuation and the future projections, what are you thinking about the trade?
Well, I think it's a good thing you noted that too, Nicole. When you see lots of gaps higher and lower and a lot of choppiness, it gives you an idea that the company's sort of flirting with break even. And anytime the company either overestimates or underestimates or reports earnings around break even, you do see these big gaps to the upside and downside. So with that said, the company is going to be reporting on the 25th of May. So I thought by looking at the 6-month chart, it seems to be range bound between 165 and let's say 135. So what we can do here is look at trading around that. So if you look at the trading range it's in, we can sell an iron condor. We're going to sell the May expiration in this case, because effectively it puts us out of the trade by the 23rd, which is 2 days before earnings, which is, I think, a prudent idea here. So what we'll do is we'll sell the 165, 170 call spread. That's above the current price. And then below, we'll sell the 135, 130 put spread. So altogether, it's a $5 wide strike with 4 legs. You could earn about $1.75 per share contract or $175 contract. So ideally speaking, what we want to see is the stock trade between the short strikes of 135 and 165, and we're right sort of in the middle of that range. And again, assuming it does trade within that range between now and expiration, this thing could expire worthless. So the whole premise behind this is to sell it for $1.75 and allow the value to erode as long as the stock stays within those ranges.
Understood. Thank you, George Sillis. Every day with our disruptors. So glad you're on the show doing this each day, George. Thank you. Coming up next, 360 round. We're going to take a look at the cruise line. So where's the demand picture stand right now? Which of the stocks could be down performers for the rest of the year? We'll find out next on Trading 360.
The ego on you.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust the time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting drawings, drawing tools, and then type of drawing. For symbol comparisons, select studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
Welcome back to Trading 360. It's time for our 360 round. We're talking all about the cruise lines, travel, demand. Our panel is ready. Jamie Katz, Senior Equity Analyst, Morningstar, and Ivan Feinseth, Senior Partner, Chief Investment Officer, Director of Research at Tigris Financial Partners. Thank you both for being with us. Jamie's coming to us from the Morningstar Conference, and glad you're there. Tell us a little bit about your thoughts. I know you have some of the names that you do like and some high ratings on these big 3 names. Tell us about that, Jamie.
Yeah, I think, from our vantage point, travel spending has held up really well. The spend on services over goods still is maintaining a much quicker cadence. And the results and the insight to what forward bookings look like from the cruise companies has remained really positive. So I think when we look at this from a valuation perspective, both Norwegian and Carnival look really attractive to us relative to our intrinsic values. And so we are pretty constructive on those names at this juncture.
I mean, you said sometimes that you could even have a misunderstanding on where the strength really could be, but you do see some strength. Ivan, you also are using other metrics like from the credit card companies, Booking.com, and seeing strength as well.
Well, if you look at the results last night from Visa, they highlight
Hey, trader.
consumer spending on travel. Look at the results last week from American Express, who also has a very large travel business as well as credit card spend on travel.
Adam
is also reiterating the fact that consumer spending on travel and even business spending on travel is recovering.
Just the delisting news. I don't think there's anything else.
I mean, the trends.
I was going to be after.
Where there was a big
I don't know.
on spending on travel and entertainment
OTC stock.
prior to the pandemic. The pandemic derailed that, but it's coming back even stronger because people realize the importance of travel, the importance of seeing friends and family, and reprioritizing what they want to spend on. And the travel industry is benefiting tremendously from it. And the cruise industry gives the consumer the best value for their travel dollar by far.
Yeah, I mean, you've always said that. You've always said that here on the show since the pandemic. And, you know, we're still seeing that. In the meantime, we're seeing Carnival trading below $9 today, Jamie. And I know you had fair value at $22. You said shares of Norwegian are cheap. What kind of upside potential are you seeing for these stocks?
Yes, so I think we do have price targets or fair value estimates that are in the $20, above $20 range, so 22 for Carnival and 27 for Norwegian. And I think what we try to look at is what is the long-term earnings potential of these businesses. There still tends to be a little bit of disruption from occupancy deleverage. I think that noise starts to go away after this, and we start to see pricing really pick up. For Carnival, I think there's been a little bit more distraction given that they are still expected to lose money this year. And you know, obviously the leverage situation for both or all companies in the sector is a little bit worrisome, but I think the intention has been very clearly stated that the operators do plan to work down those debt levels over time, and that gives us some assurance that, you know, these businesses are going to be working towards being cash flow positive in the future.
And I know for Royal Caribbean, you had fair value at $80, so I do want to make sure to mention that. Ivan, when you looked at the group here, you were talking about Booking.com. Jamie was mentioning Expedia as a winner there. Tell me about some of these names that are related to travel that you're watching. Are those also winners, Ivan?
Yes, Booking.com just made a new all-time high, and one of the few stocks in the travel industry to do so. There's also another interesting.
SPY is still consolidating this range.
Focuses on the consumer and, you know, the
no, that was the threshold
well,
for birds.
We follow,
It could be any number. Another one I've seen was like 10K.
Surprisingly,
I've seen another one that was 100K.
Almost half
so,
of all travel,
and that's if there's a class action, and
through a travel agent. So
the recovery from that's probably very minimal anyways. But yeah, there probably will be some class actions against the board. I wouldn't be surprised.
They rely heavily on the travel agent.
Yeah, we have till next week.
Monday is also another.
You have until Tuesday.
That I think
so after hours Tuesday, 8 p.m. Tuesday evening is the last. That's the end. Then it'll be on OTC on American Monday.
Booking.
Yeah, and you know, and over at Morningstar, a lot of great charts here, Jamie, showing the strength of demand, and despite inflation, people still have the fondness to spend on travel. Exciting to hear that. Great to see you both. Jamie Katz, Morningstar. Ivan Feinseth, Tigris Financial Partners. Thank you both. That's going to do it for us here on Trading 360. Thanks for being with me. I'm Nicole Petalides. I will see you later today at 2 p.m. Eastern Time for the watch list, so join me then. Fast Market is next.
What do you mean, trader? No, I have not had a company that was publicly traded that went to Chapter 11. Actually, thinking about it logically, I'm not even sure. I'm not sure there would be, because that's part of the reason they go to Chapter 11s for protection, right? So they might have protection from lawsuits while they're in Chapter 11 protection. Protection after all, right? Protection from creditors, but potentially other lawsuits. SPY's moving up here. I'm not sure. I'm just kind of speculating a little bit. CXAI, yeah. How's it doing? Is it selling off? Yeah. Still consolidating. Nice though after that bounce. SPY is ripping. New highs there. It's all in just bull flagged. Bed Bath has a little RSI divergence on the 5-minute. Go up is now to 136. Wow, it's moving up a bit. It's literally a test of the low to the 1,000th. Or the 10,000th point. Yeah, 1170, that's exactly the low. From pre-market.
With
you guys are there too,
Alphabet, huh? Which is now positive, but did dip negative. What was your take here on the market action?
My take is Microsoft to the rescue.
Yes.
That's my take on this market, because their numbers, their ability to show that they're good.
Could run again.
Which is productivity.
Yeah, the longer term trend is still up. Just a lot of volatility.
That revenue and intelligent cloud, their revenue outweiged the weakness of PCs. And
what the
they were
dip.
able to
do tell them what it'll be.
Revenue growth of over 7%.
What kind of answers are you looking for, trader?
Much better than expected, and they were able to guide. Remember, most people think that PCs are cyclical and they're in a down cycle. If that starts to turn up, Microsoft looks pretty attractive going forward. I think the recovery and the activity of the stock is saying that. And Tom, you know, one of the stories that I read from yesterday's earnings was good for Microsoft, not great for Google Alphabet. Because they're, Bing, OpenAI, ChatGPT, starting to chisel away at some of the massive numbers from Google Alphabet, so not necessarily as good for them. That being said, all the cloud numbers were a little better, so Amazon's up, Google Alphabet's up, Microsoft up as well. So overall, pretty good. The question is, can Microsoft itself, can that rising tide save all these boats? Because this market, right after the open, got a little weak and actually went negative on the day. So I think you got to watch how this whole day plays out, because there's more earnings coming.
Yeah.
You know, it's not just one day, because this market on the close yesterday looked horrible.
Oh yeah, we slid into the close, and then right after 3 o'clock, when Google Alphabet and Microsoft came out, we saw that bump up in equities.
In Chicago,
Microsoft still do pretty well in that, but. The big story this morning was Activision Blizzard, Microsoft News. UK CMA came out and said they're going to block that deal. Let's bring in Caroline Wood, senior markets correspondent here on the network, to help us break down this story, because Activision Blizzard actually released their earnings about an hour ago, Caroline. Stock's still down pretty significantly.
To those losses, Tom, taking a look, Activision Blizzard now down more than 11%, was down about 9% this morning. And we can talk about those earnings in just a second. I mean, I think they're proof that this is a company that's gaining momentum even without this Microsoft deal. But UK regulators blocking Microsoft's deal to buy Activision Blizzard, of course, a big blow. I mean, we've been waiting for the fate of this deal since January of 2022. We've been talking about it. But the UK Competition and Markets Authority, or CMA, said it's opposed to the deal because it raises competition concerns in the cloud gaming market. Now, you may remember that previously the CMA was concerned about competition in game consoles, but ruled out those concerns in a preliminary decision in March. So their reasoning now is about cloud gaming, saying gaming is the UK's largest form of entertainment, and cloud gaming is the fastest growing gaming market, and that this deal would give Microsoft an unfair advantage. Points to the fact that no other cloud gaming operator already has its combination of advantages, meaning it owns Windows, where most PC games are run, it has a global cloud infrastructure, and it has a strong gaming console and a big collection of games. They think Microsoft would have the incentive to basically withhold Activision's portfolio from competitors after the merger. Microsoft has added or offered solutions to address some of these concerns, including requirements governing what games must be offered by Microsoft to what platforms and on what conditions.
I pick up more BBY shares.
10 years. However, those proposals were rejected. Now, both Microsoft and Activision Blizzard said they're going to appeal this decision. Microsoft's vice chair and president, Brad Smith, said in a statement that the company remains fully committed to the acquisition, will appeal.
Yeah, I got some more shares.
Discourages technology innovation and investment in the UK, and also that it reflects a flawed understanding of this market and the way the relevant cloud technology actually works. He points out that they've already signed contracts to make Activision Blizzard's games available on 150 million more devices, and say they committed to reinforcing these agreements through regulatory remedies. Now, Activision Blizzard CEO Bob Kotick said the decision is far from final word, saying we're confident in our case because the facts are on our side. This deal is good for competition. Now, keep in mind, both Microsoft and Activision Blizzard are appealing to the same exact regulatory arm, the same exact people who made this decision in the first place. So it doesn't seem like an easy task. But just taking a look, Microsoft really holding on to its gains today, up about 8.5%. Some could say that investors might look at this as a good thing, that they're not going to be spending, $70 billion. Doesn't
I like the RSI
that's
divergence
really
we have here on the 5 minute. I like this engulfing candle.
Because it was actually up a little bit higher in
volume
pre-market
picking up
trading
right here
before this decision was
hammer
actually
candle,
announced.
which is also bullish.
Activision Blizzard, though, as I
But
said,
I think
really
we'll see a move
building
up.
on its losses, down more than 11%
Maybe to VWAP, maybe higher. Buy moving up. I did go back long. I jumped in on that.
Caroline, I try
rip.
to rule when we look at
Wasn't
things
sure
like
if this was going to
based
sell
on
back off, but it just consolidated.
And
So the
for
breakout, I'll take it.
The European Commission
408,
come out and say
409,
they have
410.
concerns about the cloud gaming sector. Shouldn't they be? That sounds awfully vague to block a $70 billion merger that they have concerns. It sounds like
Nice yin yang.
this is just round one of a big heavyweight battle coming up between Microsoft and the EU. I've been involved in these years ago when GE and Honeywell tried to merge and the European Union blocked it. So I think this is just very consistent for them, but it doesn't sound like Microsoft or Activision is going away quietly.
It certainly doesn't seem that way. And so keep in mind, this is UK regulators. They're also up against European
no, I don't think we can go OTC before that date.
Here in the US. So I mean, there's certainly plenty of hurdles to kind of jump over, but this
that's not my understanding at all.
They can appeal it to the UK, but again, it's the same people that made this decision in the first place, and they've already offered concessions, you know, basically promising you can decide where we release Activision Blizzard's portfolio of games, and they're still saying no. So I think that's probably why we're seeing Activision Blizzard shares down so much today, because it doesn't seem that likely. That being said, when you take a look, Tom mentioned that Activision actually released its earnings a day early as a result of all of this kind of chaos surrounding the name, and both earnings and revenue came in better than expected. The company reported 368 million monthly active users. Q1 bookings grew 25% year over year, and they say they expect net bookings to be at least in the high single digits throughout the whole year. And keep in mind, this is at a time when, you know, we've talked about, obviously gaming has slowed, interest in gaming has slowed as the, you know, we've overcome the pandemic days. Mobile net bookings grew double digits year over year, and they also said that they're going to bring their Call of Duty Warzone and Warcraft games to mobile devices later this year, which should give a boost to that unit. So this is a company that is actually posting pretty impressive numbers even without Microsoft. So maybe doing this just to kind of show that they're fine without them as well. But investors definitely seem disappointed that this doesn't seem like a step in the right direction for this $70 billion deal to go through.
Smiles in the chat.
Yeah, Activision CEO came out and stated far from the final word, and Microsoft also releasing that statement, but not hurting Microsoft stock by any means, up over 8% as we speak. All right, thanks to Caroline Woods, senior markets correspondent here on the network, breaking down
not use
that
my
news
own
on
emotes?
the deal, the blocking of the deal by the UK CMA. But now let's bring in Nick Theodorakis. He is Director of Financial Risk Management at TD Ameritrade. Nick, wanted to get your take here on the markets. It seems like, you know, earnings for the most part have done pretty well. We haven't seen those really big raises as far as guidance goes moving forward, and maybe that's why we're a little bit subdued. But, you know, these big tech companies kind of lead the market. They're the bigger components within the major indices. What's your takeaway here? Is this just maybe one specific sector that's going to do well, and maybe the economy continues to slow?
It makes so much more sense to do it the European way.
You know, guys,
first time I went to Europe and I
to be past the majority
saw how they
of
did it,
earnings and still kind of have that looming
yes.
over us. Usually we get the sentiment and they kind of move on, and that's
right.
This First Republic story that's, you know, continuing to unfold. I think the concerns that sort of, you know,
we should just start doing it that way here.
The financial sector.
People get confused. Tell them the right way to do it.
Of the success of some of these big tech companies, and it's pretty interesting to me because, you know, for years and years, tech has just, you know.
Oh, now SPY's gonna start chopping around.
It feels like we're sort of back in that mindset, right? You know, between the cost savings, the job cuts, you know, and sort of the restructuring, and the fact that those companies, even though huge, are still able to be nimble and generate such strong profit. You know, if we weren't dealing with maybe this sort of credit cycle that we are, you'd probably see the markets, you know, more broadly reacting a lot more positively to this. But you know, we know that there's going to be tightening credit. We know that it's going to be harder for businesses to grow, tech and otherwise, right? So I think there's just this sort of cautious optimism. The beats are, you know, of really low levels. You know, the beats are starting to dwindle a bit, right? We came out really hot with like a 90% beat rate the first week of earnings, but we're down in the 70s now. So it's a little bit less optimistic than it was, and I think you're starting to sort of feel like the investment outlook for all these companies is pretty lean, right? You see all the major tech companies, and then, you know, the sort of second tier ones cutting costs. It's not sort of the exciting capital growth and expenditure environment that we've been used to, and you couple that again with the banking data, and you look at some of the numbers we got this morning, right? And there's, again, a strong headline number, but really when you look at the overall capital expenditures, it's down, and it's just not how we fuel growth. So a little bit cautious, I think, here, and not surprisingly so, given the mix of credit data and overall kind of, you know, durable goods expenditures, along with okay earnings so far.
Yeah, okay earnings, but I think there have been some real big winners here, Kevin. If you take a look at Microsoft being a perfect example, you look at Chipotle, that's hitting all-time highs today. It seems like the consumer's still doing well at this point. Typically, when we see a recession, we'll see a pullback in earnings from major companies, 10 to 20%. We haven't seen anywhere near that. So the recession calls, are they warranted?
Yeah, first thing. A note to CEOs out there. Learn how to give an interview based on Brian Nickel from Chipotle. His interview at post their earnings. I think that stock rallied because of the overall tone of his interview. It was spectacular to listen to, and I'm not surprised the stock rallied based off that. But Tom, here's a macro thing to watch, because I think this is what we're going to see more of coming down the pipeline. It's higher yields, but lower U.S. dollar. Right. That's what you're seeing today. Our yields working their way higher to higher levels, but the fact that other countries have more work to do on inflation puts pressure on the U.S. dollar. I think that is something. And now, what does that do for the overall market? Higher yields, lower dollar. I'm not sure. Right. It could be a wash, all things considered. But that's what I think investors should start to learn to interpret what that means, because I think we're going to get more of that in the near future, because we're close to the end of our rate hikes, and other countries, Europe in general, in particular, is not even close to being done. Yeah. So I think that's something all investors should keep an eye on: yields versus U.S. dollar.
Yeah, and the dollar's fallen pretty broad-based at this point. That's going to help some of these tech companies also. But Nick, when you look at some of the earnings that are going to come out, if you push away big cap tech, because that's been driving the overall equity market at this point so far this year in 2023, if you look at the earnings that are coming down the pipeline, these are industrials, these are maybe materials companies, maybe those staples, and some of the discretionary items. CMG did pretty well. So the consumer's still strong. Are we, basically pushing aside the fact that, hey, this soft landing is going to happen because the consumer and the data is telling you that it is?
Well,
I'm
go to a Chipotle
not looking for a percentage necessarily.
Here in Chicago, and I foolishly did not place an order ahead of time, and I just had to keep on walking. We couldn't even get in the place, so
close it out.
I'll give you a first-hand anecdote that the business
at a resistance.
is doing well there.
So
some of these other companies.
We'll see what happens at 1770.
McDonald's, right, really strong, and a nice interview there too.
If it gets up there.
CEOs
I might be holding this overnight.
About, Walmart's doing well. Look at sort of the names that do well.
I brought my cost basis down with that last buy a little bit. I didn't pick up as many shares as I originally picked up. Not a whole lot, but
it's also not fine dining, right? So I think really, where this goes throughout this earnings season,
right
over
here.
the next
So if we can move to there, that's 13%.
Not just from an earnings perspective, but from a consumer standpoint.
But that might not happen today.
Extremely high-end consumer has held up really well so far. In addition to the sort of low end. So are we going to see cracks in that consumer base? And I think if we are going to see that, we're going to start to hear it, Tom, from the companies you just mentioned. And I think the scary part, if you were to paint a scary story, is you see this corporate
SPY meaning engulfing candle on the hourly.
Very hesitant to make capital expenditures. You see job cuts, not job gains. So pulling back, tightening the purse strings. That's going to translate through to the consumer at some level. We just don't know what yet. It hasn't happened yet. You guys are absolutely right. Yeah. But I think we're going to, these sort of, mid-tier companies, not the highest flying tech names that make every headline, right? The consumer staples, some of the other retail names.
Yeah, I said I bought like 10 minutes ago down here. Let's get that RSI divergence.
All these names filter out.
And
I
then
you're going to hear a sense of
a little volume tick. I bought like right here on this candle, and then a engulfing candle.
Turmoil in the U.S. You guys just hit the fact that we're
picked
not
up another
even close to
5,000
done with rate hikes in Europe. We think we're almost done here, but a lot of the economic papers that are out there suggest that to really get inflation under control, we have to raise rates to that level of peak inflation. So if we get to 5 and inflation was 9, there is argument still, like Bullard made a couple of months ago, that rates may need to go higher or stay very elevated for a long time. We just don't know yet. Markets are assuming in pricing that we're going to go lower, but we don't know. So if rates really do stay higher, and you sort of see this corporate pullback, that will translate through to the consumer. And I think that's a potentially tenuous point to be going into what already looks like a slowing economy. We didn't really touch the durable goods stuff from this morning, but headline number like, wow, huge, right? But you take out transportation, you take out the Boeing number, the airline, the planes and the cars, and there's a lot of negativity in that number, right? There's just really not much expansion there. And how does that all translate through? We don't know, but I think there's a sense of cautiousness you're seeing here in the markets.
Yeah, definitely. And the expectations for that rate hike are down to about 76%, according to CME FedWatch tool, which is off of the levels we saw above 80.
Chipotle RSI, just so you know, 85. There's one we don't see very often.
On a technical basis, that's considered overbought.
Just a tad bit,
we all know that they can stay overbought for longer than a lot of people expect. All right, guys, let's take a quick break here. When we come back, we're talking another big
red candle on SPY.
Cap tech name that's going to report earnings after the close. That's Meta Platforms.
That is
77% so far this year. That's coming up next.
Is that news? Thanks guys for your likes. For 34 on the day. Appreciate it. SPY's selling off here. Weird. Deaths in China have outstripped births for the first time since the 1960s. Weird. One potential bidder for the assets said an ordinary sale was unlikely because it would have to take place at such a large discount to book value that it would worsen First Republic's losses. Meta has grown time spent faster than TikTok for the past 5 months, slowly causing the still large gap. Those are pretty big red candles. It's there's the gap. TikTok. Disney filed a lawsuit in Florida against Ron DeSantis and Oversight Board. I checked Disney when that came out. I didn't see any reaction. Venture capitalist funding into Web3 startups plummeted from $9.1 billion in Q1 to $1.7 billion in Q1 from 2022 to 2023, with the number of 9-figure deals declining from 29 to 2 in that time frame. Netflix reportedly lost 1 million users in Spain over password crackdown. Investor Peter Lynch says he doesn't own any crypto. Million users. Netflix lost 1 million users in Spain. The password crackdown. Well, looks like it wants to get back to VWAP. Little false break to the upside there. It's doing it both ways. Ripped up to resistance, false break, and down. Yes, Netflix in Spain.
Tom, because the damage from the Apple ad issue. Right, what they did with ad tracking and things like that. The question is, can they ever get back to where they were? But this company makes money, and any positive story about digital ad revenue is going to be really positive because 91.9%, Tom, of their revenue comes from digital advertising or advertising in general of all kinds.
Yeah, and let's bring Nick back in here. Nick, you know, to Kevin's point, 3 billion monthly active users, just over 2 billion daily active users. So they got eyeballs, and that's what advertisers want here at this point. Give me your quick take here on Meta Platforms, and you got an example trade for us.
Yeah, you know, guys, I always go back to sort of the haves and the have-nots in this environment. We know that the digital ad spend is pulling back. You know, Google showed us that you can still make money in this environment pretty well. And if you're going to advertise digitally, right, you probably want to go where the most eyes are. And you know, Facebook still tends to be that location. You know, that number is awfully tough to move. We always say there's 3 billion users and 2 billion active. I mean, it's a big number to move the dial on, right? So getting a little nuance there from them and how that's playing out, you know, I think will be fascinating. And to your point, Kev, on making money, I mean, 27.5, you know, plus in billion in revenue. $2 in profit per share. I mean, I think it's a pretty impressive number that we're you know looking for from them. I just worry a little bit here, guys, that the cost cutting isn't necessarily going to translate into additional EPS, right? You think about the numbers that they're wielding here and the costs and the jobs they've cut.
I think we can see 100% day still.
And they've gotten
I mean, today already we've seen a 36% move from bottom to top,
from his
pre-market to the high of the day.
But they haven't completely discarded, right?
The range is getting larger.
Costs associated with the metaverse and the cash burn there, and you know they still
move
believe that's the future.
From
He's
what
just,
level?
you know, he's doing what markets want and being quiet about it. To your point, Cal, but this hasn't gone away. So what is the cash burn? What are they spending on? You know, as the revenues potentially continue to slow.
I don't know, Damien. I mean, not necessarily.
I mean, I think marketing is a place that companies
price might go up at OTC.
On Facebook, and yeah, they're the biggest.
It's an auction.
But, you know, pullback is pullback.
Sounds like so. Highest bidder, basically. Longer they wait to lock in the deal, more pressure will be from
I think
their buyers.
They could potentially pull back if those numbers come in a little bit light. So you'll see that kind of sets up my my trade a little bit here. But you know, I think from a user perspective, the other thing, you know, are they going to talk at all about the actions that Tom mentioned around the advertising and how that's being tracked by Apple, the fake accounts, all that stuff? Is any of that going to come through, or is that all just sort of you know, a wash now, and nobody really cares anymore? But I'm not sure. But you know, those active users, you know, are they taking the bait on that marketing? Right? Are they purchasing? Is there really flow through there? I'm excited for this call because again, I'm sort of the stance that we are seeing a bit of a broader slowdown, and you know, is Facebook subject to that, or are the cost cuts enough? And you know, we'll find out this afternoon, guys.
Yep, Nick, you got an example trade here that sets up for that in case you know somebody's a little bit more bearish on this. Go walk us through it real quick.
Yeah, real simple trade, guys. Right at the money, 215, 210 put spread. Buying this, it's right about a 1-to-1. So you're paying about $2.50 right now, real time for it. I think we have a 260 example, but it's right around 250. So it's about as simple of an example trade as you can set up, because the cost of this trade is literally right in the middle of the spread. So it's a $5 wide spread. You're paying about $2.50 for it, which makes the risk return, you know, very even. You have $2.50 of risk if you get that and it goes to the upside. You have about $2.50 of profit if it does sell off. The reason that ratio is so good here is because you're right at the money. The stock right now is trading almost 212 about. So you need a little bit of a down move. So you're seeing a much larger cost there, but the profitability 1-to-1 is because you do need that move lower. You know, the reason I kind of went at the money here is because they're getting a nice boost. You know, we already mentioned they're up a ton, but they're getting a nice boost from these other large tech companies that have already reported, right? They're up about just over 2% now on the day. They were up like 3.5% on the day. So, you know, they're definitely, momentum trade here to the upside. So, you know, all they would really have to do is give
market cap is silly cheap now
for this trade to be profitable, and ultimately hit that max of 250. So very, very short-term trade, truly an earnings play here. Just looking for a little bit of a pullback based on the fact that they've already gone up so much this year and so much based on the other companies that have already reported. Again, this is a truly directional example trade here. So the risk is if there's we sit where we are or move higher. This is definitely a directionally bearish trade, looking for a little bit of a pullback, giving back today's gains.
Nice, still hanging out right up here.
Yeah, let's take a look at this, Kevin. Nick laid it out well for us. April 28th weekly series, so expires in just 2 days short term. Buying the 215 put, selling the 210 put, paying 260 debit. There's your risk, $260 per spread with a break even of 212.40. You need less than a percent move to get down below 210, which is what you want.
Yeah, exactly. This only has it's a relatively small short delta. It doesn't have a lot. It's basically flat theta. It's flat vega. It's a pure downside play in meta platforms that you're spending $2.50 to make about $2.50, Tom. It's just you're looking for a move back towards 210. The break even is about right here. Yeah. Right? You're not really far from break even. So, this is one you do need a move for it to be more profitable going forward. But this is a pretty fundamental long put vertical.
Yeah, it's an example that if somebody thinks that the stock's going to go down a few bucks or more post earnings or tomorrow, this might be a way to play it to the downside.
Yeah, the move is $18. You don't need
false breakout, false breakout.
Max out.
All right, good look at that example trade there.
Already capped 58 million.
But we're going to take a break here now. Thanks to Nick Theodorakis, Financial Risk Management Director at TD Ameritrade. But coming up after the break, Folio is going to join us for a discussion on Roku, which has moved higher by over 40%.
Yeah, those CPUs have to face right way.
Earnings after the close.
Just a tiny little arrow on it.
Coming up next here on Fast Market.
Oh, there's a little weird candle on BBY. Did you put it back on and flip it around? Some old lady sent me a picture. Just a little pop to VWAP with 1.8 million volume. You need to change it. If you're just flipping it around, that's fine. I mean, you put that all in there new, right? That's what you put in there, it's fine. Nice. Such a simple little rig. Cool. All the room for activity still. Wait, is this your power supply right here? What is this whole thing? Oh, that's your air cooler. That's crazy. Is it just like a big radiator? I've never built one with an air cooler. Heatsinks Be Quiet brand. Julian getting sucked in. Power supply is hidden in the bottom. Like, yeah, I see it. Not hidden from me, man. Oh, your exact average. 50 cents. There's your gap fill at 44 cents. Highs coming down here. Heatsink with tubes. Let's see. Air cooler for the CPU. Jeez, false breakouts to both sides today. Some range moves in between. I think the momentum's to the up, so I'm holding these losses, unfortunately. My average down on a VWAP. Best here at 406.
With the right tailwinds. You know, this is a company that was chasing the content business, the original content business, pretty hard, dumped a lot of money into that. I don't think they got a ton out of it, especially considering the competition in that space with Disney, HBO, Netflix, on and on, a lot of competition. So they've transitioned, I think, out of that pretty well and really focusing on where they're the most effective, and that is on the software and now the hardware side of the business. And, you know, this is a company that is now manufacturing its own smart TVs, which we think is a really good move considering where the consumer is headed. We're really seeing the consumer move away from the devices like the Amazon Fire or the Apple TV and towards smart TVs. And Roku, with its software advantage, is an enormous interface advantage.
There's VWAP on SPY.
Device on your
pretty
wall,
big sell-off here.
It will become a lot like Apple has with the iPhone in your pocket. It's just a platform for the company to continue to print money. So we like Roku's long-term prospects here. Short-term, we think the stock's probably priced about right, but in for some serious volatility on earnings as a possibility.
Yeah, Andy, you know, the expectations are pretty low coming into this earnings. And
yeah, Gene, I mean, with Chapter 11, it's going to get delisted. It's not going to stay on NASDAQ.
It seems to be firming up here with the rest of the market.
To me, it was good that they announced it in a certain date.
I've done about Roku, much like you're seeing kind of an evolution
now we have a timeline
of some of these CEOs of these big companies. And one of the statements they
go through the Earth score first. Just go on the opposite way.
That they believe will have a higher return on investment. So basically,
internet wizard,
more profitable quicker, right? Than before. So they're not making the long-term bets anymore. They need, like this market is asking for, profitable activities sooner rather than later. Is any of your data seeing that? What do you see? Remember, I asked you once on Roku, I don't know about these companies. I'm not good at this, Andy. Just tell me who's going to be the winner. Is Roku still going to be the winner?
Look at that wick on SPY. Oh boy.
Roku definitely looks like the winner. I love the move into the smart TVs. I think they have the best interface, the best software. Consumers tend to agree with that. You know, the biggest threat, I think, for Roku.
Well, inverted head and shoulders now on the 5-minute here on SPY. Probably showing up on
I think that could be very, very
hourly a little bit too.
But absent that, I think you know,
30-minute you can see it
could become an acquisition target. I think it's a good long-term play and definitely the leader in the space.
Yeah, I'm gonna start averaging down on these longs.
TVs, they want to stream.
You know, they got
70 million accounts that are active. That's an enormous number of people that you can monetize more and more every quarter, and I think Roku's on the path to try to do that.
And Andy, you know, as you know, it seems like
it's definitely a risk for shareholders.
A little bit from the hype that we saw during the pandemic. But when you look at Roku, they're coming out with their own branded smart TVs. You mentioned potentially some competitors that come in the space, but as people move away from typical cable, which is below 50% of households now for the first time since I think cable was out over the last 10 or 20 years, when you look at those kind of data points, you said that, you know, you guys have a longer-term view on this one, which is positive. Is that what playing out is, hey, there's going to probably be some chop here to start with here?
Yeah, I see that level down here. 404, what the heck?
And I think that's what the key point that a lot of investors miss is they're growing on a quarterly basis.
450?
Yeah, they're growing on a quarterly basis.
Making a new low.
New users, you know, by the millions
on an annual
basis. And, you know, those users are using the product a whole lot. I think, you know, their streamers are averaging watching 4 hours of programming a day. I mean, that's an enormous amount of time to have someone's eyeballs on your product, and there's a lot of ways to monetize that. The ad market looks a little soft right now. There's definitely some headwinds in the short term, but you know, when you're best of breed in a growing segment,
if shorts don't think their prices are going to go any lower, they're going to close.
You know, eventually,
that's when you're going to get some upside.
And
so
from now until then, it's kind of a
it's not like, oh, now we're on OTC, you can short it heavier.
It's trying to get it right, and that's why you see these enormous swings on earnings.
They're already well below market value on it.
But I think the
so
long-term
it's sketchy holding a short down here.
Itself is very positive.
But it's only worth as much as someone's willing to pay for it.
Score for this one going into the report?
Yeah, neutral or slightly bullish.
And
I don't
so
think
they're trying to figure out what it's worth right now in the court.
Ahead of yourself too
much
with
the bidders.
Leverage on this. I think this is more one where you want to watch and understand and listen and understand where the company's going. And if you get a move,
yeah, I mean intraday it's still 10-15%, still work. Like this RSI divergence worked and that engulfing candle signified a bottom. But with like news keep coming out, it's not like set up yet for TA to work. There hasn't been like a setup.
All right, that's Andy Swan.
Basically, the last setup we had, I started buying. It just didn't sell in time.
Yeah,
it was this.
I think
this Monday. I started buying this Monday, if you remember, and then this Tuesday I bought in heavy.
The implied volatility is elevated going into the report.
This Monday.
Option markets
this Tuesday bought in heavy, and then this
11,
day I
move
realized some profits,
but
big for yeah, I could have realized like
Tom, the
I don't know,
front
70
expiration is 200 implied volatility. If you go out to the regular monthly,
I thought it was in a longer uptrend, but it didn't. So.
Right around 90, so more than a
saw that in shoulders here, didn't want to believe it, I guess, and then now
that I looked at for today.
So
it's a
that was the last like real technical signal I saw.
But it's got a diagonal kicker in it, which means my long
now the momentum, I mean, it's just down, but this is again from news, so
the May 19th.
Reactions have overreactions, and I think this is an overreaction to news that we already thought, or already knew was coming. It was going to get delisted. Can't trade on NASDAQ. Under Chapter 11 protection.
So about an $8 move right there.
Didn't know when it was going to come.
One of the April 28th 68 calls.
Yeah, to me it's nice to know an exact date.
There's a diagonal component of the 57.65.
Just simply looking at the market cap where it's at now, though, like
component to it.
Yeah,
buying one, selling two,
cheap.
Buying one. Still insulated
even for OTC
exposure though, because you're
like,
long.
Whatever the market.
An $8 call diagonal, and then short a $3 call vertical.
Right, let's break this example trade down here. May 19th monthly cycle, 23 days.
No, I won't change anything. We probably already bought the whole float like twice.
57 strike call, and then against that, in the
market maker will provide liquidity
series, it expires in 2 days.
On the show, they say given liquidity is provided. Liquidity is always provided.
68 strike calls. For a package, you're paying about $3.80 debit for that. There's your risk, $380 per spread on
get
that.
To zero. I mean, zero is
you want this stock
basically OTC market and the zombie stock.
On this one. Now, you've got some assignment risk on your short.
It's not actually zero.
2x1 call vertical that you have in the April 28th weekly cycle on that 65.
Because then the stock keeps trading, but it just has no value, and they can hold this huge position of profits that they don't have to close. And since they don't close it, they never realize it, so they don't pay taxes on it, and they can use that huge
on this type of trade. Kevin,
amount of profits that aren't realized as collateral. They can get loans with it. They can use it for margin.
Something like this is you're short 2 of the 65 strike calls in the near term, long 1 of the 68s.
That's why you don't have to pay tax on it, because they never realize it.
But if those were to go out worthless, say the stock was at 64, and then you're long,
you've got 3 weeks on a 57 call. Right. If you get a slight move to the upside, and the 65s and the 68 go out worthless, you're going to have a chance to roll this into a nice,
a
bullish position.
No,
Roku,
I mean,
where you're
Sears trades in OTC. That was like the biggest company in the United States at one point.
That's there's still about 15 deltas on this trade, so you do have risk in the 360, 370 that you're paying for this spread. So there is some risk out there. It's a bullish play.
Revlon in there.
But if you get a move to the upside and it stays at or near 65, you could have some fun with this one.
Yeah, because your 57 call is going to react well, but then your time decay on your short 65 calls, that's why the apex of that profitability is at or near that 65 strike. So that's the whole idea or concept on that one. And that's about that 1 standard deviation move to the upside that you're looking for in Roku, but definitely a bullish theme on this example trade. All right, Kev, that's going to do it for us. Thanks for taking a look at Roku and that example trade. But coming up after the break, we're going to talk another stock that has earnings after the close, or tomorrow morning, actually, and that's MasterCard. They report in the morning.
Why isn't Birds on OTC? So they got NASDAQ gave BY OTC or delisting date because they're in Chapter 11. It's not necessarily because they've been trading under $1. Birds, there's a lot of stocks that have traded under $1 for much longer than the time period. The stock just has to come over $1 any time in that time period, and it resets that clock. I think is 90 days, and then at the very end of it, they can file an extension, and they almost always get granted the extension. I don't even think Birds has had to file an extension yet, because that's usually a pretty bullish. That usually actually causes a rip, the stock. So if they were to file Chapter 11, then yeah, they would probably get the same delisting warning at some point shortly after that, and so. But BY getting delisted is not from the share price. I mean, that is a problem, but from Chapter 11. I think I just explained it, trader.
MasterCard had earnings.
I set up a little bear flag here.
He's the host of the Future Show here on the network. Ben, looking at the markets right now, we're starting to see some more weakness from when we started the show. 2 of the 4 major indices in the red, but they're trying. The S&P 500 trying to hang on to gains. I don't know if it's going to.
Yeah, we're still off the earlier lows here, Tom, and as you mentioned here, trying to recover, but rolling over as we head into the late day trade. Early, we saw the SPX down to 4061. The Dow bottomed out this morning, 33,360 before recovering. The Russell, I saw it down to 1734. Here you can see kind of a mixed bag in terms of net change. 2 of the 4 majors in positive territory, 2 negative, and in line with the trend that we've been seeing, kind of an indecisive market. But look at the standout here, that third line, the NASDAQ, currently trading up 1.25%, the pillar of strength. And again, this comes after stronger than expected earnings from Google. We're talking Microsoft, very appeasing in terms of expectations for investors. We had seen some strength into these results, and again, they were, well, not necessarily the kind of numbers that would force one to reject the recent bid activity. The NASDAQ's been taking out the February highs, holding up above. We had some eco data today, which kind of fed into that, right? Better than expected GDP, or I'm sorry, durable goods orders ultimately. We've got some data next week, but interesting relationships recently. Yesterday, stocks down with rates down. Today, we've got stocks up with rates up. But again, I think that's starting to weigh on the indices today as rates higher here starting to come off. Also, I did notice Bitcoin with the bid activity we've been seeing in the NASDAQ. Bitcoin's seems like the tech-heavy index on steroids, right? It was the first one of the 2 to take out the February highs. It did it back in, what was it, March 14th. The NASDAQ took out the February highs back back on the 21st of March. So keep an eye back up to 30,000. And last I looked, there it is, up around 8% on the day, still hanging out near that gap that we saw from mid-June last year. But yeah, risk on tone earlier today, kind of shifting and kind of settling into more of that mixed type price activity that we've been seeing here in markets as of recent.
Yeah, I saw that Bitcoin move, Ben. I didn't know if it's just people using it as a safety play, because sometimes when we see Bitcoin going up, it's that risk on mentality, which kind of pushes it higher. So we'll have to wait and see on that. Maybe using it as a safety gauge. We got the dollar down also and gold up a little bit. All right. Thanks to Ben Lichtenstein. He's the host of the here on the network, breaking down markets for us. But now let's bring in George Tillis. He's senior markets correspondent here on the network. George, we're talking card swipes here. We're talking MasterCard ahead of earnings. Visa's relatively flat after their report, George. And, we've seen some consolidation in some of these stocks recently as far as credit cards go. But when you look at this is all about the swipes, right, George? It's the health of the consumer, right?
It is. That's the thing about MasterCard and Visa. I mean, they effectively run a payment processing duopoly, not just domestically, but globally. But you have to consider financial risk and balance sheet risk, much different than companies like Capital One or American Express, which those two companies really rely on the commercial paper markets for their funding, as well as have effectively loans on their books. So, if you look at MasterCard and Visa, they don't have that similar financial risk profile that banks and lending institutions or credit card companies have. So that's important, especially in this market environment with higher rates, higher rate volatility, and some of the challenges that are going on in the lending markets. It really is a pure play on the consumer, merchants, but also not just the private sector, but the public sector. The government uses Visa and MasterCard across the board. Everyone seems to use it. I mean, over $3 trillion in payment volume for MasterCard last year alone. But if you look at the earnings, they're actually expected to be slightly down compared to the same quarter last year at $2.71 per share, down about 1.8%. But sales are expected to be a nice clip to the upside, close to 10%, around 9%, at $5.64 compared to the $5.64 billion, compared to $5.17 billion for the same quarter last year. The other thing is their estimates for U.S. payment volume is expected to inch higher by 2% to 11%, and even international, which was down about 4% year over year as they reported quarterly report last time around, they're expected to have that reverse to 5% growth on a year-over-year basis for the quarter that they're expected to report. So overall, this is a steady-as-you-go company. It's not subject to the same financial conditions that banks and lending institutions are. And it seems to be a company that's still growing its top-line sales despite a fractional decline in earnings per share for the quarter that they're expected to report. So it is truly a barometer of the economy, the consumer. And overall, it's up 6% on a year-to-date basis, which isn't too bad, comparatively speaking, considering the stock also pays a pretty hefty dividend.
Yeah, they're that duopoly, right, in one of the best businesses in the world, and that's card swiping right now. That's working out pretty well. All right, thanks to George Tillis, senior markets correspondent here on the network, breaking down MasterCard for us ahead of earnings. Thanks, George. Kev, if you look at it, implied volatility is at or near 52-week lows going into the report. Yeah. Visa's relatively flat on the day.
Oh, I just have shares on BBY.
Big outsized move
I picked up shares
in a pretty high-priced stock.
After hours and then pre-market and then some
and these two are
down here.
So identical in what they do in the businesses they run and how they make their
money. I was a bit hasty on my first pickups in the extended hours.
Swipe. Visa rallied slightly after earnings and now is lower, Tom. So you got to watch how MasterCard's trading based off that. I mean, their numbers are solid, right? Their gross dollar volume up 5.9%. Net sales up 18% year over year. Free cash flow $10.1 billion. The numbers are all solid, but what are they susceptible to? A slowdown in consumer activity, right? If you're fearing a second half of the year slowdown, the guidance may be somewhat soft or conservative. That's, I think, the overall concern. Right now, everyone's talking about the consumer being fairly strong. What is the next 6 months? That's how MasterCard stock will trade.
What gets offset? That was my question going into this. Consumer spending, right? MasterCard doesn't care if they're buying a new dresser.
But here's their big numbers, Tom.
Or traveling.
Yeah, here's their big numbers. Cross-border fees from international travel up 30% year over year.
Yeah.
That's where the numbers jump off the page. People are traveling, you know, across borders, and that's where the numbers are starting to are recovering, you know, in big numbers.
Yeah, and that's not even back to 2019 levels.
Right.
They've got a lot more runway there. They need some capacity increases from some of those airlines. But Kevin, I wanted to look at a strategy that kind of takes advantage of the move that Visa had. This is just an example of how you can leverage the option market to make something that's relatively neutral if you don't think the stock's going to move very much in a really short period of time, an earnings type play. So I looked at an short iron condor here, Kevin, in the April 28th
plans to sell them for a profit.
That expires in just 2 days. Selling the at-the-money
Keeping it simple. Don't need
strike
to
on
be
the call and the put, the 370
anything more than
call
that.
and put. And then to help protect that, or make it risk defined, buy the 357.5 strike put, $12.50 out of the money to the downside, and then buying the 382.5 strike put, $12.50 to the upside on that one above the at-the-money price. You're collecting a credit of $8 on that. That's going to be your potential reward if it pins 370 at expiration over the next couple days. You've got risk on this, though. If you take in $8, you've got about $4.50 in risk, or $450 in risk, outside of either 357.5 on the bottom, 382.5 on the top. And your break evens, Kev, 362 and 378. This is a pure neutral strategy.
$12.50 wide call vertical, $12.50 wide put vertical, collecting $8. There's the risk, there's the reward. If it stays near 370 at or near, you get paid. If it moves outside, you've got about a 2-to-1 risk ratio there on that one. So you don't want a big move. You're hoping that the move has already happened with Visa. That's where the profit comes in.
Yeah, and it's a high price stock. You do have risk on this, so you want it to kind of remain neutral post earnings on this example trade. And the idea is you collect $8 and that's what you get to keep. But that would have to mean that the stock pins 370.
Trade them for real money.
That's a pipe dream.
Yeah, that's a pipe dream.
Let's not go there.
The idea is it remains neutral. Maybe you get to buy that back if the market's open, liquidity is provided. You can buy it back at a cheaper price because the event risk is gone and time decay works in your favor.
Got a little invert head and shoulders here on the 5 minute.
If it were to go from 8 to 4.
Like to see a VWAP break.
Right. All right. Good look at that example trade. Short iron condor, or iron butterfly as we call it once in a while. That's going to do it for Kevin and I today here on Fast Market, live from the Morningstar Investor Conference. Stick around, though, right here on the TD Ameritrade Network. Next Gen Investing is up next.
Shortly thereafter. Morning, Jay from the Bay. 2 days left? No. 2 days left for what? You guys talking about mini fridges and closets. Oh, he is. Oh, I can change his name back. 1 day? I thought you had to wait like 90 days. That's nothing. Filing Chapter 11 means BBY can finally restructure, and through this form of bankruptcy, they can free themselves of the covenants through courts by proving they did everything possible to stave off bankruptcy. SPY's coming down here more. Wanted to kind of see it hold here for an inverted head and shoulders. Last draw be 405 area. Still think we're in a bounce just because that engulfing candle, the support that we ripped out of today. Having a little pullback before more. Hopefully, longer term, it's definitely in a downtrend though now. Daily. That's what's scary. This is important because now the creditors that are owed money cannot claim fraud. Many recent Chapter 11 cases involving retail debtors have embarked upon liquidation of the debtor's assets, particularly inventory, shortly after the bankruptcy filing. The debtor in possession financing is almost always provided by the existing secured lenders, and typically requires the debtor to obtain court approval for a truncated sale process. While it's not uncommon for creditors' committees to object to these DIP orders as sub rosa plans reorganization, these objections have routinely been rejected by the courts. Bankruptcy courts will scrutinize a proposed Section 363 transaction to ensure that both the debtor and the proposed purchaser acted in good faith. It is in the interest of the buyer at a Section 363 sale to procure such a finding to limit appellate review of the sale. Really? I don't know what that is. Interesting. If you think about the timeline events and how quickly everything has been legally filed, then you'll appreciate that things are going as planned. I think this is because they have a buyer on standby, a stalking horse bidder. After declaring Chapter 11 on April 23rd, BBY immediately released an 8K which revealed that they were able to secure debtor in possession financing with 6th Street Lending. That is true. They did immediately get show that they had approval for lending in bankruptcy. That kind of stuff usually takes time, not mere days to execute, then go straight to court. SPY's bouncing here off VWAP. That is interesting. Yeah, it is interesting. They immediately had financing for their Chapter 11. I came across an interesting read by a top-rated law firm called Distressed Mergers and Acquisitions, and within the 216 pages found many references to Carl Icahn and his strategies for acquiring companies in Chapter 11 bankruptcies. From page 96, Carl Icahn worked with a group of buyers that acquired debt in multiple classes, known as cross-lien group. Icahn held a minority stake but also held debt notes. His first attempt to acquire West Point Chapter 11 proceedings, the court turned him down. However, in the appeal court, the decision was overturned and Icahn succeeded in acquiring the home furniture store, which is now known as West Point Homes. Senior secured debt notes via debtor in possession financing gets first priority in a bankruptcy proceeding. This is what we're reading from Murdoch in Discord, especially in Chapter 11, and can be used as leverage in the acquisition. Icahn did it again with Las Vegas Tropicana Casino. Tropicana went to Chapter 11, Icahn emerged as a stalking horse bidder and won. He even provided the DIP facility to help move things along. I'm just curious on how many of these were the shareholders made right, the original shareholders of the companies. I don't know that. If he says. At this point, you can see that Chapter 11 is very bullish for Bobby, and it was used by Blockbuster 2, which Icahn had once acquired. Icahn had once acquired. He bought Blockbuster at one point? share this, DD. This was written by Edwin Barnesek. 2 times every 14 days. They give you too much freedom. Next court, I'm not sure. Let me see if I can find out. Yeah, I need to be on that so I can watch on Zoom. I don't know if they even I don't know if they scheduled another one yet. It was kind of confusing. He was like going on vacation, and I don't know if that had to do with the next court date or what. Wicking back down there to VWAP. I don't know if there's something today. Not that I know of. What happens to your shares? Nothing. They're just traded on a different market. Eyes coming down here. And
they seem to have always what seems like kind of out of this world price targets in both directions. And then you have those like this Jefferies analyst in particular that try to assess things in real time, and you find that they just kind of chase the stock around. They get more bearish when the stock already makes its move. They're more bullish chasing it up to the upside. So take it for what it is. I think some of the logic behind the note here is it makes sense. Talks of resets of expectation, talking about how in general automobiles are not a high margin business, and so Tesla's sort of been unique in that sense, that it's been able to kind of grow but maintain those kind of lofty margins relative to its peers. And for the first time, making some of these competitive moves to spur demand, that's going to squeeze its margin. It's not really been Tesla's MO. So we'll see where things go from here. Going to say down about though, because we have a couple pre-earnings looks here left on our list. First one is Meta. This is a pretty big report.
It is a pretty big report, and Meta today also snapping its 7-day losing streak with shares up pretty substantially on the session, almost 2% following, or ahead of its earnings, I should say. And we are expecting now revenue to come in around $27.6 billion. This would mark a 1% drop on a year-over-year basis. And globally, it's estimated that digital ad spend is slowing. So this is also expected to weigh on Meta's results. We are expecting adjusted earnings to come in around $2.02 per share. Would also be lower on a year-over-year basis. But another really key metric to Meta's report is its monthly active users, which did come in around 2.96 billion at the end of 2022. This was up from 1 quarter earlier ever so slightly, but did translate to year-over-year growth of about 2%. However, the average revenue per user generated has been weakening for the last year or so. Some are blaming us on the fact that they are expanding very heavily internationally, and this will translate into lower revenue per user. But I think also it could be attributed to the fact that we are seeing really stiff competition from names like TikTok. We are seeing ad spend obviously be a weaker spot for Meta platforms. So I'd say the year of efficiency, will it be able to hold, Alex, through this earnings event? I would say Tesla, or Meta is one of the more important names we're covering really throughout the week as far as earnings, because this name has been the clear outperformer of the group. Shares are up almost 80% on the year.
Big move down there.
It'll be one to watch for sure. It's been volatile around earnings in both directions over the last year, but
on SPY, we'll see. It's just below VWAP.
Most of them, Jenny.
Red candle's pretty large, though.
Growth, we'll see how that does with Facebook's kind of core blue platform being a little bit disappointing, but things like Messenger and things like Instagram, particularly Reels, may boost that a little bit, help there. But we've also seen the price of the ads come down, so we'll see if that starts to stabilize. But then final things, and this is something you pointed out, it's always been user growth with these companies. So are they able to continue to, that sort of low single digits growth in user growth? And then finally, We talked about the year of efficiency. We've seen the layoffs. We've heard about the cost cutting. How's it actually playing out? What is that going to mean for the margins? We just talked about Microsoft. Microsoft's been able to expand margins with sales growth. What is Facebook or now Meta?
My goodness.
Gonna say up vote for this one. Definitely have our eyes on this one after the close. Last one here.
Yeah, I suppose it's a good sign. We've got a little inverted head and shoulders here on the 5 minute.
Sorry to cut you off, but Roku is actually having a
it's consolidating, so it's, you know, buyers and sellers are happy at this price. Want to break out to the upside, be bullish.
Substantial move lower, but
the sellers are exhausted and the buyers
up about 52%
buying it
from
up.
its low, down about 12% for the month. So an interesting technical picture into this report today after the closing bell. And investors are hoping that they get some clarity into the hot space of connected TV or CTV advertising, which is arguably one of the fastest growing in digital advertising, but growth has slowed amid the overall reduced ad budgets we're seeing from corporations as well as just users right now cutting back on overall spending.
You may ask,
Roku's results,
and I may
which are
not
highly
answer.
tied to the performance of its connected TV advertising
Someone is
business,
definitely having fun.
will hopefully provide some clarity on that space. Their fourth quarter revenue, though, did barely come in higher on a year-over-year basis, so their growth has been pretty substantially slowing on a year-over-year basis. They're facing relatively difficult comps, I'd say. They also are seeing platform revenue, which does represent revenue from their share of transactions and subscriptions, also declining on a year-over-year basis, Alex. So, and as far as the expectations and the chart, everything year to date looks strong, but when you compare it on a year-over-year basis, things look, I think, a little bit more pessimistic.
Yeah, we've sort of watched the maturation of this company in real time recently, which in they don't grow necessarily the amount of users at the same rate that they once did, but they're actually more effective now at monetizing those users. So we'll see if that's a trend that continues. That's sort of been the expectation, that the user growth is going to sort of slowly steady off, but they've gotten more effective at monetizing through their ads on their platform. So excited for that one as well. Going to say up vote for Roku. It's moved tons around earnings as well. It's not as big of a stock as it used to be, but still tons of volatility priced in.
And I would say actually one of the more important earnings events today after the close, next to, of course, Meta. So we'll be looking at both of these names on the technical front. We'll be diving into some example trades as well. Stick around. Next Gen Investing. We'll be right back.
Glasses will definitely boost us. I think it bumped to $1. I think that could still happen. Master.
things looked here for our chart and trade segment. The upvotes in the last segment, we got Meta Platforms and Roku, both slated for after the close.
Thanks, guys, for your likes. I
think,
appreciate it.
Market participants
37.
We're anticipating a little bit of movement here.
Not bad.
I would say that's a fair assessment, as Meta Platforms has fallen about 4% just this week into their earnings event, but still is up almost 80% on the year. So here to tell us now more about the technical front, I'd like to welcome our chart master, Rick Ducat. So Rick,
before
Meta
OTC,
has been the clear
sure it's
outperformer
possible,
on the year. I would put, I mean, it's one of the best performing at this point S&P 500 stocks across the board
135,
in
nice.
2023. So we have seen some weakness. It was down actually 7 consecutive sessions into today's move higher. So walk us through what you're seeing.
Yeah, the story of this chart kind of begins with those yearly lows like you were talking about, and we're up significantly from that point, about 140% from there, from those lows there, 88. And we can see that during the last earnings event as well, we had another significant, huge gap
Just hold all the way
there.
through it.
So this can be an interesting thing to look out for when you're doing your trading, is when you have a gap up on some kind of large fundamental change, such as earnings or something else, try to look for the bull, flag, or pennant type pattern. In this case, it was more of a pennant. We had a bit of a retreat after a large gap upward, and then a surge back above the initial level here. So this can be a pattern that can be useful to try to identify and learn to trade. Will it work out every time? No, that's not the way these things work, really, but it can be worth keeping an eye out for. So that level that we hit, those highs near 196 after the earnings event, looked important to me because that was A, where we topped out here, and B, about where we bottomed out here after the initial breakout. We retreated back to that level and then rose upward once again. So the 196 level seems to be an important line in the sand. So we also had this channel that formed off the lows, an upward channel here, and the upper line of this channel became support multiple times for this stock when it was trending upward. It also found some support around our yellow 21-day exponential moving average there. Interestingly, if you made a parallel line going across the highs, it matched up pretty much exactly here too. So duplicating lines and extrapolating them toward the highs from the lows and vice versa can also be a useful way to gauge some support and resistance here. Now, the more recent term situation here, we're trading right around our yellow 21-day exponential moving average, and that would be another important level to hold here. These moving averages are
coming down again here.
Resistance during downtrends here. And we can see that below that, we've got our old trend line here still. That comes in maybe around the 205 mark or so. So that could be another point to watch for some support. In terms of resistance, the 224 level, this red dashed line, represents where we had near where we had our old closing highs from the year. So that could be another key area to watch. Momentum heading into earnings definitely has slowed down from those levels that we had above the 70 mark in the overbought area. RSI kind of bounced around there quite a bit as price was trending upward, but we did manage to stay out of bearish territory. We bounced off of that 50 midline, and we're hanging on a little bit above it. So momentum still for the time being is bullish, but that could all be thrown into the wind once we have this earnings announcement.
Yeah, and Rick, it does feel like that is the case right now for Meta Platforms, because I was reading all these notes today on big tech earnings, but I feel like Meta could throw a wrench in that or add to the sentiment. Obviously, we'll have to wait and see once we get those results. But now when trading this name, Alex, I think to consider the fact that this name is the strongest performer of these mega cap names we'll be discussing this week. So say you are looking to play into some of that strength, but maybe adversely here. Walk us through what you're thinking and then leaning more bearish.
Yeah, the names had a massive run up. There's no question about that. And say you wanted to fade that, seeing that maybe some of this is priced in. Maybe they even have a positive report, but there's just not a lot of juice left to be squeezed in this name, given its massive run up. Of course, that's just one line of thinking. Rick had highlighted the 196 level. One of the closest options to that, to the downside, is the 197 and a half strike in these. So I looked at a 197 and a half put calendar to the downside, looking for a modest downside reaction. But the beauty of this, and this one's just week over week, so it's selling this Friday's, buying next Friday's for the options, very much a true earnings trade. But the beauty is say you see 195 is to the downside a better target, or the market maker move of about $18.50, maybe that target's closer to 192.5. You can simply adjust it as necessary. Those are bearish versions. There's also neutral versions and bullish versions as well. But with this strategy, the debit's spent, so in this case 85 cents, correlates to $85 in risk, is the risk for this trade. And the beauty of it too is the more right you are, the more this one can stand to profit. So the apex of the profitability graph is at the strikes. So you're selecting the strikes on this based off of sort of your price target for the stock. One way of approaching it here, but you can see the downside of this is that you can overshoot it to the downside. So we're going to talk about Chipotle later on in the show, Jenny. We had talked about strategies in Chipotle. Say you wanted to be this kind of strategy in Chipotle, well, you probably got way overshot to the upside. So you would have had a bullish strategy, and then it would have went too far. So always know that with this, there's risk even in a bearish strategy that it goes too far to the downside on the put calendar, that you can actually not be profitable even though you picked the direction right. So with this one, you're actually picking a spot more so than you're just picking a direction.
Right, I think it's important to be careful of that because we have at least thus far seen outside
Yeah, I saw CXAI.
moves, really what the market has been pricing in terms of the market maker moves. Now, to shift gears here though, our next name is Roku. Roku actually in real time sort of clawing back some of its intraday losses. Shares are only down about 0.4% now, Rick. But this name, I'd say there's two sides to the coin here because it's down 48% off its yearly high, but it's still up a whopping.
I wanted to do cash here puts on FRC, but I think it's too early. There's a lot of unknowns, I guess, with this.
Nowhere near where we once were.
Yeah, certainly a mixed
I don't know.
picture there.
Still gonna want to, though.
The
419.
range that this stock has been trading in here. But the interesting thing about
Jeez,
this
that
chart
IV
is
is
that the range
sick.
that it's been trading in has been remarkably small recently. You can see that on the lower end, this green dashed line around 60.
Oh,
price
crazy
has been
halting this
largely
morning was
contained
weird.
Between that and 66 to the upside,
Jeez,
which
it's
is
hit
our red dashed line. For the
476.
past couple of
At a
months
45%
here.
move to the upside.
Despite this excursion that we had to the downside there,
Oh
price has
my.
been, pretty much centered around the thick red line here, the volume profile.
that would have
point
been a
of
fun day
control,
trade.
The area of heaviest trading according to our volume profile study. We can see that kind of in the more intermediate term, looking perhaps more like
Yeah,
a
I guess I'll
triangular
just try and be
pattern
patient
taking
on it.
place here,
Definitely still in the
encompassed by
downtrend.
these two white dashed lines here.
We have some big
But we did
bounces to
start
the upside,
slipping to the
though.
downside within the past week or so. We broke below the 60 level. We closed below it several times. We're making new intraday lows
Liking
today
down here.
based relative to our recent price activity here. So kind of a interesting situation for this stock heading into earnings here. We can see that momentum, our RSI here, is in bearish territory after bouncing around that midline for quite a while. Kind of a reflection of how the stock was not able to get any directional movement one way or the other here. But now things are definitely, according to this study at least, pointing toward the bearish side of the spectrum here. A couple interesting points to watch. We've got the lower end of our pattern here coming in maybe around 59 or so, 50, 58. And then we've also got this node here to the downside. This is an area of heavy trading. This can be a point of support. If we do break to the downside, perhaps watch around 53 or so for some potential support there. To the upside, we've got our moving averages and our volume profile point of control. There's quite a bit of resistance to contend with if we do break to the upside. That being said, if we do manage to breach all of it, the reaction could be energetic. We could see a move back up to that 66 level, and if we were to break out beyond that, that would really be something to take note of.
Right, and Rick, we are seeing a pretty outsized market maker move here, pricing it around a $7 move in either direction. So that would be a huge move for a $57, almost $58 stock here in Roku, but we will leave it there. Appreciate all the insight ahead of these two key earnings events today after the closing bell. And Alex, now to take a different stance on Roku because it has seen strength this year, undoubtedly not the same degree of outperformance as a meta platform. So looking to lean into some of its recovery, I'd still say,
The
because we're
VWAP
nowhere near
is
the all-time or
13, 13.
Walk us through a more neutral to bullish trade.
Yeah, so a different approach on this one. You mentioned the market maker move, Jenny, about $7. Stock's about $57. Do some math, you get to about 50 to the downside. And again, these are not guidelines, they're not limits, they're just simply a one standard deviation range generated using real-time option prices, sort of what that would be implying. And so take that for what
That's the
it
first
is.
time I had a
Let's say you
Windows
kind of
default
use
noise
that to
there.
sort of,
So the other ones are
give
you.
yourself an idea of,
UI
where
dream?
you're willing to sell a put
It's just a
versus
different
the
dream now,
downside, and say you
with maybe
set
some
around
nightmares
that
before the
50 strike, for
dream part.
example. Well, what you'll notice is if you kept things
And the
really,
dream might
really
not be
short term,
the same dream you had before.
expiration, there's just simply not much premium left in those.
Sold Wint at 14,
around
nice.
that 50 strike.
Nice.
So if you're pretty set on wanting to use that 50 strike.
Little
for
inverse
that,
behavior, yeah, I
you
know,
may
it's
have to
crazy how it
extend
looks like that
duration. So
sometimes.
that's what we've done here. We're looking at selling a May put vertical in this particular name. The 50-45.
Yeah, we'll see what a buyer is
looking
willing to
for
pay
about
for
$1
it, but
credit.
market cap of
So
60
not a
million
ton of
seems awfully
credit
cheap.
relative to the width of the strikes, but it is a high probability trade around this earnings event. Break even would be 49. You simply take that $1 credit away from the 50 strike, you get to 49. 400 bucks in risk, $5 wide spread. Net of the $1 credit leaves $4. That correlates to $400.
I like to see SPY bounce here on this
takes place below 45.
report from
so
earlier, from yesterday.
Even though that ratio is 4-to-1 in risk to reward, but a standard risk profile. We talked about this one. I don't even know how many times at this point, but a lot of them. Anything above 50 in which these options expire worthless, you simply keep that credit and you would move on, not accounting for transaction fees. That is a $100 profit. To the downside, it is risk defined, but you'll need to be below 45. So that's going to take almost a 25% decline in this stock to get to that level. That'd be a pretty massive move. If there's ever been a name that can do that, we might be looking at it.
I know. I feel like Roku tends to move on the back of its earnings events, so we have to be careful, and we'll be obviously watching this name when it reports today after the closing bell. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or assignment. Now coming up next, it's time for FOMO. We are looking at another name seeing some strength in
There's VWAP on Bed Bath.
That is Chipotle, with shares at all-time highs following its first quarter report. We'll dive more into those numbers coming up next.
Head and shoulders playing out. Come on, little Ricky Bobby. See, Revlon's up. Revlon's up 72% here. It was 36% earlier, now it's 72%. This is OTC now. VY breaking VWAP at 1330. Still down 33% on the day. Volume's picking up a little bit. Percolating. That's me. I just added an emote for you guys. Going too fast. Profits will be taking, going back down to 12.5. Oh, it's early. Just enjoy the ride. 50-cent average is not bad at all. For the amount I have in it right now, for me to get back what I've lost, I would need like, I don't know, I'd need a lot. Probably $2-3. If I put more in now, you know, that number will come down, but I don't plan to hold this for $2-3. I don't. We'll see. Like when it hurts. Let's get some Jennies in the chat.
Blocking this Activision Blizzard deal with Microsoft. Shares are down 11%, quite a stark difference than Microsoft's nice move on the back of its earnings. And
didn't work.
Activision also did have earnings that were strong, but this news definitely overshadows
in
that.
there.
Definitely, we've seen a lot of activity over the last 24 hours when it comes to Microsoft and Activision. So you are correct. We are seeing the Competition and Markets Authority out in the UK actually blocking this deal. And this deal is an acquisition of
I have
Activision.
to start a new stream. I don't know.
$69 billion.
Oh, I shouldn't have to.
Blocking the deal because they state that Microsoft failed to
Oh, you got it,
address the
Mazimus.
concerns
Is it
in
an
the
underscore?
cloud gaming sector. So that is an issue for them. Now, Microsoft and Activision are vowing to appeal this ruling here. But one thing to also kind of note, this agreement, this merger agreement that the companies have, it actually expires in July 18th of this year. Now they can extend it, but that might be another
I don't know if I should have given you guys a
deadline
Jenny emote.
come up fairly quickly here. And we also had the earnings coming from Activision, as you talked about. They did beat on both the top and bottom line. Revenue came in at a 1.85 billion.
Yeah, the average downs at when you're down, 80%, 90%, just get insane. You can buy the same amount of shares for 10% of the cost.
58 cents. Now there are some caveats there, may not be comparable, but we did see Activision drop about 11%.
A Gen I.
If this deal does not go through, the breakup charge for this, or basically Activision would make $3 billion in a breakup fee, and that would be about 5% of the company's market cap at this point in time. So it's not like Activision's going to be completely left out in the cold, but there was a lot of anticipation that this deal could potentially go through, but it has been trading at a discount compared to the takeout target price. So not surprising, the market did try to price this in if this were to happen. But I mean, Jenny, last thing I'll just say about this is Activision investors, when this conversation actually started, they weren't actually very excited about this deal, and then Microsoft obviously sweetened the deal. There is some potential upside for Activision as its games, especially Call of Duty series, has done a lot better than what the market has expected here. So yes, we are seeing a 10% drop in price at this point in time, but it does not mean that this is just going to be the end of Activision. This may just only be the beginning.
Yeah, and Kevin, I think that's a really important takeaway here because Activision itself is still a successful company. It wasn't like it was solely relying on this Microsoft bid, but it definitely does shake up the way we look at things here. And I'm curious because
Spies
governing
maybe
bodies like
holding that
EU
support from earlier.
FTC,
Or Solar still above VWAP. Here's another one that's on OTC, Box D.
Governing bodies really have to do now.
Can't even tell what's going on with this, but it's up 90%. So last transaction was 90% higher than the one before.
Well, it's probably going to be more up to the UK regulators. They're the most stringent, and if they say the deal's not going to go through, I would highly doubt that Activision would want to sell some of their, prized possessions when it comes to their games, or really
maybe Ace,
deal with
maybe
Microsoft in order to have it go through.
Where? How?
It's a very significant market when it comes to gaming as well as just access for Microsoft. So I'm sure that if the UK market says no go, it's probably not going to go through. But once again,
you got to be a super member, Ace. Sorry.
As well, Jenny. This is an acquisition. This does not block partnerships. So Microsoft might be able to go back to Activision and say, hey, let's do a partnership deal, and maybe we get exclusive rights to a game for the first 2 weeks or 30 days or what have you. That's all speculation, but that might be a different situation where they might still be able to reap some of the benefits of having a really tight relationship with Activision without having the regulatory hurdles of actually owning the company.
Yeah, I think that's a really good point. And I just like that you said, it's important to look at the future of Activision in itself because Call of Duty, the franchise on its own is enough to be excited about here, I think. But we will leave it there. Appreciate all of the insight as always, Kevin Green, Senior.
I don't know. Maybe refresh. Maybe refresh on the stream.
Now I'd like to bring back in Alex. It's time for FOMO, and we are looking
I don't know how these guys got it. Yeah, probably refreshing.
Nice move higher today. That is Chipotle with shares up 14%, now touching an all-time high earlier in today's session.
Yeah,
it is illegal for you to have that emote. You're too old.
It's incredible. This thing's been on the move today, and it's actually off its highs by a little bit too. It almost hit 20.50 a share. So massive move. And Jenny, I'm sure you're going to go into some of the numbers, but it seems warranted after you read the report.
10 million volume
in those 5 minutes there. And I was reading a takeaway from an analyst calling this a clean beat, and I think the numbers speak to that very well here, as we did see their first quarter net income coming in around $291 million, or about $10.50 a share. This was up substantially, almost double from what they reported a year ago of $5.59 a share. Revenue rose 17% to $2.37 billion, compared to about $2 billion they reported a year ago. Same-store sales increased nearly nearly 11%. This was well ahead of what the street had been forecasting, with operating margin coming in around 15.5%, also up from the 9.4% that had been expected. Now, their food, beverage, and packaging costs for the quarter were about 29% of their total revenue. This was down from a year ago, aided by some of their menu price increases and the dip in costs specifically for avocados, which I loved that because avocados are not cheap right now. Other food costs, though, other things like dairy, tortillas, salsa, beans, and rice were still higher. So then we are seeing these price increases help offset some of these inflationary concerns in terms of their overall balance sheet here. But for the second quarter and the full year, they are forecasting same-store sales gains in the mid to high single-digit range, which is ahead of what the street had been expecting as well. They did also say back in February they expect same-store sales increases to moderate. Now, as the chain does lapse the bump it got last year from their menu price increases, but they are entering a pretty pivotal time for the overall company, as spring and summer are typically seen as more high-demand peak seasons for a name like Chipotle. So we are only expecting more momentum here going forward, which I think is what have a lot of analysts excited today, Alex.
Yeah, they guided for, again, mid to high single digits comp sales growth after the blowout quarter they just reported. You talked about that margin expansion. Restaurant margin expanded 5%.
I mean, it's a risk. If you're only willing to take it green, you might have to hold into OTC.
Really impressive report from Chipotle. But what really stuck out to me, and we've talked about this and how it's roped me in, is the digital orders. They made up almost 40% of their total orders. That is a massive number, and it shows that once they're getting you into that app, you're
basically it still benefits you if you sell at a higher price than here, right? Even if it's still at a loss. So don't even think about. Imagine if you didn't have a position you're buying here. If it rips up 30% this week, on those shares you're gonna make 30%.
They're literally just laying out the blueprint to how to do this in the economic.
If you sell it at a higher price than it is right now, you're gonna take less of a loss, basically.
Fast, convenient meets technology,
and
how to do that.
You have to realize that.
Right, and they are still expanding their store footprint pretty healthily. They also have these concepts called Chipotle lanes, which are then, basically like a not real full store, but they're able to operate then more efficiently. So they're also great actually as a consumer because you just walk and get your food, walk out. It's not like a restaurant concept, but really I'd say a win-win for consumers as well as those that are working at Chipotle. But another thing, Alex, we were talking about is in this quarter, I was reading an analyst note yesterday that said there have been viral TikTok trends that have led to a cult-like following in some of their products, like their Al Pastor, which was released early March. And I have to say that I was too embarrassed to say this yesterday when we previewed the earnings because I didn't want to give TikTok that credibility, but even Chipotle mentioned that.
Yeah, no, and it's clear that when you have products that are popular in two ways. So Chipotle is already popular, right? And then you have this viral kind of marketing that sort of just happens on its own, even if there is paid kind of ad partnerships taking place as well. It doesn't matter because the virality of TikTok, just so many eyes on that, just seems to be really, really effective. So clearly all of it's working right now. Chipotle is navigating the modern world as well as any company. They just happen to be a food company.
Right. I think the TikTok community is one that it helps to get them on board because it's really driving up their sales for the quarter. So the FOMO feeling today undoubtedly is to the upside. I mean, shares are now up over 46% for the year and up over 70% off their 52-week lows. So walk us through what you're thinking for a trade, utilizing, of course, some of today's strength.
Yeah, so this is a tougher one. Obviously, liquidity is not great in a name that is this expensive. That is always something to consider. But also, this stock moves so much that we're up now into like these levels, like these nosebleed levels, that there just like wasn't option strikes really available. So you start looking at it, if you went out to May, for example, around the current share price, they're like $20 wide strike selection. So it's hard to make a small trade right now in Chipotle just because the stock is in uncharted territory, if you will. But you looked at something in the neutral to bullish camp, Jenny. It is a bigger trade. It's a bigger stock, and so bear in mind some of this was limited based off of the strike availability.
This isn't FOMO. The stock's down 33% today, so
neutral to bullish. Stock
I guess it could be FOMO, but at least you're not chasing it. At least you're not buying in when it's up 36% on the day.
You can still be bullish a stock, but
today is a better day to buy than if it's up 36% tomorrow.
And actually move lower in the near term. So looked at selling a 2000, 1990 put vertical. We collect a $3 credit on that. That's roughly 30 cents on the dollar, exactly 30 cents on the dollar actually. $700 in risk.
I know, but if you actually have fear missing out, it could happen when it's low too. That's a better time to have FOMO.
Of course, the risk profile very similar to the one that we looked at in Roku, but a little bit better risk to reward, a little bit closer to 2 to 1 on this.
No missing out.
A little bit lower probability of success, but a little bit better risk reward. So again, another example of how there's always trade-offs with trading, particularly options trading. If you want that higher probability of success, we're going to have to take greater risk compared to your reward. And you see that here with this one, Jenny. But can't believe it. We're quoting Chipotle at $2,032.
I can't believe that shares are up $252 on the day. I know it has a relatively higher share price, but it still sounds absolutely
For sure, Trace. Yeah, I mean, look at
ridiculous.
our market cap. We're at 61 million.
Nice to see that.
You think it's worth 100 million? You think it's worth 500 million? 5 billion? 1 billion?
Segment. Coming up next, we'll transition away from some earnings conversations. We'll be looking at
because it things have big swings now every day.
Concerns from some analysts. We'll dive into
I was showing you guys with 36% from that low to that high.
Sales from this upcoming quarter
and then
coming up next.
We made that whole move all the way back down. All in the same 12 hours. But if I did have to put a word on what the stock chart looks like, it would be gross. You guys do some grosses in the chat? Gosh, it's so slow on here. Broken. Bed Bath right around VWAP after a trillion. Explain revenue is price 60 million market cap. It's such a bargain. This seems so really unappealing. You don't have that one either, Ace? You just have hype? You're just a hype man all the time? Always the hype?
Welcome back to Next Gen Investing. Time to talk some Apple. So while we won't hear from Apple until next week, Jenny, it's still very important. It's still on the move to some extent, and it's still making news.
It is still making news. Naturally, I do think there's a lot of expectations for Apple, and it reports, and it's sort of on its own because we hear from so many of these big tech names this week. But we did hear from Susquehanna that does actually see some negative iPhone checks heading into this quarter. So here to tell us more now on that story, I'd like to welcome in Caroline Wood, Senior Markets Correspondent for the network. So Caroline, some pretty negative news out of Susquehanna today, but we're seeing Apple sort of shake that off. Doesn't really seem to care about what they expect.
This day trade in FRC was
event.
pretty epic.
Doesn't seem to be having any impact on Apple stock today. Shares basically flat, but this Susquehanna analyst actually had checks with Apple.
The short out of here from when it was halting, 30%.
Including Global Foundries, Micron, Western Digital, Corning, and the
46% on the way up.
Suggest that March quarter iPhone builds
with the equity, that's crazy.
Will come in around 49 to 50 million units. That's down 37 to 39% quarter over quarter, down 9 to 13% year over year, and it's also below Susquehanna's expectations of 50 to 52 million units. Looking ahead to iPhone 15, that's of course expected to be released in September. Susquehanna's current iPhone 15 forecast suggests total builds of 85 to 90 million units in the second half of 2023. That would be similar to the iPhone 14. The finalized build plan is expected to be available by early June. And then for the full year, Susquehanna forecasts 2023 iPhone builds of 205 to 210 million units. That's down about 10 to 12% year over year. But as we said, not really having much of an impact on Apple shares
Is top
today.
even
They were
short
actually
anymore?
modestly higher just a bit ago, but now essentially flat. Should also note that Apple did get a few price target hikes today ahead of earnings next week as well. We heard from Deutsche Bank, they boosted to 170 from 160, maintained a buy rating. And then Barclays is in the equal weight camp. They raised to 149 from 145. And that's actually below where Apple's currently trading just under 164. So raising their expectations, but still see some downside, according to Barclays.
You know, obviously we don't hear from this company till next week, Caroline, but it seems the story surrounding Apple is very different than the one that we just heard from Microsoft, which seemed to be defying all the macro trends. I mean, they're expecting sales growth to decline, to actually be negative for revenue.
BBY is building a little bullfly here, though.
Slower growth in services, and they're expecting margin compression. All of this is like the exact opposite of what you'd think would excite investors and excite the street, yet I still see like 3 and 4 analysts are saying buy this stock.
Oh, yeah. I mean, 80% of analysts at this point, Alex, still have a buy rating on this company, despite the fact that it is up, what, 20%, maybe a little bit more so far in 2023.
Extended hours,
I mean,
yeah, that does suck.
Covering the company, 34 have a buy rating, and only 1 has a sell rating. The rest are in the hold camp. You know, when you take a look at the median price target, though, Alex, it's around 173.50, so that really only implies about 5% upside from here. So despite the fact that we are still seeing so many buy ratings, doesn't seem to be quite a bit of as much upside potential for this one. But then again, we could continue to hear from analysts ahead of earnings, and then we'll likely hear some responses after earnings. So we'll see if that is bumped up at all. But yeah, I mean, it's a tough macro environment, and Apple's held up pretty well. But we'll have to see if they're able to continue to do that, or if people decide to look at iPhones as less as a staple and more of discretionary.
Right, and Caroline, I know that we've talked about this. To me, it's definitely a staple, and the whole ecosystem is far too expensive, but I am so immersed that I can't seem to escape it. So I'm one of those people that's now like unbelievably loyal because I'm stuck. But will be interesting to see once we finally get some clarity on iPhone shipments and deliveries. And this has been an ongoing conversation for the better part of this year. So excited to finally get some numbers to then put, a narrative to what people are expecting here. But we will leave it there.
You guys just need to do Jenny emotes whenever she comes on.
For the network. Now coming up next, it's time for Under 30. We are looking at
spam them in chat
ahead of their quarterly update today after the closing bell. An airline that has fared far worse than some of its peers. We'll dive into those numbers with George Tillis coming up next.
Biden says U.S. South Korea standing against economic leverage being used in coercive ways. There's a new little bounce there on BBY. We're getting that inverse beta, it looks like, again. Yeah, SPY's dropping down. That's pretty weird. SPY's kind of flushing there. Biden, he discussed peace and stability in Taiwan Strait with South Korea. Is this from what Biden's saying? Yeah, I'm sure there's some EU brokerages that you can trade extended hours. Those are that's weird. It's not showing that on the YouTube, but it's showing that on my restream. Or if it censored it. Bye, flushing down here. Too confident in my thesis. GNI. Old Texas Instrument. That's right. Pretty big flush there on the market.
That acquisition price at all. I think what's going on here is twofold. One, it comes down to scalability associated with higher cost of operations, whether it's jet fuel, which is about 35% of the total expenses for Spirit. The other thing is labor costs. Their labor costs increased because of unionized labor. There was an actual wage increase for pilots at over 35% that was tiered over the last 2 years, and I think that's also put a damper on Spirit. And then the acquisition itself, just going back to that, is hung up in the Department of Justice, which is basically suing to block the acquisition. And that's based upon the fact that a lot of the routes or a large percentage of the routes are overlapping, and therefore it's perceived that there would be market power and pricing power and anti-competitive elements to the acquisition. So there's a lot of things that are going
trade the trend.
Spirit right
Trend is
now.
down.
But here's the thing:
long
if you
time
look
frame.
at the last year, I mean, they haven't produced positive operating income. The quarter that they're about to report is better than certainly last year for the same quarter. They're estimated to lose about 89 cents compared to a $1.60 loss last year. But the sales are actually considerably higher. 1.35 billion is the estimate in terms of sales. And now looking at last quarter, for the same quarter last year at 987 or 967, forgive me, that's about a 39% increase in top line sales. I think the challenge is with Spirit itself, if you look at it as a standalone company, we talk about this a lot, is debt. It's got about $3.2 billion in debt. Now it does have about $1.4 billion in cash, but its equity position is only about $1.5 billion, and so it's got about 2 times debt to equity. You know, I'd say
What is selling off right now? What's going on?
Lofty, considering the stock or the company is not reflecting positive operating income in the last year or so.
South Korean President Yoon says we are now being threatened by unprecedented political crisis.
That includes, of
Could
course,
be what's going on in
prior to the
Korea
pandemic,
right now.
It's been drifting lower slowly over time. So to me, it looks like it's lost some competitiveness, and maybe it really needs to be acquired, or the merger between JetBlue and, of course, Spirit makes sense. If they do effectively get approval from the Department of Justice, it would represent about 11% market share as a combined company. That's still below some of the other major carriers like Southwest, United, American, Delta. Those companies have between 15 and 17% market share domestically, respectively. So, you know, I can't say if it'll be approved, but I think that it will certainly improve the aspects of the financial conditions for both companies. I think they both really need it, to be honest with you. So you have to go with the market. Right now, the market is telling you things are not very good, as we see the stock is drifting lower on a weekly chart. And, you know, I'm not one to fight the trend. If they do report positive earnings, you might see a nice blip to the upside. But I like to see, and I've talked about this before, 2 consecutive weekly closes above a 21-week moving average. And until then, you have to go with the trend, which is unfortunately still down if you're a bull.
George, a couple things that stuck out to me on the estimate. Seems that they're still attempting to grow. Capacity is going to probably jump up here as they got some aircraft deliveries. But with that, inefficiencies and expenses surrounding those aircrafts are making that cost for available seat mile jump up a little bit as well, because they're actually expecting the fuel cost to be flat sequentially. So some of those headwinds are expected to sort of have waned, but it's the other stuff that's now kind of being inflationary in that cost pressure. But you mentioned the revenues jumping like almost 40%. Will be a pretty meaningful step. So it's like incremental progress, which is really the story of airlines in general, it seems. They really haven't recovered from the pandemic entirely as a whole. it's more of that. But to me, my big question here, George, is clearly the overhang on this story is this potential merger, potential acquisition with JetBlue. The price is nowhere near the price that this deal is being cited at.
Flushing down
so
here.
with that, it's like it's either the market saying that like there's going to be a renegotiated price. It's going to happen so far in the future that we're not going to even go near that price yet, or it's not going to happen. So with that, how do earnings play into things in the near term? Is this stock still in play, or are earnings meaningfully going to impact the stock price here?
Well, I think at the end of the day, there'll be some concessions with the Department of Justice. I think they will probably have to forego some overlapping routes considerably in the last year or so, despite the acquisition news. I think if you look at the estimates for Spirit alone, I mean, they're not expected to come in with an adjusted profit this year, but they are in 2024. In fact, if you look at 2024, they're expecting about a $1.69
coming down now.
profit, which puts its
3,
forward
4, 5. Let's
multiple
see.
around 10 times earnings. So it's really a story, I think, of 2024, not necessarily 2023.
Other than the
but the market will give us some inkling if that's the case. In other words, things are improving once we see essentially a potential major trend reversal, looking again at that 21-week moving average that I spoke about just a moment ago. So, for the most part, I think Southwest actually breached the pre-pandemic level briefly, but all these airlines are still down from the levels back in March of 2020. And I think it's still a situation where the entire industry is still suffering the consequences of the pandemic. And lastly, I'll say this, as you mentioned expenses for Save, just to give you an idea that the larger carriers have basically a monopsony buying power. In other words, because they buy so much jet fuel, they can actually dictate the price. Just comparatively speaking, with Save, they only operate about 194 jets, where if you think about Delta, which has better scalability and its ability to buy jet fuel, operates almost 1,000 jets. So just to give you comparisons on the size and scale of two different businesses, I think the acquisition itself will be accretive to both businesses, assuming it does go through. So I think it's one to keep an eye on.
Yeah, and George, I have to say that I've been browsing Spirit Airlines. Their airfares are not cheap, and I know that's a theme throughout all the other airlines, but they're the discount airline. So if you have competitive prices with, say, American Airlines, why wouldn't you fly American? They need to keep those costs low for consumers. But it's my own personal take. We'll obviously be watching those quarterly results when they come out today after the closing bell. We'll leave it there. Appreciate all the insight. George Tillis, Senior Markets Correspondent for the network. And that also does it for Alex and myself for Next Gen Investing.
I knew low on the day, 405.
Watch list with Nicole Petalides.
Yoon said U.S. South Korea agreed to boost economic partnerships in chips, EVs, and batteries. Yuan has become the most widely used currency for cross-border transactions in China in March, overtaking the dollar for the first time ever. Better start brushing up on your Chinese. Republican U.S. Representative Nancy Mace says she's a yes on debt ceiling bill after earlier opposing. Nice, Dink. Well done. I like that response. Look at all SPY. It's selling off. I mean, the trend was down since yesterday. Banking scares. I mean, FRC, all that. I figured more of a bounce today, but yeah. Yeah, you did, CJ. 405. No, you called 404.50, I think. Yeah, 404.50. Before it bounced. But from 404, I mean, what kind of bounce are you talking about? Back up to 405? You called that when we were at like 407. Both puts and calls? Sure. I'll just pay the market maker. Well, Jenny's not on.
Beat expectations,
Can't use it
showing
if she's not on.
strength across all of its business segments. Revenue
Not a
grew
genius.
7%. That was more than twice the growth rate that Wall Street expected. And profit beat analyst estimates by about 9%.
Just a big
and Microsoft
up,
revenue
big
gave
down.
or Microsoft's earnings, I should say, gave an operating profit forecast, I should say, for the next quarter that exceeded expectations as well, the company. And Windows Commercial, that is the part of the business that reflects the volume licensing division for the company's operating system. That saw revenue increase by about 14% year over year. Revenue from the cloud service, Azure, it grew about 27% year over year. Now, that was just marginally above expectations, but nonetheless, it was up. So the company is, however, expecting that same cloud services revenue to continue to rise by as much as 27% year over year in the full year. And so the strong earnings results, that really did help mitigate any selling that came from Microsoft or UK regulators blocking the acquisition of Activision Blizzard. Now, Microsoft has wanted to acquire Activision Blizzard for $75 billion, and the UK is concerned that if Microsoft does acquire Activision Blizzard, that will block other console systems, gaming systems, from being able to actually carry the game, since Microsoft owns Xbox. So that means that PlayStation and any of the other places, regulators are worried that that may happen. But with such strong earnings, the case could be made that Microsoft doesn't really need to do that. That's going to be one of the arguments, and that's according to a few analysts out there saying that. So Activision Blizzard did give preliminary earnings, and they show better than expected revenue for the first quarter, Nicole.
All right, understood, and we'll continue to follow that story. In the meantime, I know they're planning to appeal, and Activision's down 11% right now. What about Alphabet? I mean, there was an interesting note today from one of the analysts, I think it was Morgan Stanley, that really thought Alphabet, Google really had real vision for the AI race. What are your thoughts after the post-earnings?
I think that's the sentiment across many of the analysts. You know, I saw a note as well. I saw the Morgan Stanley note, and then I saw another note coming from another company. I can't get it right now, but this particular analyst at NOAC, by the way, they said that Google's AI is underappreciated and that it's an underappreciated AI leader. And it will usher in a new era of AI experiences, not just for customers, but for business owners, corporations, things like that, even medical and education sectors as well. And so when we look at earnings, though, they came in better than expected, and earnings growth was about 3% from the year prior. The company did spend a lot more money on research and development this past quarter, though, and it makes sense because it's put so much energy and effort into the AI space, into its heavy investment in ChatGPT for that, or not ChatGPT, pardon me. That was Microsoft. Google, however, has put a lot of money into its AI investments for its projects that are going forward. And the company is expected to accelerate that growth in their search and YouTube businesses. That's where they saw much of the strongest growth in this past quarter. The stock is up now more than about 14% year to date, and analysts They feel like it's going to go a little bit higher. We saw price target hikes at Morgan Stanley, JPM Securities, JP Morgan, as well as RBC.
Yeah, absolutely. Bard is definitely what.
All right, coming down a little more here.
Pressing so hard to move forward with that.
Got support at 404.34. We'll see if it makes it there.
Renita Young, thank you so much. Enjoy the conference there. A lot of
might average down my longs.
happening there. Now let's take a look at the bigger picture. Ed Siddell's with us, CEO, Chief Investment Advisor, GFAI Financial. Thank you for being with us. Your thoughts on what we're seeing here? I mean, there was a lot of concern about recession. Are you concerned about recession? We're certainly seeing a lot of volatility.
Yeah, well, thanks for having me back, Nicole. And, I am. I think we've been in a rolling recession in and out for over a year now, and I think we're on the verge of another one. Unfortunately, but if you look at the math, you look at the numbers, the fundamentals,
BBBY is coming down,
pointing towards it. Also, if I think everything is going to be contingent, also based on what the Feds do. I mean, everyone is saying, if they raise it 0.25%, if they don't raise it 0.25%, and that's going to have a huge impact on the rest of the year. But it has taken us basically 15 years to get to this point in time, and we're not going to be able to fix it overnight. So I think we're in for a long haul, at least through going into 2024.
So if it's pointing to a recession to be more likely than not, then the question is, how bad will it be? I think that's another discussion that happens. How deep, how wide, how long will this occur? Will it be, mild and fast moving, particularly because it was created in part, by the Fed, right? So
yeah, free money. Yeah, you're absolutely right. I mean, you can't have free money and not expect,
yeah, trader. BBY will probably make it out.
And that's the biggest thing. Right now we've
make
got
it through.
All these consumers and businesses.
I don't know if we're going to have any value as shareholders.
0% free money. And now
as existing shareholders,
and so,
that's I guess the only question.
Whether they're going from 3%
the company
to 7
will be
or
fine.
8%. I mean, that's going to have a huge impact on revenues, and especially small businesses. I mean, we've already seen at the beginning of this year where bankruptcies, filings are significantly higher than they have been over the last 3 years. So
got rid of
more of that is we're going to see more of that.
If someone has a copied name, it doesn't mean there's just a scammer.
Months. And you also have a lot of commercial mortgages, commercial loans coming due as well. I think it's
new low on the day on SPY.
And so now as rates get higher, banks, we're already starting to see a credit crunch.
And double false breakouts today.
Saying, okay,
both sides.
You're going to have to guarantee more. What more?
I should have looked for the short too.
Put up against this.
Sucks. This wasn't a nice setup for
if
one.
There's a default that we're protected.
Or on a false breakout.
And I just don't know if that's going to happen. So I think it's going to be a struggle, like I said.
Yes, I guess there was a little head and shoulders there.
I think it's going to
be tough. This trend is very clear. Want to be in a short. I'm talking about it for like
I've read some articles that use that phrase.
2 weeks, 3 weeks.
Fed meeting.
I'm up to this resistance.
Do you think the Fed should pause? I had a guest earlier today who said, that's it. I think the Fed is actually probably done.
You know what? If they hold true to getting down to that 2%, they can't.
No, I know. I banned
them.
You don't have to be friends with them and
again, it's
chat with
below
them.
the 100-year average by 1.25%. I don't think they're going to pause. I think they may raise it one more time and then pause to see what happens.
That's why investing maybe in the bonds is a good idea, right? Because they get paid out in a bankruptcy before shareholders.
12, 13 years, and it's going to have a significant
I've never bought a
impact.
bond, but
even if they
stay BBY bonds is maybe a good call.
I would not be surprised.
I think
if
you're
we see
limited on
another
your
round of
gains, but
quantitative easing
it's
towards
probably
the
a
end of the
safer
year,
bet.
which again is going to go against all the inflationary things they've tried to prevent. So it's a catch-22 position for sure.
QE by year end, so that's really interesting. So you think that
3,000 pounds
cuts, or they've been running off that balance sheet, so we'll see what happens there. In the meantime, a lot of talk about the debt ceiling.
404.85. SPY still flushing here.
Posturing, but and political theater. But the truth is, I've been starting to hear some rumbling, like maybe we'll start to hear more about it even this week.
What, as far as additional rounds of quantitative easing, there's the economic policy that we have seen so far has really decimated the economy. Just like the new mortgage, where they're penalizing those individuals and those that have good credit, that have paid on time, are going to put a larger amount down on their housing. And so, and they're actually rewarding bad behavior, those who have bad credit and haven't been able to pay on time. And so, if we continue this economic policy, again, it's going to be a struggle going forward. And really, the only thing that the Feds have left in their toolbox is to print more money. And we've already started seeing that with the bailout of the banks, or the no bailout, if you will. And so, and then inflation, I think it's here to stay. I think it's going to be around for a long time, for years to come. I cannot see getting down to that 2% range. I just can't without an awful lot of pain. And I don't think anyone's willing to do that, at least not the leadership that we currently have, for sure.
Right, understood. And what are the buying opportunities? When there is weakness, there is opportunity. That's what they say.
Yes.
Do you agree?
Absolutely.
And where would that be?
Yeah. I like precious metals, gold and silver. I like AI, Microsoft. I just heard, and I agree with this. We were talking about
Microsoft right now.
I think Google is undervalued as far as the AI space. So NVIDIA, those things that going forward, those companies that have strong balance sheets all the way across the board. I said it earlier in the year. I still believe that value companies, those with strong balance sheets going forward, that's where we're going to see the best opportunity, for sure.
Right, understood. Ed Siddell, great to see you. Thank you, CEO, Chief Investment Advisor, EGSI Financial. Thanks, Ed. All right, later this hour, we're going back to the Morningstar Investment Conference. Get the very latest data on this year's equity flows. The funds, which way is the money going? And a check on those regional banks. This is FRC has been under some serious pressure. What next there? We'll preview eBay earnings. The e-commerce name could be a good indicator of consumer shopping habits. And our panel ready to take a look at the energy sector. ExxonMobil, Chevron earnings heading our way later this week. Let's get some details there. We'll also get the latest recession picture from the team at Sound Planning Group. Stand by. We'll be right back.
Oh, he responded to Peruvian Bull. He doesn't usually respond.
Let's walk through charts. One of the most commonly used.
I don't know what he's talking about. America is littered with managers making millions in risk-free compensation. Talking about all of them. BBY is probably included in there. SPY wick down there, 404.74. Might not be quite at the low. I've been slowly scaling into the longs down here. Not too many up here, so looking for an equilibrium somewhere around VWAP, hopefully. low there on SPY, 404.72. BBBY supplies for Doge expedition to Mars. Yeah, RC tweeted. I had it up on screen, I'd say it. America's littered with managers making millions in risk-free compensation. And he actually responded or replied to Proving Bull. Many of them are driving their organizations into the ground while making money hand over fist. I can think of a few. Twitter troll was former exec. No, he's not talking about AMC. Although that's true too. Maybe he's talking about AMC. He's responded to him before. I don't know which one you're talking about specifically.
But you know, Microsoft's a home team here. We've been bullish on them for a while, and I think that they've got a lot of runway left. You know,
yeah,
looking at some of the
conversed on Twitter.
Subscription-based things versus you know, maybe where Google goes into more of the tracking as they're doing search engine optimization and
like
whatnot.
this guy's office
So,
looks like he's in a control tower.
There's quite a number of things to be paying attention to, but I think that we're kind of sitting at a moment that
really flexing that corner office vibe. Vibe life.
Looking back here a few months from now.
Calm before the storm. That doesn't sound particularly good. Do you think some of this relates to not necessarily First Republic, but what happens afterwards? Because
Right, Dolores.
I just checked the low of the day here.
Probably, yeah.
$4.76.
Maria, Maria.
$70 company not that long ago.
Right.
You know, and now the government like saying that they're not willing to step in. Not sure you're going to find a buyer so fast. I mean, we've had names like JP Morgan. You remember JP Morgan with Washington Mutual and Fair, and they basically saying, never again are we doing that.
Right.
We'll help out on the side, but not willing to do takeovers and then pay penalties later. What do you think happens here, and why is it important?
Well, it's I think very important to understand, you know, what's actually taking place in the banking industry. So if we go back to 2008. These banks had some new regulation that said that they don't have to mark to the market the treasury bonds that they hold. And so this is really where things got out of hand here, is where, you know, they were, you know, they had these treasury bonds, they were down, you know, 20-30% because of the interest rate changes. And this is really the catalyst. You know, the cost of capital has gotten so expensive here because of the moves that Powell has made. And so they get a run on the bank and they're forced to liquidate those positions. Well, I personally think that it would be a big mistake for investors today to think that we're out of the woods on a banking crisis. So I've been saying this for a while. I think it's important to note we just finished the first month of our banking issues so far. It took over a year before Washington Mutual, Bear Stearns, Lehman had their full effect and challenges there. What we really need to understand is what are the impacts? And so I'd say that you look at the local regional banks, which metabolize 70% of corporate debt, whether it's the office space that I'm currently in right now, or it's the debt that's needed for organizations that IPO'd or SPACs that need more capital to ultimately run. We don't have the same rate environment as we did previously. And so
FRC just had
we're
earnings.
doing more of a work
Assuming
from
that's
home
why.
right now, and office space and vacancies are going up. I mean, my goodness, I was in New York and I was appalled by how quiet things had become as the city's hustle and bustle was ultimately changed post this 2020 timeframe. And so I think it's really important that we understand, okay, if these
You're low on
challenges
SPY
happen,
there.
if these local regionals don't have as much cash to lend out on the 10-to-1 basis that they were before, where's this lending going to come from? You know, if I put money in the treasuries today, I don't have FDIC limits of 250. You know, if I do it for longer than a year, I've got long-term capital gains versus 1099 income. You know, we've got the treasuries full faith that says that they're backing this up. You know, there's a lot of pressure on these banks here today. And so I don't think that we're out of the woods. In fact, I think that it's ultimately going to
404.60.
erupt at some point here. And we could find ourselves with
New
a
low
lot
on
of
the
Chapter
day.
11s going forward, where businesses will be forced to remetabolize their debt. They'll have to go back to creditors and say, hey, we can't make the payments at these rates, but we still have an organization that's still working out. You know, make a deal with us here before we have to fold up and not pay anything back. And so again, this is my worst
Half
fear.
of being
I don't
right is
hope
being
that
on
this
time.
idea happens. I just am someone that's looking
Say
at
something's
this
going to happen
objectively
without a
and trying
time
to say,
frame,
okay,
you're
what
probably
are
going
the
to be
ripple
right. It's
effects
just
if we
ridiculous.
begin to find ourselves with
But yeah, I've
these
seen
losses,
the
these
collapse
challenges,
of
because the
banks.
Fed just flipped the entire world and how we
Yeah, you
operate.
definitely see that coming.
And I think the damage has been done, and we're
But
going to
yeah,
be
you're
finding
right.
ourselves a couple months from
Yeah,
now looking back
has
and
been on
saying,
there.
wow, that was unexpected, because these things tend to happen really quick. You know, when Silicon Valley Banks falls apart in 2 days time frame, that was the fastest ever.
No, it was I remember that Friday being very uncomfortable. And so let's spin it forward here for investors.
Yeah.
I know silver and gold is something on your radar. You also are looking to something like Microsoft and AI. I mean, Microsoft has been a great performer, great for shareholders over the many years. Why Microsoft? Why gold and silver?
I think it just so starting with Microsoft, we just have to understand how the world has changed. You know, COVID entered in this whole, you know, work from home idea. I mean, at my firm, that wasn't even really an option prior to COVID, and now that's a option that's definitely out there and exercised. So now we've got less banking challenges, you know, or things that are going on in the office space. So I think this also brought a lot of tech adoption. You know, Zoom, as an example, became this, you know, massive revelation. It had been around for a while, and it's like, wow, we can actually do appointments this way. And, you know, we got Slack, et cetera. Well, Microsoft Teams has obviously worked out very well, and Google's obviously done pretty well here too during this time frame. And so I think it's important for us to look at Microsoft and say, okay, adapted during COVID, have some of the new ways that we're going to be doing business, and now this AI revolution, it might replace some jobs, but I feel like, you know, the toothpaste is out of the tube. This is a very, very, very real idea, and it's going to continue to go forward. Getting to silver and gold.
That's a good point,
You know,
Osmos.
the United States dollar is not looking as pretty as it once was. The fact that we've got this deficit that hasn't even been really discussed, and you know, we're about a month or so from completely defaulting. I mean, we're past our moment. Now we're, you know, can we continue to still pay our bills with the remaining cash that's here? So I think they're going to get a deal done. But you know, if we get back to quantitative easing again because banks have challenges, or God forbid cities and states start having issues, this is where we need to understand, what have the world bankers been doing? Well, they've been buying gold by the tons, and they've been buying gold by the tons more recently in just escalated ways. So I personally look at the ratio between silver and gold and think that that's an important one to identify. They can mine 9 ounces
Thanks,
of
by maybe
silver
bottom
for
there.
every 1 ounce of gold, but the ratio is somewhere around 80 ounces of silver for 1 ounce of gold. So supply and
See if
demand would
CJ
dictate that
held
there's an
that bottom.
imbalance there. Plus,
Wasn't quite
silver ultimately
404.50,
has
but
this
404.59.
commercial
Close enough.
value associated with, you know, connecting chips and
Short
TVs
squeeze
and
coming?
all the other wonderful things. So
Without
I
a
think that we're going to
catalyst?
see a pretty
No.
significant run in silver. In fact,
You might get
you know, probably my
some kind of
favorite idea
pump
for the
like
next
this.
probably 2 years or so.
But a short squeeze like
But
back to
it would probably
$1 or
also be a pretty good
$5.
hedge if
I don't
this
think so without a
Cold
catalyst
War
at this point.
in Ukraine, Russia, and China becomes more of a hot war. You know, the BRICS nations trying to establish their own currency would be, you know, a very unfortunate
Do you just get updates
reality.
from
And
that
now
SPY
France
trader?
is ultimately trading natural gas in the yuan and not the
DJ?
United States dollar. So if we're
There's a
paying
move up.
attention
So we
right now,
got that
a
little
lot of
insight
things
bar
are
there on
slipping and
SPY.
changing,
That was
and
kind
I
of the
think
first
that the average person can
first tell.
recognize those ideas and
That longer wick
really,
down there on that
position
candle too,
themselves for success here
and increase
if
in
they
volume.
take some alternative ideas and thought. And the last point I just
Didn't
want to
quite
make
get to
on
my
this,
support
Nicole, is
there,
that
but it's in
I'm
the
pretty
area.
concerned actually about the bond market.
We
And
said
I know
bull flag,
bonds are
huh?
safer than stocks.
I did average
quote
down here
unquote,
some.
but there's 5 different ways that bonds can lose money. And so that's a revelation that's critical to understand.
Yeah.
So the interest rate changed when interest rates go up with the Fed. The value of the bonds went down. That's part of the problem that the banks have now, and as well as every pension that's out there. But also we need to understand that bonds are losing to inflation today. So that's a guaranteed loss. If your advisor's charging you on top of that, then you can depreciate your net
When you were
present
calling
value
for a
even
bounce up
more.
here, CJ, what were you talking
If we
about?
see
I would
something
assume
that
a
was
bounce higher than
creditworthy
here.
go to junk status or less creditworthy, that's going to be costly. We also know that supply and demand has big issues with it when the sellers want to sell more and the buyers want to buy.
Otherwise,
so as
it's
we
not a
begin
bounce;
to
it's a
see
drop.
more challenges happen, and
Right?
again, I don't want to be bearish. I just feel like it's important to understand that as seasons change, we probably need to address the way in which we're, let's just say, dressing for the climate. If it's warm outside, I'm going shorts and a t-shirt. It starts getting pretty cold. I think it'd be wise to put on a jacket and some pants and some boots and some gloves, maybe, and a hat. And again, I think we're heading into this summer right now, and some of this is just beginning to deteriorate, just like most of the U.S. CEOs as well as global CEOs believe that a recession is developing, but also a financial crisis at the same time.
Okay. And that's why you're looking to silver as your best pick, one of your best picks for the next couple of years, you said. David Strzelecki,
right.
CEO, Sam's Planning Group. Thank you so much, David. Thanks. Coming up next, we'll head back to the Morningstar Investment Conference in Chicago live. Team is there. They're looking at some of the trends in equity fund flows. You'll want to hear more about it. We'll break it all down. Next, we'll be right back.
I think his Discord or something. I think he like updates live on there. Disney streaming product chief Jarrell Jimerson is exiting in latest round of layoffs. Biden says, "My desire to increase U.S. manufacturing jobs in America is not about China. It is not designed to hurt China. The U.S. is not going to sit back and be in a position where we do not have access to semiconductors." Biden says North Korea nuclear attack would result in the end of whatever regime took such an action. He will not put nuclear weapons on Korean Peninsula under this agreement. Says Trump represents a danger to democracy. Republican debt ceiling bill advances in the U.S. House toward debate and possible vote on passage. Biden's happy to meet with House Speaker McCarthy, but not to whether debt limit gets extended. That's not negotiable. $2.279 trillion in overnight reverse repo bids. 97 bidders. 4.8%. U.S. money supply is on pace for its largest calendar year contraction on record, down 3% year to date through March. During 2021, the money supply expanded a record 40% in just 2 years. Bye Bath coming down. Oh, pump today. That was random. Is it halftime? No. I want a coffee just because I like coffee, but I don't need it today. Thanks, Ace. You too, man. Stoked on your computer, buddy. Well done. Property manager touring an empty one? It's over because your property manager's touring an empty one? I had a little bounce there, but it's looking kind of weak. Thinking about cutting losses. There's still a chance.
The ETF landscape, which is where I focus a lot of my attention, you've got the big three, right? iShares, Vanguard, and State
Eyes coming
Street
down here more.
About 77% of ETF assets between the three of them. So normally you see their flows kind of move in the same direction, but so far this year that hasn't necessarily been the case.
Might make a new low.
Saw Vanguard lead the way with about $30 billion of inflows in the first quarter. And with Vanguard, I mean, their investors are so disciplined. You know, I kind of liken them to Cubs fans who will show out to Wrigley Field no matter how bad the team is. Rain or shine, good markets or bad, you'll see Vanguard investors continue to just move into their portfolio.
Monday and Tuesday might rip,
so no news
Julian.
there, you know, as far as just another strong quarter. What was a little bit more surprising is when you look at iShares and State Street, you know, two behemoths in the ETF industry, both finished off the first quarter with outflows. In the case of iShares, the writing has been on the wall for quite some time here, where they've really done well when it comes to fixed income ETFs, particularly some of their treasury offerings, but they've had trouble retaining investor assets in their equity lineup. Vanguard hasn't had that problem, but you'll see a lot of folks moving out of even iShares core
Time for Jenny?
equity lineup, some of those portfolio
I don't know.
building blocks.
I don't know
as
if she's
some
on this late.
investors head out in recent years. And then State Street, that one perhaps a little bit less of a surprise. I think their ETFs are a big favorite among the short-term trading crowd because a lot of their funds are very liquid. So as investor sentiment has kind of wobbled here early in 2023.
New low on SPY
we saw
there.
SPY, the original ETF of all ETFs, suffer some outflows. That's a very big part of State Street's lineup. And a lot of their sector funds have suffered pretty severe outflows as well. So when you look at the big three, kind of a mixed bag. And in the first quarter, we also saw some active ETF providers really burst onto the scene. You've got your systematic active equity shops like Avantis and Dimensional. Capital Group is kind of your more old school discretionary stock picking active manager who's really penetrated the ETF market well. And then JP Morgan has continued to shoot the lights out with some of its treasury and non-traditional equity strategies. So kind of a mixed bag across the ETF provider landscape in the first quarter.
Ryan Jackson, thank you so much. Morningstar live there at the Morningstar Investment Conference. Thanks. Still ahead in the second half of our show.
Jen, I have no idea. I'm just saying. So I'm not just expecting a sell-off on Monday, Tuesday because it's the 2 days before it's delisted.
Should be on your radar. Much more coming up.
Had a huge sell-off since that news has come out, so to say it'll just continue until it's delisted, I don't think is probable. Yeah, guys, for sure. I don't want to start doing the wheel on Zim. Makes sense. Has pretty high premiums for some reason, and then the divvy is just crazy high. Not that high premium though. Always shows up on the scanner for some reason. That cup and handle did kind of play out. It takes one to go to the moon, that's right. Redditing about it. Uh-oh. Three, 6. Not today. Come on, really? Maybe. Actually, not too far. Maybe, John. Why'd I get stuck on the longs? Why did I do that?
which has been, and it's really struggling. I've got the S&Ps down around 1/3% here today. I'm looking at the Dow, which is currently trading down around 0.6%. Here you can see, as mentioned, the Russell down to 1732. It's down by about 0.75%.
FRC is
But
paused.
look at the outlier here.
Halted again.
You've got NASDAQ, Nicole. It has been the pillar of strength in many ways. We did see some earnings that came out that helped the NASDAQ stay strong relative to the broader market. And the weakness we just pointed out in terms of the other three majors, and that came from Microsoft, that came from Google. We've got Meta on the close today. To your point, the S&P is now 100 points off the highs that we saw last week on Tuesday as investors come to grips with some eco data that we've been seeing, the regional Fed numbers suggesting that the economy is slowing. An interesting relationship here, though, this week with rates, right? Yesterday we saw the indices, which were selling off throughout the day, and that was with rates to the downside. Ultimately, Treasuries were rallying. Today,
It's resumed.
watching Treasuries, which are rolling, have been rallying ultimately, and rolling over, and we've been watching rates to the upside.
Halted again.
Ultimately, we've been seeing
Kind of want to
futures
jump in a
coming
short
off
here.
So keep an eye on this here again throughout the day, throughout the week, but also keep an eye on some of the data due out tomorrow, jobless claims, and then at the end of the week, personal income and spending. So a busy week already, but still lots to come here as we head into the latter half of it.
Yeah, understood. And I know you were going to cover Bitcoin, but I think we made a smart change in taking a look here at crude oil, because below $75 a barrel.
Yeah, absolutely. I think kind of Bitcoin fits into the narrative of NASDAQ in terms of having covered that.
New low on the day for SPY there.
We've seen the rally up to 30,000 and a bit of a pullback off those recent highs. But the big move today, Nicole, and in line with what we'd seen in terms of the indices, you've got crude oil. Let's look at the chart.
404.34.
We're talking $70.
Down 0.5%.
Okay, near
0.4% rather.
Yesterday afternoon, all the way down to 74.26 here today. We heard from the
403.70
IEA and
is kind of the
executive
next.
director. He basically called out OPEC. He
Next
said
level
they have to
here,
be
that would be the
very
gap
careful.
fill.
He talked about how if the oil producers try to push prices up, this is only going to accelerate electric cars penetration. We know that there's a lot of uncertainty out there in terms of economic conditions, right? We talked about that as far as the indices, growth concerns, uncertainty about this higher rate environment. What if inflation continues to linger? And crude prices coming off, but still at above $70 a barrel. I think one could argue that they are and do continue to linger. Now, you can see the significance of the move lower here today, continuation of the weakness we've been seeing off the mid-April high up around this 83.50 level. And I just want to take it another step back, looking at the daily time frame, breaking out below the 50-day moving average and kind of marrying or merging these two conversations. And look at this, the ES and
Delisting
crude
niggas
oil, they oftentimes track each other very closely.
If anything, they would have to
The IEA
cover
executive director
or
also
at
said
least
that the global economy is a very,
wash them over to
it's in
normal
a very
naked shorts, which
stage, he said.
maybe is what
See
happened
higher oil prices and upward
when we had
pressure on
almost $1
inflation.
billion in volume.
That's the
There
last
might have been
thing
a lot
we
of
would
nakeds
want.
closing and
Indices, I think, a reflection of that. Again, crude coming off,
turning them into normal
dollar
shorts
inching higher here today,
with all the
ever so
newfound
slightly
liquidity
off
from all the
lows from earlier.
dilution.
It's actually still negative, but inching higher, so lots to keep an eye on, as I mentioned, again, into the end of the week. Oh, lastly, I want to point out we had a large draw.
I really don't know, though, guys. Like,
5.1 million from the EIA.
I don't know if anyone really knows.
I really think there was comments from the IEA talking about the economy slowing ultimately and the impact that crude higher prices have on that and the role they play.
And we're going to be talking more about oil later in the show.
Double down
so
on
that was
Beyond.
a great preview for us and setting us up. Ben Lichtenstein, thank you so much. Great to see you. Appreciate it. All right, let's head back to the Morningstar
It depends.
Investment Conference in
Depends on
Chicago. Sean
the judge,
Dunlop is
and
with us.
it's negotiable. Like, all negotiable.
eBay
But we're not negotiating.
ahead of the earnings today.
They're negotiating for us.
You have a 4-star rating, a $57 fair value. What are you going to be listening for? You're looking at those numbers. What are you watching?
Yeah, it'll be really interesting to see not only what we saw looking back in terms of consumer spending in the most recent quarter, but what management is willing to provide as we look forward in the next couple of quarters. As you think about eBay's marketplace, that $70+ billion in gross merchandise volume is chopped up in a number of different categories that are quite discretionary. They've got more than $10 billion in sales that come from consumer electronics, for example, more than $10 billion in auto parts and accessories, more than $10 billion in home and garden. All of those have been pressured as you look at the retail sales data. So I would expect that it may be a relatively challenging quarter. It will be interesting to see as we progress over the balance of the year to what extent consumers are still willing to spend, and that's really what we'll be keeping an eye on.
Understood. And, you know, as we await to hear more on jobs and layoffs, and where do you
404. We'll see if it bounces on my level here.
so important to have a strong consumer?
Jenny. Big hugs. Thank you for the dono, man. That's a lot of Jennies. I don't know if we're going to get her back even with the dono. Appreciate it. Big hugs. Very generous of you.
So consumers may be trading down into some of eBay's key categories as they start to feel pressure. Resale tends to outperform a little bit. But it's still definitely a marketplace that is sensitive to macroeconomic factors. You think about something like swelling interest rates.
My pleasure.
Potentially going to be buying fewer automobiles. And we've seen a big slowdown in the housing market. That ties in both the parts and accessories business and into the home and garden categories. So it'll be interesting to see as we move through the year how resilient that U.S. consumer proves. But I would say one big point that the market tends to miss is that the eBay marketplace today is much stronger than it was going into COVID, particularly
Big hugs. Appreciate the support, man. Thanks again.
Focused categories in a first-party advertising platform, and they're promoted.
Yeah, you're in here on Discord too. I see.
Processing platform.
So yeah, hopefully that can serve you too. You just need audio.
That's something the market doesn't seem to appreciate, but it is certainly poised to be a difficult couple of quarters.
Understood. And tell me a little bit about some of the metrics. You mentioned some of them, but you're watching key data points, including gross merchandise volume, active buyers. Tell us a little bit about each of these points, why they're important.
Yeah, totally. So with eBay, it's the gross merchandise volume, platform sales drive revenue, obviously.
Oh,
and
got halted too soon.
Can be chopped
Trying to short it.
Buckets. One of those would be how much each buyer is spending on the platform, and that's what we typically see decline during periods of pressure.
There is news on FRC, I think.
The platform. But I'd say the key metric that investors should focus on as we move into earnings is going to be what's happening with eBay's base of habitual buyers, its enthusiast buyers. They've got about 17 million enthusiast buyers on the platform that spend a little more than $3,000 per year. Collectively, they account for more than 70% of gross merchandise volume, and they tend to shop those categories that we think of when we think eBay, like collectibles, like sneaker resale, like luxury handbags and watches, and so on. And so the health of that particular buyer is of critical importance this quarter and moving forward.
Yeah, without a doubt. Thank you so much, Sean Dunlop. Really appreciate it.
I might be bottoming here.
Morningstar, all set for eBay. We appreciate it. Thank you.
I was too slow on the trigger on that FRC short.
The energy space, Exxon, Chevron.
FRC Bank is said to face potential curb on Fed borrowings. FDIC considers lowering banks' ratings if deal isn't reached. FDIC move would likely limit FRC's access to Fed's facilities. So that could be bad. FRC is said to face potential curb on Fed borrowings. Halted. U.S. commits to make every effort to consult with South Korea on any possible nuclear weapons employment on the Korean peninsula. Just bounce there on SPY. And it's met with nothing. Raging Bull just covering your short now. Well done. When did you open this thing? 419. Bad play. Nighthawks behind the dip on BBBY. Yeah, because I think you can. I think there's still options on OTC stocks. Maybe. Oh, Not really though, there's no liquidity. At least not on Revlon. Maybe that is a stupid play. Nighthawk. Some more heavily traded OTC stock that might have liquidity on their options. Just want to compare it because it seems like the options will basically be worthless once it's OTC. Fine, new low there, still flushing down. This might be partially on this news about FRC. Everything's getting wrecked right now. Resumed. Oh. Back up a little bit. Oh, it's gonna get halted going up now. Yep. Cap down. Halted up now. Jeez. Good thing I didn't short that, I guess. What a mess. PIMCO's CIO Ivaskin says very low probability we end up with an outright US default. US default, highly unlikely, but a lot of back and forth negotiations expected. Says not obvious what a US default would do to bond yields. Jeez, I had called debit spreads on this thing just 2 days ago. The teens. At $5 now. Anyone puts on earnings? Hooray for lucky accidents. No reason to not pay bonds.
Quality and ability to process heavy crude. They have access to discount light crude. They have the lowest operating costs thanks to low-cost domestic natural gas. And that's become really an advantage with European refiners having to use and purchase very high-cost European natural gas. And so certainly, along with oil price, there's going to be some weakness in the near term around economic concerns, and there'll be some substantial weakness later in the year when we go into recession.
Still don't know.
However, if you look longer term again, those competitive advantages which are underlying refiners are remain in place. And so as we see weakening in global oil and gas, or excuse me, global gasoline demand due to EV adoption, U.S. refiners will continue to be competitively advantaged, which will allow them to export product into Europe, into Africa, into South America, and realize higher margins. And so you combine that with much stronger balance sheets than where they've been in recent years, and I think they look attractive long term. Now again, if you get a recession later in the year, you're going to get weakness in refiners. It's unavoidable. But for the longer term, they remain competitively positioned. They have strong balance sheets, and management is sticking with capital discipline. And so I think that makes them a long-term viable option.
Alan, good. And Ed Moya, thank you both. Good to see you. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides. I'll see you tomorrow. But keep it right here. Oliver Rennick, Market on Close, next.
See what happens in Power Hour, see if we get a bounce. Never mind, market. I want to 404.09. This is like yesterday's close, just a week into it, huh? Had this after yesterday's close though. This was like a 0.5% move. The bottom there to the top. Yeah, 0.6%. That's crazy. I don't know if we'll get that big of a bounce just because today was not as big of a sell-off. Big range overall, but down 0.4%. There's 3 o'clock, CNS closed. They have up until, I think, Friday. They have up until Friday to release earnings. That's true. Should be coming up next 2 days. It's kind of weird they haven't announced yet. Maybe under Chapter 11 they don't have to announce. I'm not sure. Maybe there's some I don't know, some protection from it. I think they still do. Even as an OTC stock, I think they need to, but maybe specifically under Chapter 11 they don't. Earnings could be catalyst for it to rip, honestly. Even if it's bad. I mean, look at last earnings. I don't think it was from earnings, but... What's this? This wasn't earnings. I don't know what that's showing. This earnings. What Weeble's doing here. It's coming down. Surely not in Power Hour. I mean, we're not going to get a whole lot of the stores closing this earnings. This is Q4 earnings, so they didn't close a lot of stores by end of Q4. You know, a lot of the stuff we've seen in the last 3 months, it's not going to be on this earnings, it'll be on next one. I mean, that was RC's tweet. What are you referring to? Ah, SPY, new low of the day there. Oh, he's stuck again. Went long there trying to get a bounce. We'll see. Got an hour left. If not now, hopefully bounce after hours. Yikes. Yeah, we should be good. That's an engulfing candle. I like that. That is an RSI divergence also on the 5-minute. But yeah, that's a good point, Julian. Thanks for reminding me. I totally forgot about earnings. Because they haven't announced a date yet, so it's not even something I've been looking forward to. And now we're getting engulfing on the bearish side. Oops.
Bitcoin up. Dollars down.
New low on the day.
It's chopping around though. Dollar was even lower this morning, but it's come back. The intraday move for the dollar right now versus the 10-year yield is kind of interesting because this morning we got a durable goods number that was pretty impressive. And yesterday's new home sales were also impressive. For the most part, housing has been in a world of its own as the only economic data set beating expectations, but this morning's durable goods were a surprising beat. It was odd that bonds weren't selling off.
But
eventually they did, and so we get some bond sellers today. Not doing a ton for the dollar, but the dollar did hold up above its recent lows. So even though the dollar's red on the session, it's still above the lows as we see here in the chart. Dollar's in the green, 10-year yield is in the white, and they're both bouncing off at or near multi-week lows. And I do think this intermediate term 2-week long chart is going to prove to be very important. We saw a lot of enthusiasm for risk on last month. Technically this month, we're not done for April just yet. Earlier this month, the VIX broke through to the downside. Levels we haven't seen in a long time.
It looks like it's going to be playing out.
Tech stocks were holding up ahead of earnings. Bitcoin was pushing to 30, but we haven't had the breakout move. And that's where Microsoft is such an exception today because it is having a breakout move. And it's generally holding on to it. We've lost a few bucks in the Microsoft chart indeed. We're at 295 right now. But it's a break above its multi-week range, and it's the highest going back to the summer last year. If we get that type of breakout in the other big tech names, like Meta this afternoon, today. Apple in a couple weeks, that will start to look like a market favoriting growth companies and lower rate regimes.
Or is it
make
money to get to 403.60?
Spreading far today. Alphabet couldn't hold up. Texas Instruments either. Both were higher in the afternoon. First response yesterday after their earnings was to the upside. And then we fade throughout the day here. Chip makers, the all-important semiconductor group, barely higher now today. If Microsoft were really telling us something broadly economically positive, the chip makers should be having a great day. But they're struggling. And of course, within all of that, there is a separate conversation to be had about the banks. The First Republic is down on the day, but it's up off the lows.
Yeah, what's this thing doing? Halted down again?
First Republic again today.
Gosh.
Day 2. This thing is just falling like a rock. The regional banks are actually up. Pretty amazing. KRE is actually firm on the day. Could be a lot worse.
This thing is
7
crazy
basis
halting.
points now down. That's it. for the regional bank ETF. That's pretty impressive. The way the market is able to take the specific problems for First Republic, put it in a silo, siphon it off, and deal with banks as a whole. And this chart actually doesn't look too bad. Could be a lot worse. And yes, regional banks as a whole still are at year-to-date lows, but at least it is stable. It's a very confusing situation right now. On one side, investors are hoping the bulls in tech and growth stocks that the Fed is going to have to pause and they're going to cut eventually. That's been the narrative. But the data hasn't deteriorated enough to justify the cut. Yesterday here we heard from Mario Gabelli that he doesn't believe that to be the case. The banks are just a one-time specific bank problem. Some of the companies are going to have to deal with those issues, but ultimately this is a normal part of the cycle. That's where inflation becomes very important on Friday. That's the big economic highlight after jobless claims tomorrow and the GDP, so the pressure is on. We're going to be trying to fit all this together. We got some great guests. Jens Nordvik joins us here at the top of the show to talk some macroeconomics. And then we've got the CEO of Morningstar to tell us about how investors are going to be dealing with a very uncertain landscape going forward here. How do we balance the two very opposing narratives? One looking for interest rate cuts and the other looking for a stable enough economy to maybe keep inflation bid. Pressure's high here as this market fails to break out today. Let's bring in Kevin Hanks and Renita Young joining me as we look at red across pretty much everything except for Microsoft. Tell me about that firstly here, Kevin, because when you look at the way this move is huge, Microsoft not able,
yeah,
though,
I have that
to
on here.
stoke a rally in the rest of the market. What does that tell you?
Yeah, I think it's interesting. Remember, Oliver, you and I started Morning Trade Live today with Microsoft to the rescue. Well, Microsoft has held up its end of the bargain. It's up 7+%. But the rest of the market, except for Boeing, if you look at the Dow, it's Microsoft up, it's Boeing up, and I believe every other stock in the Dow has softened, Oliver. This was a market green across the board that ended extremely weak yesterday, started with a big recovery rally, and hasn't been able to hold it, Oliver. This is worrisome because individual names in earnings season have their own stories, but the entire market is feeling a whole different level
Could make a head
of
and
risk
shoulders on the
off here,
5-minute
Oliver.
though.
It's getting really interesting here. You know,
Could break it.
the news in Microsoft has, because of cloud services, has bled into other names like Amazon is firmer today. Google hasn't been able to rally. The third place in cloud computing is Google Alphabet. They haven't been able to rally because they had earnings. They had a different story. So the good news is Amazon and Microsoft have felt some of the strength of cloud computing. Microsoft's felt strength for a lot of things, obviously, but I think that, this market, I was hesitant to get on board with it this morning, Oliver. Remember, we talked, can Microsoft lift the whole market? The answer so far, with about an hour to go in the trading day, is no.
It's every sector almost, with the exception of tech, of course. Every factor ETF that I follow is down on the day. Every single one.
10 of 11 lower.
More than a dozen that I look at. Yeah, and 10 of 11 sectors. Now, with that said, Renita, there's actually a little bit of a side story here for bulls in Micron today, which has been kind of the centerpiece of the geopolitical tension for chip makers. And we're seeing they're taking a route that might lessen their exposure to China. Market loves this.
Because of that geopolitical tension, Micron knew that the day would come when they'd have to diversify away from China. I mean, in 2022, about 25% of its revenue came from mainland China and Hong Kong. And so that's why it's setting up a chip production facility in India, of all places. And the company is planning also to stop offering chips that are cheaper beginning next month. That's another part of the news cycle today when it comes to Micron. But the Indian government is close to approving Micron's production facility. It's a proposal that it's close to approving, and it would be at about a $1 billion investment. And so the factory would be used to process some of Micron's wafers that are manufactured globally. It will be a full assembly, testing, marketing, and packaging facility, ATMP. And it would be a big win for Micron because of that U.S.-China tension. Also, it would be a big win for India since it has an incentive scheme that wants to produce more semiconductors and display fabs as well.
Get some stupid trades today on the futures.
A step in the
Sometimes
right
you make it
direction,
all back
literally,
in the last
physically, geographically, to try and sidestep some of these concerns. We've seen this with other big businesses, Apple even too.
In India too.
Yeah, exactly. If it's not here in the U.S., it's just not China. The market likes that. The fact that you've got another positive story for chips, yet the group is flat. Kevin, how much does this put on the pressure for tomorrow with GDP and then Friday with inflation? Because if these earnings don't stoke a rally, then we better get numbers that fit that cooling inflation narrative, or it seems like we could be in trouble.
Probably not.
Yeah, tomorrow's first look at first quarter GDP expected to be around 2%, Oliver, down from 2.6 is the last look at the fourth quarter GDP. So still a positive number, still nothing that threatens anything close to a recession. But Oliver, there's more issues. You've got a 2% GDP, but on
I accidentally made Ace Ventura in my background.
Outlays
Did you see that?
Year-over-year core is only looking down a tenth from 4.6 to 4.5. If that number comes in and starts getting stingy, remember this might, I believe, this is 2 months in a row where the move down in core PCE year-over-year has been non-existent. Basically, it's kind of stalled around this 4.5, 4.6 level, Oliver. That could be problematic for the overall market. You need to see the number, probably the number one thing that the Fed looks at, that year-over-year core PCE, you need that number coming down, not plateauing around 4.5%, Oliver. So the consensus for Thursday's number is 2% GDP. The consensus for year-over-year core is 4.5 on Friday, Oliver. Those are the two magic numbers for the next 2 days.
Okay, all right, good setup and a nice
Don't tell Ace I did
entree
that.
into our conversation here on the macroeconomics with Jens Nordvik.
We're good
Thanks,
now.
Smitty
We're
Young,
good.
and thanks, Kevin Hanks. Jens is the founder and CEO at Exanta Data, also the co-founder and CEO at Market
3%.
Reader.
Nice.
A very cool tool for traders under development.
3% on
Jens,
BY.
welcome back to the show. Great to have you on again.
Thank you. Thanks for the marketing. So we
absolutely.
FRC halted going up now. Dude, this thing. You halted into close.
Yeah, I was just going to say, Jens, for those that may not recall or weren't following along a couple years ago, you and I talked a lot about your work with Exanta Data on tracking all the COVID analytics. You guys were at the top of the game at that time. What's the data that you're following now? Because it seems like we're in such a different environment than the last time you and I spoke. What's the most important thing you're tracking? What are you looking at?
Yeah, we try to really have a focus shift to the most important aspect of what's going on in the market. So you're right, back in 2020, it was definitely COVID.
Thanks,
right?
guys.
And now we've had a
3%
couple
increase.
of years
That is
really
neat.
where it was the inflation forecasting that was the most most important macro driver. And I would say in 2023, we're shifting to a situation where it's really the credit dynamics that are the most important, right? So we spend an incredible amount of time on trying to figure out what's really going on with credit, what's going on with the bank lending, what's going on with bond issuance, private credit, like the whole spectrum, because that ultimately is going to be determining where the economy is heading. Right, because we've not seen rates that are significantly different from zero for many, many years, right? So how this is playing out, how negatively credit will be impacted is going to determine whether we have that recession that everybody is talking about around the corner, or whether it's actually going to be much further out in the future.
Jens, thinking about the potential ramifications of higher rates, there's been a lot of focus, of course, on the banks, refreshed anew the last 24 hours with First Republic's crash. Do you see any systemic fallout from this?
There should be a fallout
or
bank.
Is this an
There might be.
example of attrition
Maybe it's FRC, but
in a
I don't think so.
capitalistic world where some companies make mistakes and pay for it?
Yeah. So you mentioned a little bit earlier on, right, that today the regional bank sector is
trying to find
holding
one
up.
that's not so woke.
And like we use our tools, we use the market reader tool to scan the market every day, right? And we can see really the main bank stock that was moving early in the day was Pacific West. And there the news was quite different from First Republic, right? They actually had some deposit gains. And we've seen that over the last several weeks, right, that the market is hyper sensitive to what's going on with deposits. And it's sensitive to negative deposit news from First Republic. And it's also sensitive to some of the other smaller banks having positive news on that front. So we need to watch that very carefully. But I think you made a point that I strongly agree with, right? There is a degree of differentiation, right? We have seen that First Republic in some ways have had a business model that had similarities with Silicon Valley Bank. I'm not saying it's the same, right? But they've had some similarities, and they've been hurt. The deposits have shrunk. But it's not really a situation that is mirrored in the whole regional bank sector. We can see it in the weekly data from the Fed. We have our own data on money market flows that is daily, right? And we can see what's going on with that. And we've certainly moved beyond the most dramatic period of deposits moving into the money market funds. It's not totally done yet, but the most dramatic outflows have happened, right? So that's a sign of differentiation. And I have to say, it was pretty extraordinary the degree to which First Republic news, that was really news from Q1, could drive the entire market yesterday. But that just shows that we're in a vulnerable state. It's people have fears about the future, right? And that's the reason why we're so hypersensitive to those headlines.
I think that's a very interesting way you put that, because it looked literally exactly like the concerns that had been voiced for Silicon Valley Bank, just shifted over under a different name with a different company. I mean, it may not be good for the stock. It certainly does not seem good for the business, but it seems so familiar to the conversation we just had a month ago. Do you think that belies complacency across this market after such a big run-up that we've had as well? Should this be a little bit of a yellow flag at least, that perhaps valuations have come too far given some of the potential risks?
Well, we've certainly had a big rally, right? It's not just U.S. stocks, like European stocks have had a big rally this year. So that always creates some vulnerability. But I think I speak to institutional investors all week long, right? And the discussion everybody is having with themselves and with me is how deep is the downturn going to be? And when it's going to happen, right?
Dude,
so
look at the SPY.
we can also
Holy
see
crap.
like even secondary macroeconomic indicators like Dallas Fed, Philly Fed, like these indicators that people like literally couldn't care less about in the last couple of years, they can suddenly move the market very significantly. So we are hyper focused on any signs that the economy is really slowing. The big indicators, payrolls, GDP numbers, the ones that typically get the most focused are holding up. But the problem is that investors don't want to be run over, because the day when initial claims have a big spike or payrolls really shift down a big gear lower, it's going to be too late to reposition the portfolio, right? So they are trying to get ahead of when that shift is happening. And we certainly are in a process of going into a weaker economy. But the question is how weak and exactly when is the quarter when we're going to like shift down a gear in a very meaningful way.
It's true, it is
That's
Wednesday.
the debate everybody's having.
2 days.
We're looking at a chart right now, Jens. I want to make sure to get one of your charts in here.
It's been awful
Looking at
today.
the weekly change for jobless claims, we've seen it start to crack a little bit here in the last few readings after being so robust and basically being the pillar upon which the Fed built their interest rate aggression, the job market. Do you see us turning a corner here into something softer?
Yeah, so we're starting to see some evidence in the claims, right, that we're not following the typical seasonal patterns, and that's what's trying to be illustrated in that chart, right, that there's a normal seasonal pattern. And right now, actually, we're not improving like we should have been with claims going down in a normal year, right? So that's a warning sign. We're coming from very low levels of claims, right? So we have some deterioration. So this is actually a debate we have all along, right? The changes are not so good. The levels are still okay. So do you focus on the changes like looking like we're deteriorating? or you're focusing on the fact that the levels are kind of looking okay. It's a real tricky thing. And they're not giving, a lot of indicators are not giving super clear signals, right? So even if we think about, we have a forecasting methodology where we look at a battery of 30 to 40 indicators that
they're low on the day. They're on SPY.
Payrolls, right?
And
a fair few of them have deteriorated. They're deteriorating, right? But if you think about, okay, what level of payroll growth are they projecting? The level is still not so bad. So it's sort of this tension between levels and changes that we're having at this very, very tricky part of the cycle.
Very tricky indeed, Jens. We'll be looking forward to having you help us and shepherd us along the way with the analysis. Appreciate it, and we'll certainly be in touch. Jens Nordvig, founder and CEO, Exanta Data, co-founder and CEO at Market Reader as well. Appreciate the macro commentary. Let's bring it back here to Chicago. Let's talk about investors and advisors navigating a confusing market here and a year that looks quite a bit different from last year so far. Joining me, the CEO of Morningstar, Kunal Kapoor, with us here. Thanks for having us at your conference, and thanks for joining us, Kunal.
Glad to have you. Thanks for making it.
Absolutely. It's been busy here. It has been teeming, especially day two. You talked yesterday with the folks that joined in your keynote address. Kind of give us an assessment here of what the main messages you want to get across.
I think the main messages for advisors are really around staying the course, even though it's obviously a very uncertain time. Generally, as investors, I think staying the course is one of the best pieces of advice you can give. But even amidst that, there's so much change from a technology perspective. TD Ameritrade's right in the middle of a lot of those changes too. And I think just how advisors use technology to personalize risk, personalize portfolios, and particularly as you look at new areas that investors are, starting to look at, how they can effectively be served is a very important part of the message today.
What do you think is the biggest challenge facing advisors? Is it just trying to keep up with the technology and the tools that are in front of them?
It's not just the technology, it's the sheer volume of information. I think there's so much stuff going at advisors, and trying to sort through it and what makes sense and what to put in front of your clients is a pretty important and difficult task.
Is it too much information?
Well, there's no shortage of it.
Yeah.
The key is, I think, tuning out the noise. Probably don't need 90 to 95% of the information that goes at people.
Is that a matter then of trying to figure out what is marketing, what is salesmanship versus what is a real product? I think about ETFs as an example.
Could be. I mean, for me, it's more about the client and figuring out what the client's goals are, and just building long-lasting portfolios that stand the test of time and that maybe are not as impacted by a market environment, give or take some of the swings that do happen.
I think a lot of people in the investment world, especially as we have an audience where we think about trading and stock picking and such a lot, we're thinking about Morningstar as a rating service, say, number of stars on a company, good, bad, buy, sell, hold. Tell me about some of the other products and business lines that Morningstar is building out that you want to put out there that people may not know as much about.
Well, the ratings are a very important part of it, obviously, and we continue to expand the universe of securities that we're covering. But today, Morningstar not only covers the public markets and managed products, but we also are the leader via PitchBook in the private market and venture cap space. We're the world's 4th largest credit rating agency. And so the Morningstar of today is really covering the whole portfolio, if you will. And as the investor's portfolio has evolved, so too has Morningstar.
Do you feel any pressure as a ratings agency at a time where there's increasing concern about what's underlying the economy? Bank scare that we got a couple of weeks ago. A lot of people look back at financial crisis and they have a negative image in their mind about who was rating what as such when it turned out products were deteriorating.
Well, it sort of depends which rating you're talking about, but on the equity side, some of the outcomes have been divergent. So our analysts have been pretty quick to change the fair values of banks like First Republic and lower them substantially. Whereas we think some of the larger money center banks, on an equity basis at least, provide some interesting value. And yesterday I was using the example of even a mid-sized bank like Truist is rated 5 stars right now at Morningstar. So certainly you have to sort through it. There's always opportunity. And when it comes to debt, it's a similar thing. You got to look at exactly the quality of the debt, what it's backed up by. It's hard to kind of generalize, if you will.
Strategically, from a business standpoint, for Morningstar, what does that future of growth look like? Is it about bringing more clients into the products that you have, selling those products at right now? There's a push for companies to find margins at every scale. How do you do that while still serving the investor and the advisor
We
community?
think a lot about how do we bring more value to what we provide
Meta's
investors and
after hours,
advisors today, right? And so I wake up and I think about the platforms we have and how do we make them more valuable. And even
Thanks,
here
Jay
at the
from Bay.
conference,
Appreciate the support,
we just
man.
demoed Mo, our new AI avatar, and the idea there is to really help an advisor, for example, do the work that they're doing today much faster and at scale in a way that wasn't even possible 2 months ago. And so I wake up and I think about that, and through that I think good things happen, for the firm.
Where do you think that happy medium will be for advisors in embracing artificial intelligence and also not feeling like they're going to get robo-advised out of their
Well, the good news
role?
is I think it only makes them more effective. And there's always this narrative that technology is going to make humans obsolete, and I don't think it's real. It certainly changes what humans work on, and it changes how you think about your value proposition, but it generally tends to take away the tasks that are repetitive and that people don't really want to do anyway. And so I think they'll embrace it.
Is there any low-hanging fruit in that regard in either the advisor or investor?
I think there's a lot of low-hanging fruit just as it pertains to how you onboard a client, how you think about setting a client's portfolio up, how you think about comparing a client's risk profile to product risk profiles, how you take a client's current portfolio and sort through all the options available to them. There's a lot of ways technology can be leveraged in a far more efficient manner than having to do a large screen and spend an hour on each thing.
So it's replacing labor in a sense that one would have to do, or is it replacing something that people are doing as subjective that maybe just should be an objective quantitative
I think it's a
thing
little bit
robot
of
can do?
both. But what it does replace is the repetitive stuff that can be quantified.
Very cool. Kunal, looking forward to being in touch. Thanks a lot again for having
thanks
us.
for having me. I appreciate it.
Sure thing. I know you got a busy day. We'll let you keep running here.
Thanks for being here.
Absolutely. Kunal Kapoor is the CEO at Morningstar. And don't forget also, publicly traded stock, of course. Coming up, let's trade some options. All bullish across the board. I think Tom picked these this morning when everything was green. It certainly has shifted a little bit here. We'll dive into Amazon and American Airlines alongside Enphase. That's been red since the AM, though.
Scalise says House to vote on debt limit bill around 4:30 p.m. 5 p.m. Eastern time. Amazon says our decision to wind down Amazon Halo. 9 in 10 Canadians interested in a 4-day week. Elon Musk has said some version of Periscope and Vine are inevitable at Twitter. Oh. And SPY is just not getting the bounce yet. Probably be in the last 10 minutes or maybe even after hours like yesterday. Maybe no bounce at all. S&P's down 1.17%. Still filling that gap. Hoping for a bounce to get puts, but much luck today. Bounce was just that short-lived thing there. But didn't really see much of that on GME. Moves slow anyways. He has green 3%. Okay. MU is up almost 5%. Really the two stocks I'm shorting. Bravo.
Out there buying June calls, so you still have nearly 2 months in this position.
Oh, geez, okay. Yeah, stock hanging in there 2.5%. We got to wait till tomorrow, though, for Amazon. Today is all about Meta. You got an interesting one that's bullish and in phase with a huge sell-off today. Been going on all day, basically, down 26%.
Yeah, and it's pretty surprising. If you just look at the top and bottom line numbers here for end phase, they weren't horrible. I mean, they call it a miss, but I think you're seeing a deceleration, especially here domestically. They saw growth of about 25% overseas, but they saw a pullback. The CEO stated a pullback in the U.S. for the first quarter, a decrease of about 9% on revenue here due to seasonality and microeconomic conditions, while Europe gained about 25%. Their non-GAAP margins up about 45.7%. That was expected to be about 44%, so margins weren't bad. The stock did get downgraded earlier today out of B of A. They took the price target way down here, Oliver, from about 227 to 169 post these results. And the analyst stated that basically a lot of people are going to say, hey, this pullback that we're seeing of over 25% to the downside might look like a good buying opportunity, but it's not. The analyst came out and said that they're seeing deterioration that's likely to linger for a while, and the headwinds will be there. So for this solar company, it doesn't look good just on a day chart here, but somebody may be trying to pick, a spot where they can get in for a short-term position here with the stock down so much. The April 28th weekly cycles, we saw over 5,000 of those bought on the 170 strike calls for an average debit of about 210. So that break even of 172.10 over the next 2 days is about 5.5–6% above the current share price in their call volume, about 8 times normal daily average volume that we've seen over the last 5 trading sessions. So we've seen a lot of flows in this one.
New low on the day there for SPY.
A lot of call volume, but at the same time, put
close,
volume is about 13 times normal daily average volume. So we've definitely seen people maybe take some positioning to the downside also, but this one definitely a bullish trade. Yeah, both ways.
Yeah. All right. Okay. Yeah. I mean, look, great stock at half of last year. Bad stock basically since the calendar year switched over a little bit before that, the peak from December. So we've fully unwound the IRA rally, Inflation Reduction Act rally, the IRAR. Okay, that's what happened at the end of last year. All right, so we've unwound it. That's pretty rough.
New low on the day for
all the solar stuff also getting killed today, though. So just kind of a broad group. Tom, how about for American? Where does that fit in right now? Shares down about 1%, near the 1-year lows. I mean, are we going to make new lows in the airlines? Because that's upsetting.
Well, it's upsetting for American Airlines. You look at that chart right there. This stock is down about 13% so far this month. Most of the other
upsetting for all of us.
Yeah,
we're gonna have to jack up prices even more.
Oh boy! And I was just traveling last weekend, Oliver, on American, and the flight was full, and they had a standby list of 25 people. So people are still traveling out there, but
no upgrades.
These stocks cannot recover. American's down 13% this month. The other major carriers Delta, United, Southwest, they're only down about 4% this month. But that's probably due to the fact that, remember, the day before Delta Airlines came out with their announcement a couple weeks ago, they had a pre-announcement out of American where they said unit revenue, unit cost all coming in at the midpoint of their original guidance, so no upside surprise there. That's why it's probably under pressure more than the other airlines. But somebody positioning in some cheap calls to the upside here ahead of their earnings tomorrow morning. Option market's pricing in about a plus or minus 5% move in the shares. But traders were in there buying the May 14 strike calls. Over 15,000 of those bought for an average debit of about 20 cents. So that break even of 14.20 over the next 23 days is 11% above the current share price. Now, we did see a nice beat out of JetBlue the other day. That stock went higher based on a lot of their numbers on their report. Will that parlay into good numbers for American Airlines? Because remember, they have that partnership now also. But somebody thinking that, hey, I can buy some cheap calls here for the next 3 weeks, see if it plays out to the upside here if we get a surprise out of American.
Okay. Interesting trades, Tom. Interesting trades. American down near 1-year lows. Brutal stuff. Brutal stuff. People traveling. Revenge travel. They're charging whatever they want. Right. They got wait lists out the wazoo.
Revenge travel.
Guy can't get an upgrade no matter how gold or platinum he is, and yet the stock still doesn't work.
Right.
My goodness. What happens if the economy slows down? These airlines are going to just get destroyed.
They might be.
All right. Thanks for the trades, Tom.
Yep.
Appreciate it.
It's revenge traveling.
All trades. I think
I didn't get to travel during COVID.
But we'll take them in the afternoon.
It's
Appreciate
revenge
the
traveling
eyes, Tom, on where options traders are betting. Fade is still underway. Got bad news for bulls here. I phrased it this morning as a bit of a make or break day. It's kind of breaking. Only thing working here is Microsoft and a few other companies around it, including the move in Micron. And the coiners, too, failed to break out. We'll talk about some of the other futures activity with
Revenge traveling. FRC's trading. Nah. I'm not staying home anymore, travel. Yes, that revenge traveling. Will not stay home. Big candles down here. Only 20 minutes left now. stayed in the same channel since yesterday. Aggressive sell-off.
There's enough to be excited about to see a 20% rally in shares on the day. Losses at Fisker though have been smaller than some of their EV peers because they do not own their own manufacturing plant. Even though we have seen weakness, shares were down ahead of or before today's move per se, 53% over the last 12 months. We're still well off yearly highs, and the stock is relatively speaking a lower cost than some of the more established names. So while we are seeing some nice movement today and now some nice movement for the week, I think be mindful that this is still a fairly speculative new space, at least for newcomers like Lucid, Rivian, Fisker is another one where there still seems to be some hiccups in terms of the production line.
Yeah, $5.9 stock down from the 30-plus highs certainly speaks to the difficulty and the road ahead that they're having from a competitive landscape. But approvals and clearances being given to start selling and
catalyst before Tuesday?
With
Or you plan on holding those through OTC?
So obviously, market's going to like that in the moment. So maybe we'll keep our eyes on the follow through, see if it gets it, or if it's one of these kind of one-time pops these stocks get. Still a lot more to go if they're going to approve out the model. Fisker Ocean. All right, thanks, Jenny. Host of Next Gen Investing with your developing story. Let's talk about the developing story in markets here with Mr. Dan Deming, the one and only Managing Director at KKM Financial. Dan, we got a little bit of a fade on our hands. What should we make of this second half of the day?
Yeah, Oliver, it's not looking particularly positive as we are rolling over once again today. Some hopes based on the earnings announcements, and we did see the market trade lower and then dig its way out of the hole as far as I'm looking at the S&P, and now we're fading back down towards the lows of the day and pushing back down over 0.5% down on the day. So couple that with yesterday, and we're seeing the markets down over 2% in 2 days. For the majority of the stocks, there's those outliers that are holding up the NASDAQ, but overall the momentum appears to be continuing to shift towards the downside. And I think, Oliver, for a couple reasons. Number one, we're seeing, again, economic activity continuing to wane, and there's concerns now as far as the regional banks are certainly back in the headline, and I think the debt ceiling situation continues to be another driving factor.
All right. So the lingering uncertainty there, too, something to put on our calendar for the debt ceiling. Maybe we finally crack through it. Maybe everyone caves like they usually do. Crude oil's down 4% today.
Bitcoin rallying, isn't it?
Even as the dollar down,
the banks sell off from the scare.
Bitcoin had this huge rally alongside the big tech names last night and is now back down to 28. I mean, do we just have failure to launch here today, Dan?
Yeah, it feels like it, Oliver. You're seeing, the expectations for the Fed announcement next week. It's a 30-70% kind of situation, 30% probability that they hold, 70% that they hike by 0.25%, and so that's come in though. It was a much higher probability just a couple days ago. So I think that's one dynamic here. But overall, it just feels like the banking sector situation continues to work its way through the expectations in the market as far as the potential impact of that from just an investment standpoint, from activity moving forward. You're looking at stocks like Caterpillar under some pressure here going into earnings announcement, and overall just the general trends of the healthcare now coming under some significant selling pressure the last couple of days as they move through earnings cycle. So some of the defensive measures that held up here reasonably well over the last several weeks are now starting to show signs of weakness as well. So I think you're just seeing a rotation here, Oliver. I think there's setting up before these big announcements coming in the next couple of weeks. Several central banks, and you talk about the dollar, we're seeing the dollar now trending back down with the euro holding up near its highs, multi-month, if not multi-year high, well, almost a year highs. as the ECB is not backing down. So, you know, the expectations are that like the Bank of England, the
scare
ECB
bank
are going
pump
to
is
continue
over,
to
I
raise
guess.
rates, where the Reserve Bank
How
of
weak
Australia is
SPY
probably
is,
going to
man.
hold. And you're seeing that playing out within the currency markets.
Okay. Yeah, the fact that we're seeing a little bit more aggression from some of the other central banks, and we see that dollar weakness, but it just can't break through, it seems, the lows. We keep finding a little support, even if on the margin here, for that dollar. Dan, I mean, if inflation doesn't come in light on Friday, you think there's a possibility here maybe the dollar survives and the Fed indeed stays the course?
Yeah, sure. I think, yeah, these next 2 days are going to be big. GDP tomorrow, and then some of the inflation data that will come out in the coming days as well, and earnings as well. But yeah, I mean, you know, you're seeing just there is a great deal of uncertainty that's underneath this market that got washed away a little bit in the last couple of weeks, but now it's coming back, and that's what I'm pointing to is the banking sector. There's still a lot of unanswered questions there, and I think that that's causing concerns. Couple that as we inch closer to the debt ceiling. I know there's been some discussions the last 24 to 48 hours, but I think that that becomes a real concern for the market. It already has been, and I think it will continue to be more so as we push up against that potential in early June. So the market's focused on so many different things, and we're once again, as you pointed out, even though we're giving up some ground here, we're still range bound across basically various asset
There's
classes.
a
So,
BBY flush
it's
to end out your day.
a tethered type of situation where we're kind of being pulled back to these
Something
mean
like a little red
areas
on
within various
Bed
asset
Bath
classes.
for your afternoon.
Got it. All right. Nice commentary, Dan Deming. Thanks. I think that's a pretty fair assessment here of the situation. Good stuff as always. Managing Director at KKM Financial. Coming up, we got our Schwab panel. Let's talk some more about the data ahead.
Great tax loss. You'd have to realize those
here to take us into the bell.
losses
About 10 minutes away.
close.
And then we've got earnings. Don't forget, this afternoon's going to be busy. We got a lot to talk about here with Meta set to report, Roku, KLA 10 Core, eBay, ServiceNow. Busy
Just
afternoon.
in
We're not done
time.
yet.
Still holding support from that inverted head and shoulders earlier. Well, I guess it was back here. This wasn't really a shoulder on it. You forget that. 10 minutes of Fugazi there on SPY. Look at that thing. Getting wild. Oh, Ace is back with some Jenny hype. Jenny came on too. A late stream. We got 10 minutes to close. Oh, I'm not doing a video today. Just in time for little Ace to watch BBY flush. Look at that thing go. $0.12 on Bed Bath, down almost 40%. 1170 is all-time low. Hit it today. Still haven't hit our 10-cent target. Maybe that's for tomorrow. He can't flush. Can't flush anymore. He's already flushed. Let's go. 60 cents by Friday. That's crazy. That's a 6x almost from here. Wasn't SPY calls. Well, for my future's sake, I hope your SPY calls print. what is 60 cents from here? It's 60 cents. Are you serious? Crazy. There's a wick on the downside for SPY. See if it can rip rocket up to VWAP. Not so much. Halts and GME? It's gonna fill that gap. 1940 was not even, didn't even mess with 1940 for support. So I think that gap fills quite likely. I mean, we're almost there today even. 1775. Somewhere around there's a gap. See if it finds support there. It could bounce there. And if it doesn't, then another gap down here at 1680. Same deal. But then you're just looking, of course, at the support. This obvious double bottom we had down here. See if it bounces there. Depends on what the market's doing. If we're getting a big market sell-off, then why not hold 15? I don't know why it's doing this. It did this for BBY also. You guys notice this? BBY and GME. It's giving two different earnings dates. Make any sense? 328 and 321. Eyes coming up a little bit. BBY, it added this one. 110 and then it added one at 126. Don't know why it's doing that. Oh, BBY almost to the lows of the day, guys. We're almost gonna get two all-time lows on BBY in the same day. Totally different parts of the day. $400% to 60 cents. Yep. There's a SPY rip. BBY nightmare. Fidelity? Yeah, I'm sure it does. You probably have to sign some disclaimers. I think pretty much any of the brokerages you should be able to close your position. As far as opening new positions, yeah. That's the limitation. It's not closing a position you already have. They'll let you do that. It's opening a new one. The thing is with the options, options are gonna be so liquid. I probably wouldn't have options going in there. Look at that candle on SPY. Holy rip-a-moly. This is what we needed. Making back some of those losses from those stupid trades earlier.
I think as it relates in the short run, and what we're looking at next week, I think there's very little that can change Fed officials' minds about their decision.
You'll be able to sell them, Ace. I'm sure that's all you care about since you don't want to average in.
Very, very high or very, very low.
I'm playing meta earnings with my futures.
Decision making.
No, not meta specifically though.
Because one indicator isn't necessarily or doesn't mark a trend. What would happen over the next few months, though, would be
new low of
inflation coming in a
the
lot
day
hotter
and all
than
time
what
on
we've seen now.
BBY.
That would likely
1151.
spook the Fed
Congratulations.
because they keep harping on the point
42%
that
down.
has moved in the right direction.
That much closer to
That
10 cents.
Disinflation has slowed, but they're acknowledging that it's still too high. So
Only
if that
another
kind of
13%
reverses
to
and
10
we still
cents.
see too hot inflation, given that
That
the
is neat.
banking concerns have somewhat settled down a little bit, that would give the Fed some runway to hike a little bit more than what the markets are expecting right now. So we'll have to see how that plays out over the next few months. In terms of inflation, that would come down significantly lower. I don't know if that will suddenly move the needle and pull forward rate cuts, because then I think all eyes would look at the labor market. And if we still see a labor market that's still hot, we're seeing wages growing in the 3%, 4% area like we've seen lately. I think that would still give Fed officials a little bit of pause and be concerned about cutting too early, and because that could cause inflationary pressures
Always
to
in the
remain
last
bubbling underneath
10
the
minutes.
surface.
Crazy move. BY is still coming down 42%, dude.
The numbers and with GDP, jobless, and inflation, it's going to be pretty busy. Kevin, I know you've been tracking leading economic indicators. Does that data set give us any insight into whether or not the consensus is shy or heavy or anything maybe to the element of surprise? What would that data set suggest?
Well, I mean, it's definitely, every signal you're getting from something like the leading economic index from the Conference Board is flashing recession. I mean, you could look at the number of consecutive monthly declines, which just hit 12. You can look at the year-over-year decline, the 6-month annualized decline. Literally every signal you're getting is consistent when you look back in history with recessions. The difference now, of course, is just the unique nature of this cycle. So, the decline we've seen thus far
Considering
is
holding after hours, but if meta earnings are bad,
would be
it's
either starting now or kind of a
gonna
couple
mess up
months
the
away.
market.
But then when you look at the strength among the coincident indicators, the 4 that the Conference Board tracks, which are the same 4 that the NBER tracks to determine whether we're in a recession, those are not yet flashing a recession signal. They're not going to give us a heads up. That's why they're coincident in nature. But that pretty strong bifurcation, I think, speaks to really the unique nature of this crisis and, inflation really being at the heart of it. So, yeah, you're getting that same signal. I'm not sure if it's weaker than it has been in the past. I think it's maybe just lengthened from start to finish. And then maybe that's the same on the coming out of the recession, too, when we eventually get one.
Eventually get one.
Got it.
When I'm eventually allowed to say we're in a recession.
Seems like the conversation here is still one about economic risks to the downside. We got a pretty warm, durable goods number this morning, Kevin. To give us a quick thought on that. I mean, that kind of came out of nowhere. It seems like that used to be a fairly high-ranking economic data point, but is it that way still?
Turn around. Every time I buy just a little bit more, and it hurts so much. Turn around. Every time I buy just a little bit more, and then I see that look in your turn around. Bright eyes.
I would keep much more focus on the core measure because that's
every now and then it fall apart.
In total, what was interesting about not just the durable goods
Jeez,
data,
Ace, you got me going, man.
into GDP, the estimates for the first quarter,
turn around, bright eyes hype.
GDP now model that was updated today has come all the way down to 1.1%. Consumer spending has taken more of a hit, but it was actually much more because of retail sales being
never mind, 10 seconds.
Higher
15
for
seconds.
last year, so the overall level being brought up. But that, so we were working off of kind of a higher base. So it was a little bit of a wash that way. But you're still seeing some pretty solid momentum, I think, probably from the Fed's perspective and what they would look at and what Colin was saying and the strength of the labor market. Probably
holy bells.
On the break,
Sorry.
And they can use
3.
that as cover for now, I would think.
Got it. All right. Hey, Colin.
Stick around for a little bit, see what's going on with Meta. Meta.
Stuff. Dan Deming mentioned it in our last conversation.
We're flushy on BY after hours. Look at that.
End up raising the roof, right?
11:20.
Oh, we do, and we think that the risk we think is relatively low, but it still does exist. We think
so loud
day,
it was.
Some sort of deal will get done, but there are risks, and the 2 things and 2 outcomes we'd see as negotiations continue. First, is we'd expect to see some
that has come up a little bit.
Let's
see.
Market. We're already starting to see that with very short-term T-bills having lower yields than the Fed funds rate and lower yields than those bills around that X-date when extraordinary measures would be exhausted. But as the negotiations also get closer with
Ace?
deal being done, we'd expect to see
You did it after hours members drop. Thank you, sir. Appreciate it, Ace.
As the markets get a little bit worried, they'd flight to
Kuro,
safety with long-term treasuries.
you've been gifted a membership. Max Carter, Drew, Justin, Atomic Rob, all y'all belong in chat. Come thank Papa Ace. Make sure and drop a thumbs up if you haven't. Subscribe if you haven't done that either. You are now a member. Jump on our Discord. I'll give you a happy crew roll badge.
The ego on you.
We also have a bunch of
seems like we have
emotes in the chat.
But we moved through it. Hopefully,
most of
always
them.
The case. Thanks, Colin Martin, Kevin Cohen. Appreciate it, guys.
Contribution to Ace Ventura.
Right now, the ego on you. Of its early
Thank you, Ace. Appreciate it, man.
And it was red everywhere else. We've got earnings coming up. Meta, Roku, ServiceNow, eBay. Be right back.
I think Jay from the Bay got the GIF for me. Oh, I can't remember what he's singing here. I think he's just humming. Oh, calling in all the birds. Got some Jenny hypes. Oh, Jenny hypes. All right, Meta's going up. Have they announced yet? Facebook parent. No, nothing. I see it on here first. Oh, hello. Any hype? A little pre-hype run up here on Meta, I think. Nothing crazy yet. Lizard Boy saved the day. Maybe. I don't know how much pull that's gonna have on the SPY. What was it, Nvidia earnings? One of those earnings really surprised me. It just, that's what stopped me out at 418 on my short. Still bitter about that. Back here, 416. But there, no, it's here. That's been 2 months. I'm still talking about that. Yeah, I had a nice, like a perfect entry on the short, and then after hours volatility stopped me out from that earnings. I couldn't believe how much that thing swung it. So I don't know. We've got, what do we have? Meta and, why did I say Meta? So funny. Meta and is it Google too? I think. So that could have some weight. $50 likes. That would be neat. Yeah, you guys that just became members, do it, do it. Kuro, Max Carter, Drew, Justin, Atomic Rob, you've been called to the stage. Report to the first row. He looks more human than that shark guy we watched on TD. Thinking tomorrow Jimmy might bounce. Maybe a little bit, kind of like how it did today. Or how SPY did at least. I mean, didn't really get a bounce with that. 3 more. Jay from the base calling it out, man. He's putting the weight on you guys. Get your likes in before it's too late. You don't want to see what happens if you miss the time.
Good indication of that as well. So want to dig into these numbers a bit more, but it is a beat on the top and bottom line. We're seeing shares down about, actually I'm seeing shares reverse course now, and I'm actually seeing them up a little bit now. So maybe investors
the beat,
are
but not much.
and liking a bit
there it
more
is.
Than,
oh, that's Roku
what
they're
they
talking
initially
about.
saw, because now I'm seeing a pop of about 2%. So have to look into
so beat on EPS
commentary on ad spending, and as
for
you
Roku,
said,
beat on Rev.
You know, tightening budgets. Of course, we know it's Meta's year of efficiency, but it's so many companies' years of efficiency. So I think
on EPS.
Investors will be keen to know what they're doing. But as you can see here, a narrower than expected loss on higher than expected revenue, and seeing shares pop a bit in response, up about 5% right now.
A-hole.
The average revenue per user is down from the year prior. by about 5%.
It's
I
me.
think that was in the cards. We knew that was coming, but still,
it was me.
Relative to expectations, perhaps not the worst here, but it seems like there's some real fundamental deterioration in this company. Kevin, still losing a lot of money on the bottom line.
Good job, guys. 50 likes, well done.
Actually sliding in
Give
terms
yourself
of
some
revenue,
hypes in the
we did
chat.
know that this could be the first revenue decline
50
for the
like
stock.
hypes.
Yeah, definitely.
Little
Oliver.
wins.
We
Add 'em
continue
up.
to get some information coming in here. So it does appear like this earnings announcement is mixed when you're talking about some of the numbers, but they did provide guidance for the next quarter to come in at around 770 million when it comes to revenue. Street was actually looking for 767.6 million. So they actually increased their guidance and beat
I might
the
leave
Street's
these futures just for
expectations.
stop
It
loss
also
on them.
looks like they are going to be
Guess we get like
announcing,
another
or they have announced a
0.5% move
partnership
to the
with
upside like
Instacart,
yesterday.
as well. So that also might be a little bit of good news for them to be able to increase their
I would
branding, increase
fully
their
get rid of my
their
losses today on
ability
the
to be able to
futures trades.
obviously help marketeers, and that's how they make money, but also
Yeah,
to
I'm
try
interested
to
to do that.
increase their overall market share in the business. So I think that's also another reason why we are seeing that move to the upside.
Jenny's
here.
hypes.
They do see a total gross profit for
just
Q2
revert to
at
Jenny no
roughly
matter what.
335 million, and adjusted
Hoping
EBITDA coming in
to
at
summon her back.
75 million. So once again, I think this is kind of
This
a
work?
report that is a little bit mixed, but I do believe the forward guidance is really what's driving the stock to the upside. That partnership, they haven't really partnered with a lot of companies, so this
I'll
might
never
be something
tell
that
Ace.
gives them a little bit of an edge. I'm not sure how much of an edge. I think we'll probably hear that on the call, but it does sound like they are trying to make some moves in order to improve their business. And as you said, we're trying to see a company that can turn a profit here relatively soon. We have not seen really great quarters coming out of this company. They have been very erratic, to say the least. Actually, the market move for this was around 13.5%. The option market was looking for, so it's less than that right now on this move, but it could move a little bit more based on the details of the call.
Wow. The Instacart partnership. So when I'm watching something on Roku and I'm all of a sudden getting hungry and I want to order some stuff, maybe they just want the data of what I'm consuming. To me, Caroline, this is not like a huge game changer. I mean, look, I guess for both of them to share a little bit of brand recognizability, but the delivery combined with the streaming.
You can't Google reverse image an emoji. Yeah, right.
I'm not quite so sure. I will say this isn't the first time that I've heard Instacart partnering with the company, though. I've had several offers that apparently I get free Instacart memberships with certain credit cards that I have and other services that I have that I haven't necessarily taken advantage of. So I'm not sure what that's actually going to mean in terms of translation to top and bottom line. That being said, I am looking at KLA 10 Core in terms of shares. They're basically flat at on these results, but just taking a look, it was definitely beat on the top line.
Oh, look at that candle from Meta. Holy smokes.
In terms of, I see the guidance, but
wow, it really
see
ripped
the
this by.
EPS of $5.03.
And back
Want to
down.
make sure that's adjusted because the
That was
estimate
5%
was for $5.30.
instantly.
So if that's the adjusted
Don't you
figure,
love
that would be a
non-halting
miss.
markets? Look how much fun we could have if they wouldn't try and screw with us all the time.
EPS of $4.23.
They have to limit you emotionally so you don't make an irrational decision.
Sorry, it's just coming
Look
in
at that
as
thing
I'm
rip.
saying this, so just trying to make sure. So guys, for $4.23 to $5.43 on revenue of 2.125 to 2.375 billion. So EPS basically in line. Wall
Meta
Street was looking
earnings.
for $4.52. So that's kind of at the midpoint there on revenue of 2.185 billion for Q4, and so that's
I'm
also
assuming it beat.
in line in terms of Q3 EPS.
There you
okay,
go,
so the
SPY.
adjusted
Get it
figure
up
is
there.
$5.49.
A quarter
so that
percent.
would be a beat by about 19 cents. So a beat on both the top and bottom line.
Broke through that
As
resistance.
you can see there, in terms of shares, though,
What else do we
they're
have, Google?
basically not really moving on these results. So let's see if we get any more reaction as we get a few more of these numbers coming in.
Yeah, the outlook for both the bottom and top line
eBay came out too.
significantly above where the expectations were.
Oh, eBay beat
Any
also.
particular reason why the market might not
eBay
reward
EPS
them for
was
that, Kevin,
111
or is
versus
this,
estimates 107.
just another kind of
Sales
spoke
2.5
in the
billion.
wheel
Estimates
of the market's
2.48.
day-to-day
So beat on sales, beat on
gyrations
EPS.
around where we are in the economic cycle.
That has had to have done pretty well.
Yeah, no, I would
10% move on a market cap that big is crazy.
These are actually kind of really mixed
$500
results.
million.
The only thing that I would say, the reason why the street's a little bit confused,
Glad I got rid of that limit order.
$4.23 to $5.43. That's $1.20. That's a pretty significant range there.
Ooh,
that
10.5%.
You really have no clue how your quarter is going to end up in the next couple of months here. And I think that uneasiness or inability to be able to pinpoint that may cause a little bit of uneasiness for the street here.
You guys up 7?
You know, when I'm looking at some of these numbers from the top line,
from Meta earnings,
and some of the internals, it doesn't look all
a little
that
sympathy.
bad. It just may just signal
bet against AI.
From a revenue standpoint,
is Meta AI now?
Where they're guiding
how
towards,
people are
it's a little bit more
perceiving
direct, but it looks like they may not know what the impact of expenses are
almost
going to be. And
coming
that's
back up to where it was
just
before it started plummeting to close.
Significant when you're talking about $1.20.
This is so exciting.
A company that's fairly large. It could be pretty significant from a hit or miss standpoint for next quarter. So I think that's probably the confusion the street's trying to digest right now.
All right. Hey, guys, we got some Meta numbers.
Meta.
Let's talk about it here.
First quarter
Nice
EPS 220, estimates were 201. Wow, that's a pretty big beat. Holy. Yeah. 220 versus 201. Rev 28 billion, estimates were 26. Beat on Rev, beat on estimates or EPS by a large amount. What, 10%? Is that why you're up 10%?
To the estimate, and daily active users are still positive, up 4% to more than $2 billion. If you stretch it, that's for Facebook, by the way. If you stretch it across the entire family of products, you get another billion active users to 3. Now, revenue for the outlook, 29.5 to 32. The street was looking for 29.5, so they're saying at a minimum.
I think AI and NFTs actually, or at least blockchain, kind of go hand in hand. Because with AI, you're going to get a lot more fraud.
We're looking for
you won't know what's authentic anymore.
To deliver more efficiencies.
And we've already been in that. What's an authentic picture? Oh, it's Photoshop. You know, that was the phrase from 2010 till 2020. Oh, that picture's fake, and even video. Oh, that's doctored or edited.
Deceleration, which I think is really important.
So I think with AI, I mean, it's there's going to be a higher value on authenticating something that's being presented in media format.
I think a lot of analysts were expecting revenue deceleration, and this is a bit of acceleration. It was 27.9 in the year ago period, so I think that's important to note. You know, obviously this is the year of efficiency. We want to make sure that Meta's cost cuts are actually equating to higher margins.
Plus 20 for call sprint.
But I do see a
was market maker pricing in a $20 move?
30 to $33 billion. Unchanged from our prior estimate. Total expense of 86.
Yeah, it's been replacing jobs for like at least a decade.
2023, and
it's already been happening.
Some restructuring costs that they're they're mentioning. So just taking a look at shares, they're up about 10% on these results. So I think that definitely, as you said, beat on both top and bottom line. Daily active users, monthly active users coming in slightly ahead of expectations, but that's
you guys didn't have enough Jenny emotes.
So
summon her back.
You know, I was talking about ad dollars for Roku. That's obviously going to be very.
I think the last earnings were so awful, maybe on a lot of companies, that analysts just expectations dropped a lot. That's pretty common. I mean, if you have really bad earnings, it's great for the next one because analysts will probably drop expectations a lot. So if you do well, it's going to be a beat. That said, I don't know what Meta's earnings were last time at all. I'm just kind of guessing. Oh, they did good last time too. So talking crazy, I guess.
Essentially, is are they going to continue cutting costs, and are they going to cut
Not sure why they were
the metaverse?
bearish.
So we'll have to see if any expectations.
I'd probably prefer an AI for POTUS, yeah.
If we don't hear that from
that's basically what we have,
on this
right?
Call. But overall,
just a puppet.
It seems like investors are pretty happy right now with shares up double digits after hours.
Photoshop,
yeah, check that. Moving quite a bit. NASDAQ futures moving with it.
Also
to the point about the metaverse, the namesake here, the Reality Labs, which burned through $14 billion last year. Kevin Green, give me a quick thought on what you want to listen for as it pertains to the year of efficiency.
Well, it depends on how it was priced in last earnings. That's what I was saying. It looks like they missed last earnings too, or the analysts missed expectations because it ripped.
To invest in something that right now seems speculative and so far a big
I figured by this point. Let's see, we might still be reeling back from this.
Probably just a
this earnings that missed on the bad side.
What do you want to hear him say?
Then surprises on the upside twice in a row.
The future. What are they going to really be focusing on?
Is it whipsaws the
is it something else? I think they're trying to get back to their core business, focusing on ads. How can they actually expand the Reels product as well? That is starting to gain a lot of traction.
Sure, who would do something like that either?
Cutting the costs and the research into the metaverse here, Oliver. Data center assets were actually an inflow for the company, $168 million. So it does seem like they got rid of maybe some of the data center assets in itself. We kind of heard about some of that activity, especially the expansion projects that were going to be happening overseas. But overall, this does look like a pretty good report. This stock is also up fairly significantly because of the perceived notion that TikTok may be banned as well. So there's a lot of premium. There's a lot of anticipation that's in this stock at this point in time. Now they're just going to be able to have to, prove it over the long term. And how much are they going to continue to cut? I know that they've done some pretty aggressive cuts over the last 6 months. Are they going to continue with that type of route? At some point, you're going to hit a lower end as to how much you can cut, as well as being efficient and trying to be able to grow. I think that's kind of maybe what you're kind of talking about as well. Where do you balance out growth compared to expenses? And you want to see top line growth. You don't want to see cutting from the bottom line. That's only a short-term band-aid. But right now, it does look like they are making some pretty good headway when it comes to trying to manage these expenses. It's being reflected. And then once again, you kind of talked about it. These are still contracting numbers on a year-over-year basis, but this would provide them a nice little platform next year as they have some comps going forward. And this should be a nice little floor for them to be able to show their progress as far as top-line growth in the next 12 months.
Okay, all right. Still some proving that they have to do on the Metaverse project, but at least they've proved they can buckle down, make hard decisions, let people go, trim costs, trim fat, certainly showing up here in these numbers. Thanks.
Kind of like GME's last earnings.
We're going to go to George Tilson.
Where it beat because they're basically just selling through inventory they already had on their balance sheet.
Repeat of yesterday. You got eBay up, you got ServiceNow higher, and of course Meta is ripping.
Okay, I'm going to cut it off there, guys. Thanks so much for the support today. Thank you guys for your subscriptions, your likes. Got to 50 likes. Well done. Well done. Yeah, BBY. I'm not gonna do a recap video. BBY is pretty weak. This is actually what we've seen, and I should have known that. Bad news doesn't usually rebound same day. It's gonna take some time. Just like this. Although this was pretty good same day after that chapter 11. Had that rip, and then wasn't that it right there? Yeah. So we'll see. We'll see if it marinates, if it's more selling off with it, or if we actually bounce. It's not looking good though so far. It doesn't look like it's going to bounce yet. It did kind of try and hold the lows from pre-market. So, but then was it Bullions that shared the price of Revlon from when they got notice of delisting till delisting? That was pretty bleak, I think. So. I don't know. I very well, the shares I picked up today, I might even just hold them into OTC. I think the valuation, if shareholders do get anything, I think this could be a 10x from here. 52 million, 500 million, yeah. I don't see why this wouldn't be worth that, or much more, really. But was planning to trade it, and I still might if we do get some good price action before the weekend. And if it's not into the weekend, then I'll probably hold over the weekend. But if we get a bump back up to, I don't even know, 18 cents, 18 or 21, I'd probably close. Then I don't know, maybe buy it back on Monday. We'll just see what happens over the weekend. But thanks, Jay from the Bay. Thanks, Ace. Thanks, Christopher. 4 hours staying oversold, Punchy. $1. $1. Make me holla. it's, you know, the RSI is very sensitive right now on GME because it's been moving so slowly. So you have to consider that when you're looking at it. So that's how the RSI works, right? So when it's consolidating, it's going to get very, very sensitive to movement. If a stock moves a lot, the sensitivity of the RSI weakens. So pretty big moves don't move it much. But since this thing's been basically consolidating for over a month until like a week ago, it finally started selling off with a little bit of steam. The RSI is pretty sensitive to it. So it's only at 34. I think it could definitely come down more. It's just following the market. Gap's going to get filled, I believe. Broke out of that wedge. Get rid of that for now. And yeah, I think it'll probably be able to make it down here. That 16 range. And maybe even lower. But thanks, Mosmus. Yeah, jump on a Discord, guys. If you're not, it is pinned in chat. It's free Discord. We're on there. We're not on the market. Thanks, Trader. Thanks, Jay from the Bay. And thank you, Big Hugs, for the dono today. Much appreciated. Thanks for your generosity. Ace, thank you for this gifted subs. Once again, gifted memberships, rather. If you guys aren't on Discord, jump on there and I'll give you the role. Just send me a DM. Yeah, no recap today. We'll see you tomorrow. Sub up, like up, comment down. Happy money sticks around.